Alrighty. Are we live? Wait for it. Wait for it. Help, where is it? Oh, there it is. Where is it? Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But, ladies and gentlemen, what a day on our hands. We got more Fed speakers. We're getting a little bit of calm after yesterday and the rate cut odds and all of that. But waking us up here today and coming into the night, it had to do with China. There was a big rally. They were saying they're about to brief President Xi Jinping today on the economy and what they got to do with the stock markets. A lot of the Asian stocks, they absolutely ripped. Our bonds stabilized. People are feeling good. You got a couple of earnings in the morning. No real negative surprises. People are feeling good. And then we have the earnings after the bell today. So, Chattadonia, I hope you're ready for all of it. I hope you are locked in. It should be a mix of both simple and not. Like we said on the watch list yesterday, you're probably going to get a little bit of focus on the macro. Then everybody gets into earnings mode. Then focus on the macro. Forget about what happened with rates. And then back into the earnings mode and then seeing what happens with the NASDAQ. So, Chattadonia, I hope you're ready for it. I hope you're locked in. I hope you're ready for Tuesday, baby. But good morning. How are ya? What's going on, baby? What up, Full Cycle? What up, Tyler, Cam, Laker, Jay? Good morning. Carissa Hines in the house. Marcus, Mr. Mitsuno, baby. Good morning. Riley Mack, Tim Whitman, Najee Wolf, Dan Kingsley, Christina, Tony, Alex, Gary, C Money. Good morning, baby. What's up, El Trapato? Good morning, Kevin Rogers. Good morning, Jamar. What up, Little Lebowski? What's up, Equity? What up, Jay Solis? Good morning. How you living, Barney? Lucky Soldier in the house, baby. Good morning. Good morning, Ryan, Justin, Nepal, Youngblood, Battleborn, baby. Good morning. Candy Upton ready to go. Cuscus, PR7, Anza, Rodney, Jake Cortina, winning loser, baby. Good morning. Oh, what up, V Nasty? What up, Agent of Chaos? Jimmy Ryan. Yeah, baby. Me, not you. Juice Trays, baby. Good morning. Oh, good morning, Drew. How you living, Jane? Good time. The Garbage Monster. Good morning, baby. What's going on? Xavier McCoy, Mr. Matthew Warman, Marcus Hanlon, ready to go. George Snyder, Josh A. Stafford, Nathan Evans, Jerry Woods. Good morning. That's Dub for Mayor. Good morning, Jose Lerma, baby. How you living? Oh, what's up, Lori? Happy Tuesday. Exaudius, Christian Asadis, Teja, Tim Gonzalez. Good morning. What about the Twitch? What about Sencal Hustle, Rocky Balboa, Mr. Belvedere, OG Choppa Gunners, Profesino, baby, Mr. Belvedere, Ryan A, OG, baby, Hailstone, Sim Racerville, Pickle Pickler, The Free Drop, Slizzin, Feed Me Seymour, Dennis, Angeles, Yunam, Blow and Dough, Profesino again, Ibex, Robo Handtech, and El Coyote. Oh, good morning. What about Captivator? There you go. Rip it, Snipe. I see you, Ibex. Good morning, baby. Chattadonia, welcome to Tuesday. I hope you're feeling good, man. I hope it's going to be a good one. It's going to be weird, honestly. We got a lot we got to do. I know Eli Lilly, man, it didn't move 2 standard deviations, but it did. So it didn't on the earnings, but if you bought it a day before, that totally hit 2 standard deviations, man. That one's Ozempic. Ozempic. Lose some weight. Hey, I'm Josh AI. If you need help getting referred to an Ozempic dealer, I got you. Yeah, I call them dealers. Thanks. All right, let's get to the news now. Let's see, what do we have here? Stocks and bonds pause as traders await more Fed speak. Global bond market steadied after the biggest two-day sell-off in months, while stocks looked for direction amid mixed earnings. 10-year treasuries posted small moves after the yield soared about 28 basis points in the previous two sessions. S&P futures slipped while European equities edged higher. BP almost jumped as much as 7% on the oil major, announced a plan to repurchase 3.5 billion shares in the first half. UBS retreated after its earnings disappointed analysts. A raft of Federal Reserve officials are due to speak this week, which may add additional insight to the central bank's thinking. Strong U.S. data has forced traders to reduce their bets on interest rate cuts, and Jerome Powell has reiterated his wait-and-see approach in an interview on Sunday. Wary sentiment from central bankers, cautious and stubborn inflation may hold back gains again on Wall Street, said Susanna Streeter, head of money markets at Hargreaves Lansden. Policymakers still want to keep a tight rein on demand, so high borrowing costs are likely to linger for longer. While market pricing was once made a first quarter point Fed cut in March look like a near certainty, those odds have now dwindled to around 10%. The Fed's Loretta Mester and Patrick Harker are due to speak on Tuesday, with Adriana Kugler and Thomas Barkin slated for the next day. Some of the biggest market moves were in Asia, where Chinese equities soared on speculation that authorities are planning more forceful efforts to end the rout. Regulators plan to brief President Xi Jinping on the markets as soon as Tuesday. While the bounce today is strong and certainly welcome, investors will probably want more concrete actions to be taken place by policymakers, said Eugene Lau, fixed income strategist at DBS. Sentiment on Chinese assets has been in the doldrums for some time. The Hang Seng Enterprise jumped as much as 5%, while a broader gauge of emerging market equities headed for their biggest advance this year. Meanwhile, Palantir surged as much as 20% in the U.S. pre-market trading after giving a higher-than-expected profit outlook on demand for AI products. Citigroup strategists warned that positioning in U.S. tech stocks is now so bullish that any sell-off could trigger a wider rout. Wagers on declines in tech-heavy NASDAQ have been completely erased, leaving investors overwhelmingly expecting further gains, which could amplify a turn in the market. Strategists led by Chris Montag wrote, UBS posted a net loss of $279 million for the first 3 months to December, slightly worse than analysts estimated. The bank said it will resume share buybacks this year, vowing to hand as much as $1 billion to shareholders in the second half. BP's fourth quarter profit exceeded estimates, and the London-based oil and gas giant will repurchase $1.75 billion of shares each quarter for the first half of the year, compared with $1.5 in the prior 3 months. Infineon Technologies lowered their revenue forecast as the German chipmaker is hit by a broader slump in semiconductor demand from industrial customers. Novartis agreed to buy Morphus Systems for 2.7 billion euros as the Swiss pharma company starts following through on plans to use bolt-on acquisitions to beef up their pipeline. Spirit Aerosystems, the top supplier of plane maker Boeing, withheld financial guidance for this year as they wait on clarity on the rate plans for the 737 model and negotiate changes with their contract with Airbus. Intesa Sanpaolo announced a new share buyback, and higher interest rates will continue to fuel earnings at Italy's largest bank. The new buyback will be equivalent to 55 basis points of their common equity Tier 1 ratio, Intesa said in a statement on Tuesday, without giving the exact amount. You got Bank of Canada today, Fed Loretta Mester and Mr. Harker, and then tomorrow German industrial production, Walt Disney earnings, Fed Kugler and Barkin, and then China CPI and PPI on Thursday. China boost. Global equities got a boost on Tuesday amid growing speculation that the Chinese government will be more forceful on its push to prop up financial markets. Regulators plan to brief President Xi Jinping on the market as soon as today, a step that suggests boosting sentiment has become a top priority for Beijing. Earlier, Central Huijin Investment, the unit that holds Chinese government stakes in big financial institutions, said it will continue to increase holdings of their exchange-traded funds. China's offshore benchmark, the CSI 300, climbed as much as 2.8, with the Hang Seng China Enterprises index of major Chinese companies in Hong Kong jumped as much as 5%. Losses stem. The China news lifted the mood in global equities and helped stem some of the losses seen on Monday. U.S. equity futures pointed slowly or slightly higher, while 10-year treasuries held out 4.14 after yields soared 14 basis points in the previous 3 sessions. The dollar retreated for the first day in 3. Earnings contrast in Europe. The FTSE 100 ended its longest streak since October, thanks in part to strong BP results that saw the oil giant boost its buyback plan. There was less good news for UBS, which retreated after posting a loss that was bigger than expected. Wall Street today's taking a look at how a momentous shift is underway in global markets, and investors are putting billions of dollars from China's sputtering economy and pumping that cash towards India. Srnavazan, Sivalan, and Shurjanvi Chakrabarti and Subhadib Sarkar report that Wall Street giants like Goldman and Morgan Stanley are endorsing the country as the prime investment destination for the next decade, triggering a broader rush into the nation's market. Not bad. Not bad. Let's see. S&P futures are up by 0.1 on Tuesday pre-market trading after U.S. equities finished lower on Monday with small caps lower, quality and other long-duration names underperforming. Treasuries mostly firmer after a big two-day backup in 10-year yields, the most since June 2022. Dollar index little change. Gold is up by 0.1. Bitcoin futures are up by 0.9 and WTI is up by 0.7. Rate stabilization is the focus this morning following the latest bout of Fed pivot repricing on the back of payrolls. Powell and ISM services, no meaningful spillover for risk assets from big China bounce, though not surprising given long-standing stimulus skepticism. Bullish talkish points revolve around combination of Fed pivot, resilient U.S. growth backdrop, stable 24 earnings expectations, buybacks, and dry powder. Bearish talking points revolve around higher for longer, Fed stretch positioning sentiment, and valuation metrics, big tech concentration, disinflation traction, risk to pricing power and earnings, and political and geopolitical uncertainty. Nothing on the U.S. economic calendar today. 3-year Treasury note auction today. More Fed speak with Metter, Kashkari, Collins, Harker, all scheduled to talk today. Kashkari received some attention with his comments yesterday about how a higher neutral rate gives the Fed more time to assess the data before starting to cut. China in the headlines as stocks bounced on the state fund's pledge to boost purchases and subsequent reports of regulators planning to meet with Xi Jinping and other leaders to discuss market conditions and policy initiatives. Also, some attention on Financial Times report about China progress on next-gen chip production despite U.S. curbs. Few other notable overseas developments. RBA left rates unchanged and maintained tightening bias. German factory orders surprised to the upside. Eli Lilly expect revenue tailwind from new production through full year 24. Vertex Q4 revenue, EPS better, guidance back street, and Vensafter update positive. BP beat and lifted buyback. NXPI beat, while light guidance seemed to be better than feared. Spotify monthly active users, premium subs ahead, and street positive on cost control traction. Palantir up big on AI demand commentary. SYM down big after guiding below. CCK missed and guided below on demand softness. FMC missed and guided below on continued destocking. Rambus guided below DDR4 inventory digestion. SSD said market remains challenged in first half of 24. VRNS up on faster model transition. JJSF missed, flagged reduced customer inventories. And then Chegg guided below and said too early to predict return to revenue and margin growth. My goodness. My goodness. There's actually not that much left. European stocks rose, bolstered by strong results from BP, while global bond markets steadied after the biggest two-day sell-off in months. Australia's central bank kept interest rates unchanged and signaled further tightening remains possible, joining global peers in pushing back against expectations for near-term easing and sending the currency and bond yields higher. Anticipation is mounting for more forceful Chinese government efforts to end the nation's stock rout, with regulators planning to brief Xi Jinping as soon as Tuesday. Reliable sources of liquidity at the top of traders' minds as they brace for another year of turbulence, according to J.P. Morgan in an electronic trading survey. That's it. Those are all the headlines. Again, not any data today at all either. You were just waiting for the Fed speakers and what happens with bonds, and now you have China. But we got a couple of pre-market movers. Oh, I'm a business, baby. Good morning, my friend. Oh, my goodness. What's up? Good morning. You guys need a horn. Wake up. Wake up. It's a beautiful Tuesday. It's Monday Junior? No, Monday June. Okay, I don't know. Monday, Tuesday, Wednesday. Anyways, as far as pre-market movers, Palantir, they're up 18.1 off of earnings. Spotify, they're up 7.2 off of earnings. BP, 5.2 earnings and share buyback. Eli Lilly up 5.0 earnings and synergy NASH trial of tirzepatide met primary endpoint. GEHC is up by 4.2 earnings. Toyota 3.7 earnings. CNC 3.3 earnings. CNC 3.3 earnings. Pinterest 2.6 up by nothing. They got Snap Sympathy today. Jacobs Industries up 2.2 off of earnings. DD up 2.1 earnings. Buyback dividend increase. MDB up 2.1 off of nothing. ITUB 2.0 off of earnings. Lin 1.9 earnings. NXPI 1.8 earnings. SMCI 1.7 nothing. UPS up 1.7. UBS downgrade. KKR up 1.6 off of earnings. Cisco up 1.5. VRTX up 1.4. Trial results and earnings. Win up 1.4. China Sympathy. NVIDIA 1.2 off of nothing. WDC up 1.2. Kioxa. Western Digital JV facilities approved to receive up to $1 billion study from Japanese government. Broadcom up 1.2, resumed overweight at JP Morgan, added to focus list. XYL up 0.8 off of earnings. Guild up 0.6 off of earnings. Coherus 13.4 off of earnings. VRNS 7.6 off of earnings. AGCO 7.5 earnings. ULCC 3.6 earnings. HLF 2.9 nothing. Goggle 2.6 nothing. ARVN up 2.4. Vepidestrant ARV 471 receives FDA fast track designation in metastatic breast cancer. They're up 2.4. COUR up 2.0 off of nothing. Frog 2.0 off of nothing. More up 1.9. Novartis confirms acquisition. Wolfspeed up 1.7 nothing. Rig 1.6 nothing. Chia CHEA up 21%. OTC equity prepared forward agreement with Metalora. CHR up 13.6, patent. GANX up 11.2, nothing. AUDC 7.0 off of earnings. AVXL 6.3, nothing. BMEA Truist initiates buy up 6.2. LFMD up 5.9 off of nothing. Chinese ADRs all higher on report of Xi to discuss market with regulators. They're all absolutely killing it. Trading lower, Symbiotic down 17.5 off of earnings. CCK down 13 off of earnings. IT down 7 off of earnings. UBS down 4.5 off of earnings. DocuSign down 4.2. Restructuring plan and guidance. FIS down 2.7. FI earnings sympathy. Checkpoint down 2.4. Earnings Fiserv. Sipping on some Fiserv down 1.8 off of earnings. RCL down 1.4 off of nothing. Tesla down 1.4. Daiwood downgrade. Car down 1.3 off of earnings. MCHP down 1.2. Lower salary for CEO and effective staff to reduce expenses. KRTX down 1.1. RTX down 1.1. Discloses receiving subpoena from SEC on November 7th and January 30th. CMI down 0.5 off of earnings. FN down 18.2 off of earnings. AKRO down 17.0. Eli Lilly result sympathy. MDGL down 15.0. Eli Lilly sympathy. FMC down 14 earnings. Rambus down 9.3 earnings. Hertz down 8.3 earnings. Chegg down 7.5 earnings. VKTX down 5.9 on Eli Lilly Nash results. LEA down 5.8 off of earnings. AMKR down 4.5 off of earnings. HESM down 4.4, 10 million share offering from holder. Plug down 3.3, UBS downgrade. Redburn Atlantic initiates neutral. LPG down 2.8 off of nothing. ETAC down 14.7 off of nothing. And ETNB down 12.7. Run Eli Lilly Synergy Nash results sympathy. That's a lot of plays. It's a lot of plays, a lot of earnings. And there's more after the bell. And then you got to deal with China. Well, what time is it, baby? We got time? I think we still got time. I think we got good time. I hope, actually. Is this a commercial? I don't know. So, Chattadonia, I got a couple of plays for you. I'm going to be watching Spotify. That's the post-earnings. It moved in line, and they ended up doing good. So, hopefully, we could get a follow-up on that. Then Alibaba, Baidu, any of the China plays. We'll see how long it lasts. Then Snapchat, Uber, Disney, some of the ones with earnings today are leading into it. Even Fortinet and Alibaba. And then ARVN, that was one reacting here to a biotech data approval. So, we will see. Otherwise, let's see the momentum. I think China... that's going to take over a lot, and then we go from there. Is this a commercial?
Million car every year.
I think it's a commercial, yeah. I was going to say, I need to go to the bathroom. So follow me on Instagram, at the Trading Fraternity. I don't know. Is there time? I don't think there's time. Maybe we'll just get into the plays then. You tell me the plays. Tell me what you got. And then after the bathroom, we'll just answer some questions. Chattadonia, you're here right now. You haven't heard from the TV. But now it's time to hear from you. What do you got, baby? Post your first play of the day. YouTube bugging. Oh, I ain't got play. Oxy 60. DraftKings calls, Toyota AI Water calls, Palantir, NVIDIA short, Hang Seng, Eli Lilly, JD calls, holding Palantir, SPY calls, long ES on the pullback, Enphase, sell Palantir, TNX, Snowflakes, TM230, Palantir, coin long, HCZ put, NVIDIA, Rumble, covered calls, Qualcomm, Yum China, SPY, Snap calls, SPY put, short Palantir, SPY calls, sell Palantir calls, Meta, sell everything, Baba calls, no plays, NVIDIA, DWalk long, 495, DraftKings call, TSMC, riding with NVIDIA, puts on PETA, WM and VTI, QQQ, Mara, anything in China, shorting down futures on any pumps, SMCI puts, Baba calls, NVIDIA investing with dividends, AMD, QQQ, PHILO calls, SPY calls, CLX, calls on the like button, holding Eli Lilly calls, Mara, sitting on hands, Oxy, Palantir, SQM, ALB, ALTM, short McDonald's, Baba Lawn, Bada, Meta calls, NVIDIA calls at open, TM calls, CLX, forward puts, KRE watching, Meta calls, and the final plays. God calls, Meta calls, short put calls, ARM calls, calls on the long term, Hulk, and selling NVIDIA calls. Let's go, baby. Good morning. Good morning, my friends. Are you kidding me? So we have the play. Now we got a lot of time. So be right back. I'm going to go to the bathroom. You guys could listen in for a second. I think there is going to be a lot of plays here, but again, the momentum drivers are kind of the wind in China for now. Otherwise, it's earnings. But I will be right back. Follow me on Instagram at the Trading Fraternity. See you in a little bit.
Israel and other American allies, and they seem to get what they wanted with this deal, yet they came out very quickly against it. And that just kind of shows how the politics have shifted with Trump nearing the nomination to become the Republican nominee, that now they're rejecting exactly what they had asked for. And it leaves this huge question about what's going to happen with aid to Ukraine. It's hard to see what the path is at this moment to see how that can get through both chambers of Congress.
Yeah, and that chasm opening up between the United States financial support for Ukraine and the Europeans. We did take their time to get there, but they got there. This differential will not be lost on Putin. Jonathan, thank you very much. Jonathan Tamari there. Let's pivot to UBS. Share buybacks. They're everywhere in Europe. And today, it is UBS vowing to hand back as much as $1 billion to shareholders in the second half. This as it seeks to move beyond the integration of Credit Suisse. CEO Sergio Motti spoke to Bloomberg's Francine Lacroix a little bit earlier.
One thing that we need to do is to be willing in the next couple of years to sacrifice a little bit of top-line growth in order to improve the returns on our financial resources, particularly on the balance sheet.
Let's get a little bit more with Steve Ahrens, who's covering the UBS story. I mean, this is Armati talking about a prudent approach to share buybacks. I'm quite surprised the share buybacks are back as early as they are. That should have been a shot in the arm. What has been the detraction today in the UBS story?
Well, yeah, I think you're right. The buybacks, unveiling them now, that's actually positive news for investors. UBS is back buying its own shares, or will be back in the next half of the year. But there was a quarterly earnings miss. Net income was below estimates. So I guess people were just expecting a little more. This poses questions about the future. The wealth management unit didn't perform as expected, which is the engine of Amorti's plan. And if that shows weakness, investors ask, okay, what does it mean for the future?
Yeah, well, certainly it's going to be interesting to see, did they pick up any flow from Julius Baer with the ructions that they've had down the street on Bahnhofstrasse, and maybe the market is unimpressed with these targets that they've set. Perhaps the benchmark just isn't as high.
Maybe they're upset. Maybe they haven't filled it out. Chatadonia, I hope you're feeling good. I hope you're locked in, baby. So what's going on? You've got to hear, again, bonds right now, they're coming back to break even, but the general stability, there's not that much news. And again, you got like what? It says 2 Fed speakers, but I think we're going to be getting 4 today that are going to be there. Yeah, I don't know. You guys tripping out? I see a lot of comments in the chat. Y'all saying it's not working. We do have the Twitch. If it does keep pausing, that's weird though. I'm not seeing any issues on my end. So again, Twitch TV, if you have, if you need the backup there. Where is it? If stream is laggy. But any questions on the day? We must get ready to begin, my friend. We must get ready to begin. Where is it? There you go. There you go. How do you feel? I feel great. I'm excited to see what China does. I am kind of worried that China is going to kind of do one of those sell-offs, but at the same time, this is the highest some of the China stocks have been in a year. So, like, a lot of these names haven't had a move like this. Some of them, obviously, were trading higher not too long ago, but intraday to hold on, every single China name is up. I think that's going to drive a lot, but then, too, a lot of these earnings are getting ready. The earnings vibe here in the morning isn't that bad. I think we're going to be pretty decent, and then, again, we'll just see if markets stabilize alongside bonds, or even if the bonds don't, does the market go up? But definitely, I do think today is foreign, and then depending on what the Fed speakers say, we'll go from there. We will find out. But 1 minute for any more questions, Chatadonia. What the 10-year does. There is a 3-year auction. There is a 10-year auction tomorrow. So you kind of already had the sell-off. Again, the last 2 days of bonds selling off have been the biggest since 2022. Yeah, they banned short sale. They did a lot of things that even failed in China. And now today, like, one of the big state-owned companies is like buying back ETFs. And then they said that they're having a meeting with Xi Jinping on the whole stock market. So that's what got everybody excited and up. Like yesterday, the Chinese stock market crashed and then bounced right back up. It was actually it's kind of wild what's going on in China. Again, the last couple days have been pretty bad. So in a weird way, it's like it's bad, but then now you're getting that good reaction because it's kind of bad enough where people are paying a lot more attention. So we will see. But Chatadonia, there's something I hope all of you pay attention to. It's what we pay attention to every single day before we do anything, before we try to chase a dollar and enrich ourselves. And I am talking about our love and appreciation for the veterans of the United States of America. On behalf of the cult, the people here, the people not here, want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country, even their families, for real. Thank you for making the ultimate sacrifice. Thank you for doing what you have done. I hope you know you are all appreciated, and I encourage all of you to always live this on and show that love and appreciation for those who made that sacrifice. So veterans, thank you, thank you, thank you. Big shout out to the vets, and big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the garbage men, the coaches. You're helping your community run. You're making things go, baby. God bless you and thank you. That's what I'm talking about. But, ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Send to the Jets! Oh, it's game time, baby. Horna, let's go. Oh, Chatadonia. Happy Tuesday. Oh, where's the wire? Where's the wire? We need the wire to the wire. That's game time, baby. Oh, it's Tuesday. Again, you got China going crazy. You still got big earnings. We got earnings previews to go over. Market still holding up. Bond market in turmoil. Everybody worried about the rate cuts. Are we dealing with March? Are we dealing with May? What about the data? What about the Fed speakers? Oh, my, it's on a Tuesday. So, Chad, we got a minute and a half. Like the video. Call out any plays. You have any questions, you let me know, and we'll do what we need to do. We'll do what we need to do, my friend. You let me know if you need anything. Again, I think it'll be pretty simple. Eli Lilly, that was another post-earnings symbiotic to the downside. There was a couple of other ones. And then, again, China stocks, we're just going to see how long those end up lasting. Yeah, like the video. The faster we get to 1,000, man, if we get 1,000 plays, I don't hide anything behind the stream. Otherwise, 1,000, oh, man, we might need to hit that like button. I don't know if I have any plays in the morning. Actually, did I already go over my plays? I'm going to be looking at a couple. I do want the Spotify. We'll take a look at Snap there, too. And then, again, we already went with Fortinet. And then ARVN is a bio. And then we'll see what Baba and Baidu end up doing. So, Chad, we got 45 seconds. like that video. Make sure subscribe. Make any call outs. You need anything from me. And then that's it. We'll do what we need to do. We'll do what we need to do, baby. You're here for the tin. I feel like I haven't had tin in a while. I don't know, man. I think this whole year, I think the tin is nothing has happened in the beginning of the year. The tin is all is well in 2024. I guess the weather, the raining, everybody's tripping out on LA and how it's raining. Otherwise, I don't got no tin for you, man. I'm sorry. The Dragon Year starts on Friday. I thought it was, oh yeah, Chinese New Year. I was like, wait, I thought it already started, but no, that makes sense. That makes sense. 3, 2, 1. Round 1. Fight. Oh, wow, Meta's already taken off. All right, there's Baba and the China plays. No, those McDonald's moving all over. The Cisco, is that a Cisco call? What did those UPSs do? Again, UPS actually went up as well. They got an upgrade. None of those plays are loading. Again, Meta's up by 1.5 to start off. I know ARM kept moving. Again, we'll see if any of the chip makers from yesterday. Palantir, too. Again, 21%. They had a good earnings. I wonder what those options were like. And then where's Spotify? Spotify's up 8. Not bad. So, again, I'm sure those moved what was priced in. Some of the Palantirs are the same price as the day before. You just got to go, like, really far out the money. I don't know. Those Palantirs, they're kind of juiced. SMCI's moving. Spotify option chain, I don't think that's opened up. I see asks, but I don't see any plays going through. Is Spotify options open? I don't see anything. Square on the high. I saw PayPal moving in the morning. Again, I think Disney was up. Bonds are barely up. We'll see how long that lasts. Eli Lilly busting. Let me know when Spotify opens up. I don't think that changed there. Eli, again, that's already done 2 standard deviations. Not today, but if you take yesterday's move plus today, they're killing it. And there's a lot of biotech sympathies. Again, ARVN, I don't think that's related, but there was 2 other ones. ARVN just got some positive data there. Spotify not open. Baba came down a little. Baba already dropping. NVIDIA red, Uber red, Chegg big green. Wasn't Chegg down like 8? Oh, shit, Chegg just went green. SMCI on the high. Palantir kind of selling off. Spotify, why you no load, Habibi? And then where is the UPS? They get the upgrade. They don't move. So the calls from UPS, they went up yesterday. A little bit. SMCI, Uber red. Again, Spotify's still not open yet. Kaba, Palantir, Disney's on the high. Disney's up by 0.5, $97. NVO's going up too. So again, they're reacting a little bit more positive alongside of Eli Lilly. But again, Eli Lilly's moved insane. X is on the high. Matt, where's Toyota? They're at 4.6. I don't know if those plays will hit. Snapchat moving. Again, they have earnings as well. Bro, Spotify option chain is not even open yet. Yeah, those UPSs from yesterday did rocket up. So the UPSs went up over 100%. The asks are crazy. And then even the Cisco call woke up, but then that means the put probably got clapped. Metas are trying to make a move. There it is. What's it called? It's opened up now. Oh, they scammed me. Are you kidding me? Oh, I had to play. They just scammed the shit out of me on it, though. Damn. Spotify, yeah, I was looking at the spot. I got scammed, though. I had the plays, and then I just took too long. Let's see. I might have to wait for that one. Yeah, I had a Spotify play. Didn't go through. And then it already ran up. Bro, those UPSs are running, though. Just a little bit for now. Abbott's on the high. So, again, Spotify, may have missed the boat on some of those. Again, literally those plays just went up 100% right in front of me. Baba is still up 1.9. They came down a little bit. Again, Snap was moving as well too. Or did it fill me on those? No, they didn't. Scammers. Again, Spotify's up 10. So all the 2 standard deviation plays are down. And then Cisco did wake up. Again, Meta's trying to run up. GE, all the China plays. So even like Neo, anything you could think of with a Chinese ticker is all going up. Some more than others, though. Again, Baba was holding up really good, but they're already giving up here. City's on the high. Spotify is still going. Where's Eli Lilly? They sold off from the morning. NVO as well, too. Fun. Palantir got rugged. That's still up a lot. I mean, again, they were up 20, but 18 isn't bad. KPTI, is that Bob already on the low? AMD's down 1.5. And then NVIDIA's down by 0.9. Was it SMCI in the green? They're still in the green. Cigna's moving up as well, too. NVIDIA. Yeah, Spotify's kind of crazy. Jake from State Farm in the game, baby. Good morning, my friend. How you living? VRTX down by 0.91. Again, they had good earnings, actually. And then Spotify, those contracts moving all over the place still. Very widespread. Yeah, spread. Those UPSs hit. Those are $20 to $1. So there again, those could be in the money. We only have till this week, though. But they're $1 out of the bid is huge. The bid's 70 cents to $1.20. Stream alerts now. They should be going through. Shoot an email. NYCB tanking. Adobe dump. NYCB is down another 2.5. And then Adobe is down 2 as well. So interesting movers here. Let's get up of a WAP. And then bonds are coming down, still barely in the green. Snapchat on the high. Vertex, a lot of the other post earnings. Some are holding, some keep selling off. Snap above 17. Again, they're after the bell today. Toyota, our plays did go up 15 cents to 45. So those are holding there. I mean, that's like what, 200% still? I don't know. Does it make up for the other play? I think we only spent $50. So you could sell out of the Toyota call for break even now. It'll pay for both. And again, that UPS went up, but the spread is insane on that one. Yeah, Snap is up. Toyota, let's go, Habibi. You did very good, Habibi. Spotify coming down a little bit. Baba. PayPal on the high as well, too. And then again, wasn't Disney running up? Disney's still holding. So again, there is names that report today. Fortinet, we went both ways on that. I don't know how those contracts are looking. Fortinet, the calls are up a lot, actually. And then the puts are the same price. So Fortinet, you got a gain on the calls. 10 cents, which isn't, that's like 30% almost. Go PayPal. Oh, the Utos. You everywhere, baby. Jake from State Farm. Good morning, baby. God bless you. I hope you living good, man. Sending love to all the Chads. And Cole Real Estate loves you, baby. Amen. Yeah, if your YouTube's lagging, go to the Twitch. Some people have been saying a lot in the chat. I've seen a lot of those comments there. And the video went down, trying to go up. Bank of America on the high. Bonds trying to move up here now. Spotify just came back down. So very, very wicked spread on those. $700 on the UPS, man. Good work. You went big on there. You said screw small exposure, baby. But that one plays good. Again, that was on what, 500, 400%? 25 cents to $1 in one day. I'm down with that. Marcus Hanlon, baby. Good morning. My guy, how you living, baby? How you living? All right. And then the Cisco. I want those Toyotas to run up. Again, Fortinet's moving good. Spotify, I don't know. I'm kind of over the Spotify's. They came back down, but that play is kind of ridiculous. Eli Lilly giving up earnings. ADM on the high. Yeah, Eli Lilly only won 9. NVO did the same thing. They were trying to gas up off of all of it. And then UPS were 45 cents from going in the money now, or 80 cents. No news on Rumble. People were going crazy on it the other day, though. And then bonds are getting more stability. Banks are still going up, ironically. NYCB did find a way to go up. I thought that was going to be down. ELF is on the high. Remember, they have earnings today. ELF is expensive. ELF on a shelf. Okay. I made a play. Yeah, Toyota calls are up 190. They'll pay for your whole entire play if you want them to. And again, the UPSs are killing it. That's $25 to $1. So I made a play. I hope you guys are locked in. We're not locked in. We need 1,000 likes. Only a couple more people. Only a couple more people will be there. Lanterns up. Did it start coming back up? And then bonds are coming. Spotify's holding. Where is it? Tesla bottom. Palantir is coming up now. They said, hello, how are you? And then UPS, we're about to be in the money on those. So that one is great. Yeah, bro, those UPS killed it, honestly. I think the UPS will end up paying for our play. How much did we spend on UPS the first time? We spent like 30, 60 bucks. 50 bucks. So you could even walk it over. That'll pay for your last UPS play if you want to get out now. Well, that one's holding. The Fed speakers, they're going to be spread out. I think some in a little bit, but there's 2 that aren't like on the schedule. UPS dudes, they just got to upgrade. So literally, and then we just bought the low of those contracts, but they got a big upgrade today. And then they started going crazy. Yeah, the Toyotas are coming up here a little. Damn, the Toyota's now 15 cents to 75. So the Toyotas actually hit. Habibi. Let's see what those will get us. Palantir. Babas, is it still holding up? Yeah, dude, that Toyota's doing very good. 15 cents to 80 cents. I think 80 cents on the bid. 75 cents on the bid right now. So that one's not bad at all. Bonds are coming up. UPS about to go in the money. Where was the other one? Spotify, 10x on the low. Tesla's going up too. They even got downgrades. Nvidia's near the low. Again, UPS about to go in the money. That one, you can ghetto spread the UPS if you wanted. And Toyota, keep it going. Yeah, TLT's doing great. Honestly, TLT was just looking calm in the morning, and then now it's still up there. Like now it's actually trying to get some movement. ZB will take it for now. And then Toyota keeps climbing. You're now in the money now on those UPSs. That one's great. So where does it go to now? UPS, maybe we get 145, 147 if we're lucky. And then there's Toyota. AMD on the low. Don't forget about Archer Daniels too, ADM. That's another one. Amazon in the green. I'm looking at those Toyotas too. Those keep running. Let's see. NVIDIA, Deer. And then we made a play. I made a move on Elf. Y'all didn't like the video, though. And then, what's the other one? TSM. And then UPS still holding on. Okay. Or TM. TM's still going. Baba's still, I don't know. Baba's up more. Bonds are looking like the best for now. Let's see how long this lasts for. UPS, baby. Oh, yeah, where is the dollar? Dollar's barely down, but you know how the dollar can be. All right. I got out of the UPS. I sold out for 175. So literally, we bought that for 25 cents yesterday. Very good. Almost 1,000%er. Honestly, that's the crazy part, but I didn't want to wait 50 more bucks. Why'd you play UPS? Because it was at a breaking point. We were just talking about where it was. Someone didn't watch the watch list, Samuel. Why didn't you watch the watch list, Samuel? You don't like the watch list, Samuel? You're too cool for you wake up early, but you don't like the watch list? That's what it is, man. But yeah, I'm out of there. We sold out at 175, bought it for a quarter. So we'll take that. Again, even the Fortinet's holding up. And then Toyota's still up there, too. So we'll see with Toyota. Escondido. You guys know that's the jingle. Toyota Escondido. I don't know if you guys know. All right, we'll see. Toyota's doing great, though. Again, we're only 10. That's definitely 2 standard deviations are right there. Remember, I went a little bit further out. If we grabbed those other Toyotas, those would have hit. Remember the ones for 60 cents? Those are going for $3 now. I just wanted to be cheap, though. Well, those are almost 1,000% if those hold. No Uber play. But yeah, we're out of UPS. Got $1 in the money, though. Cannot complain on that one. We'll see where the next round goes. Ups for Spotify. I'm glad I didn't end up getting that one. The contract's still lower, though, or higher than what I would have got it for. The UPS are going for 2. Take it. That's going to be 1,000%. So I got out a little bit earlier than 1,000, but I mean, that was literally perfect timing to grab that yesterday. Those were low. Why is Josh upset? I'm upset? Oh, wow, we just closed. We got like a couple of great plays right now. Why would I be upset? I'm still in those secondary metas. Those did end up coming down, but yeah, I still have those. I think we get like another week of time on that. Stream still buffering. A lot of people have been saying that today. PayPal's on the high. Baba's near the low. Spy a little Chicle. PayPal's up 2%. They're running up. Where's Snapchat? Snapchat was above 17. We'll see how long that lasts for. Tesla just went crazy. Honestly, it's kind of nuts. Illumina on the high. They're up 1.2. Where's VXRT? Or Vertex? They barely moved. Abivai's on the high, 172. Again, didn't it hit 173 the other day? So again, anything above there gets crazy. NQ dumping. NASDAQ is about to go red. Russell is the leader today. SPY's up by 0.13, but like NASDAQ's right at the cusp. Tesla. I don't have the full schedule. So again, there's like 2 Fed speakers that don't like show up here, but I have Fed Mester at 12, Fed Kashkari at 1, and then Fed Collins at 2. And I think we're missing one more. And that's all Eastern time. Tesla, again, Toyota came down a couple of candles. UPS still running. Again, Spotify, not so much of a post-earnings. Who was the other one? Eli Lilly, and then SYM on the low. SYM's hitting another low. Square's up 4. So, again, even PayPal's running up now, 2.3. But, yeah, both of those names. And Disney, man. Disney at 97.41. So, again, Disney topped out like right below 98. Bonds are coming up there, too. So, 30 years finally getting one. Email tradingfraternity@gmail.com or go through where you signed up. And there's like a help thing, and that makes sure it gets in there faster. But you could use the email. Thoughts on PayPal? I like PayPal. I like it for the long term. I think it's going to be in one of those crazy earnings. It's probably going to be pricing in a lot as well, too. But they need to really come in with a surpriser in terms of saving money and allowing that to unlock growth for them. Palantir almost 27. That was the other one. Yeah, again, remember, it went down for a little bit. You could have actually hit those. Baidu's going up now. Or the China plays. Again, Disney, 97.50. Baidu is waking up. Even Baba now, too. That's not bad. They all were kind of turning down, just holding up their early gains. XPO is on the high. Palantir is going near the high as well, too. Even Tesla. Tesla's up 2.1. NVIDIA, AMD, they're all down. Ups is still holding up. Who else do we got? TMO. Those Disney calls are still up 100. I forgot about those. Yeah, bonds. The Zaza, the December odds pulled back a little from yesterday. Tesla seems to move with banks. It is kind of interest rate sensitive. That could make some sense. Palantir, another high right now. Neo's going up. Again, that's another China name. We were talking about that. Even Baba, 76.58. Choice Hotels to offer access to Tesla EV charging stations. That's coming out right now. Where is it? Alibaba. He wants to move, Habibi. Palantir. Yeah, Palantir's actually killing it, man. I wonder, you could have probably grabbed those Palantir. I was looking at them in the morning. They just looked kind of juiced. They still didn't move too crazy. There's ones in the morning, 8 cents to 30. You have to go to the ones at the money. But the ones out of the money, 2 standard deviations, those are still weird. NYCB kind of flushing. I feel like Baba earnings should be good. I mean, again, I think they have been decent, but the whole just broader China stuff weighed down on them. But right now, I think China stocks are going to move more on policy stabilization rather than their earnings. They don't really move kind of like we do, but we'll find out. That's tomorrow morning, right? Wednesday morning, Redfin on the high. Redfin's still in the gulag. The Snap holding. Palantir keeps going up there. DraftKings on the low. They were going high the other day. Starbucks and Wynn. Wynn is getting some of the China sympathy. PayPal above the 200-day. We're at 63. They look good. Again, that earnings, they're Wednesday, right? Or no? Holding Cisco. Yeah, we have gains on both the call and the put. So, like, you could get out of Cisco right now if you really wanted to just walk away and take the premium. Because now we have, like, 30% on the call, and then you still have 200, 300% on the put. Yeah, you have Snap, you got Uber, Baba in the morning. PayPal is after close tomorrow. NYCB touching lows. And then market kind of slipping a little bit. China names are still taking off. There's Baidu playing along now. Again, see if those hold up. Even Baba, too. Baba's getting back up to the open. Baba, very expense. Baba, very, very expense. NYCB down 3.4, 520. And then Toyota came down a little bit. Those chilled out. The UPS still kind of holding. Walgreens on the high for some reason. Altria's on the low. Microsoft and Meta flushing a little bit here. I've seen Meta on the low ticker twice in the last, 5 minutes. Eli conference call starting soon. That might move things. They're holding. Again, that move they had in the morning, though, especially after yesterday's move, they were up there. They definitely had some juice, to say the least. Those old PayPal calls came back up. Upstart gas in. Elf came down. Microsoft again on the low. We'll see if Baba and Baidu keep going up. Just watch those China names. Even Neo. That's like the hype version of all of them. SoFi coming up. Palantir still holding and going towards another high, up 27%. Spotify still at open. Starbucks breaking out too. They're up 1.2. Disney still near the high as well. And then PayPal, they're all holding. SPY a little bit lower from the opening candle, but we're holding on decent. Damn, you're at 49.47. You're holding on great. So you'll fill the gap at 49.42, but I mean, you are up from the gulag. Checkpoint on the high, too. Yeah, small caps up 0.58. NASDAQ's right at the cusp of break even, and then bonds are up by 0.45 today. So they're somewhat recovering. Palantir's killing it. Again, they had good earnings. They talked a little bit about AI, or a lot about it, and they've been going up. Again, I think this is 2 standard deviations now, 30%. They were pricing in like 20. NYCB, they're getting destroyed right now. So KRE's flipping negative now. Again, bonds already have a bid, so maybe we'll see more of that fear effect, but NYCB is flushing. Spotify. Canada PMI is 56.5 versus 55. SEC rule would require prop traders to register with SEC as a dealer if they primarily earn revenue from capturing bid-to-ask spread on securities from market-making incentives. Set to finalize new definition of dealer in latest bid to boost resilience of $26 trillion market. SYM, they were down 20. They're down 22 now. They are getting the flush. Remember, that one was pricing in 30%. Meta drilling. Yeah, they got off to a good start in the morning off for nothing. But yeah, now they're back down 0.4. Back to 450 again. They were just up $30 higher. That's the crazy part to think about. And then NVIDIA's down 1.5. Palantir, another high. My goodness. And then big banks are also starting to drop. They just went negative as well, alongside KRE, which went negative. SPY approaching the low of the day. I think you have now filled the gap on the morning. So, again, we just had a nice little bit of easing today. Not anything crazy. You kind of melted up. But now you have filled the gap, and you're getting to the first level we dropped from yesterday. Where is it? Remember, 492.15 on the SPY. That's literally the non-farms level from a couple of days ago. And then, again, Fed futures are pricing in a little bit more dovish than they were yesterday. Chase will enter several new markets, including low to moderate income and rural communities with little access to traditional banking. Yeah, Snap's just holding 17. They have earnings after the bell. Starbucks is on the high again. I keep seeing that one start to run. Trump denied immunity in D.C. election case by appeals court. Did you miss anything? Just the UP. We got out of the UPS play from yesterday. The Toyotas hit, and then big China pump on a potential meeting with Xi Jinping, or the regulators are going to meet with Xi Jinping in China to help support the stock market. Baba, Baidu, Airbnb, Netflix on the low. A lot of names on the low. Even Boyle's going down there. ELV, they're on the high. ELF on the low. Boeing's on the high. There's a couple names moving back and forth, but low ticker is taking over most of it. Again, NASDAQ just went red by a quarter. Russell is the best on the day alongside the Dow, but then SPY just went red too. Snap announced job cuts yesterday, then they sold off. And then now, day before earnings, they're holding up. I don't know. Toyota might go up. If the market goes down, Toyota goes up. I'm down with it. There's a fat spread on that play, but either way, it's still holding. Disney, they were going good, but if Disney does the little sell-off, those outsized gains, same thing with PayPal. They may not hold. SPY wicking into the bottom a little bit. A line still marching. It is 3.4. I feel like they want some of that post-earnings. Oh, a line's still very expensive, baby. Yeah, line. Watch those if those come down, because those have already moved like 200-300% on the contracts. That one's very interesting. Boeing keeps going up, and Starbucks, they're up 1.5. It's kind of a slow mover, but that thing has steadily been climbing. Yellen talking right now? No. Yeah, line's very interesting. Those contracts, some of them were at 20 cents. They're going for $1 right now. I think he kind of missed on it. Starbucks ex dividend on Thursday. Maybe that's why it's running. They're doing good. Remember, they had those moves from last week fall. We have one play on Starbucks, still down though. That one has a small bid on it. PHILO on the high. SPR is going up again. They pulled full year guidance. Baidu just chilling there. Palantir still the leader, but it is coming off the high. Disney sold off. PayPal sold off. Even Toyota chilling out. And then UPS literally right under where we sold it. And NYCB all the while still dying. Yeah, down 7.7. So see if the bonds keep getting a bid. That's the only thing we saw from last week when things were getting out of hand. But Citi's on the low. Banks were green and they're flipped. But NYCB is now below a 5 handle. Bleeding in regionals, I couldn't tell you. And then today we weren't really bleeding. We were just calm. Today, like pre-market, everything was just very stable. You know, this whole general idea of just stabilizing from the last couple of days and all the data. And then China, we didn't have any problems. So we kind of just held up. But now we're getting some things moving. But that bank stuff, I'd watch out if NYCB starts getting more of an issue there once again. Boeing and SPR running. Kenya Central Bank raises benchmark rate to 13 from 12.5. C-SPAN Secretary Yellen. Oh, do you want Secretary C-SPAN? C-SPAN like OG, man. Yeah, there is Janet Yellen. Seems very quiet for now. Well, I'm gonna go to the bathroom. Follow me on Instagram at the Trade of Eternity. Bonds getting a candle. Tesla going up. I will see you in a little bit. And good morning, my friends.
Further delay the start of that trial that the former president will ultimately have to face here in Washington.
Well, Kelly, like you said, he, of course, has 6 days to appeal this decision. And, of course, we're not just talking about the former president. He is the front runner for the Republican nomination. How does the legal timeline match up, of course, with the campaign timeline?
Well, with the initial trial date that was slated to start on March 4th, which will not be happening anymore, that's the day before Super Tuesday, which is a very important primary day in the Republican primary race. So this potentially gets pushed out later on into later in the election cycle, when we could actually be talking about him not just as the presumptive Republican nominee, but potentially the actual Republican nominee, where he'll have to balance being on the campaign trail with days in court. Also keeping in mind that he has to balance financing here. It was revealed in the filings at the end of January that are in the year 2023, Trump's campaign and super PAC supporting him spent $50 million on his legal fees. We know he has been raising money off of each and every indictment that he has faced, people making contributions to support his legal defense. But this is taking a lot of outflow, money that therefore won't be spent on campaign, on things like advertisements, usually where you would see campaign dollars going. It's not just a matter of managing the timeline here, but also managing the financing around it, as this case in Washington is just one of 4 felony cases he is facing, keeping aside all of the other civil issues he is facing as well.
All right, Kaylee, really appreciate the context there. That, of course, is Bloomberg's Kaylee Lines on the breaking news that Donald Trump can be prosecuted for trying to overturn the 2020 U.S. election, a federal appeals court ruling today. But let's turn back to these markets right now, because we're joined now by Mark Connors. He is the 3IQ head of research, has been waiting patiently beside me. I'm not going to ask you about Donald Trump.
Patiently, you try to sneak the peach in.
About big tech layoffs. It seems to be one of the big storylines.
It's here. I knew that bathroom break was destined.
You
know that I felt like the peach was there. I had to run back.
Let me step
and I
back.
saw. I
First of
said,
all,
"Oh my
no problem
goodness!"
on waiting. A lot of breaking news this morning, and we're going to use two of them to talk about how to frame the question.
Right
the Ozempic trade, now Eli Lilly, and then compare that to Atlantic Brewing.
Morning.
It's about alcohol and drugs, and tech knows how to get to your brain, but they're doing it with data. So if you look at a lot of the movers that's been going on recently, it's about how to get client acquisition. So tech had done it.
Mr. Worldwide.
They went fast with people first, tech second, and now they're in round two. So they're normalizing their workforce, reducing it, and optimizing. So those are a lot of big words, but what it means
All right, let's turn this guy off.
Is that
Thank you, my friend. Palantir was a W. You could have double dipped on the contracts. The out of the monies, though, I don't think they hit as hard. But you could have gotten the in the monies this morning. Those 21s, they went down to like 20 cents. They were still gapped up, though, a little bit. Well, that one is killing it. As far as earnings, SPY going lower. A couple of names still holding up, though, ironically enough. And then China plays are still holding on. So you got that SPY a little bit lower. Again, any of the other names that were holding on, they seem to be doing pretty well. So not too bad. Who's the other one? Cisco. Oh, they were up and then came back down. Save, I still got those shares on that covered call. I don't know. I haven't heard much about Save. It's kind of just been holding, doing its thing. I think, are they getting the appeal? And then NYCB, bro, that thing's still dying from literally before till now. Levels on the TLT are just going to be, again, below like 410, 405 on the 10-year. And then you could kind of extrapolate it. But at this point, I'd watch within this range. You got to get back above 95.22 and then 96 back to the gap down for TLT specifically. Again, on the high. NYCB is down 10 now. Palantir getting another candle. Again, Baidu and Baba, they are going up right now. The Fed futures are going the other way, ironically enough. So, again, Fed futures are actually a little bit more dovish today than they were yesterday. I don't know if an NYCB or it's going to just do that dance. Remember 2 days ago, CNBC is like, no, we like it. Then it pumps up 30, and then it's going to just do its little thing. Beyond little volume pop. We haven't had a Beyond move in a while. Up 2.3. Disney came down. Snap still holding. FXI going. Alibaba, again, almost right back to 77. It hasn't hit 77 this whole time this year, I think. Or was barely. No, that was end of the year. Again, big couple of days here for China if this actually holds. Tesla, I think they had bad news today, but they went up on it. They were finally guttered for so long, up 1.8. And then bonds still holding, SPY, NASDAQ down. Russell's actually doing pretty good. Your Alaska Chad. What up, Alaska? We got a lot of Alaskan Chads, man. Love to see it. Love to see it. NYCB, I mean, I think if the stock keeps going down, I don't think they have like a failure problem yet. But if that stock threatens their equity, if the stock price goes down and one thing leads to another, then they're going to have a problem. Again, it's kind of it's a self-fulfilling prophecy. Remember, SVB, any of the other companies, it was one thing about the problems that they had going, but it was another thing once their stock prices started selling off. I've seen, Devlin's, he's been in the Twitch, man. He's been going through some stuff, but back and forth, but he in the game, baby. Praying for the homie, but he out there. His schedule changed up a little bit, but he out there. He's on the Twitch. YouTube is lagging very hard today. I've had a lot of reports on that. Yeah, but NYCB, it's whether or not it continues or not in terms of the stock price creating a problem. But as of now, I do think it's very interesting. And then, just if it keeps selling off, watch if that gives the outsized reaction to the bond market. Thought it was more. That's why we have the Twitch pinned up there. You could check out the Twitch if you really get lag. But some people are even saying on Twitch it was lagging. Maybe it's because of the, what's it called? Maybe the California weather. We have weather events in California. Some of you did. I'm not in NYCB, no. And then bonds are going up, though. So if they climb with banks selling off, I mean, I would take those two as linked from what we saw a couple weeks ago. Am I able to look at your options to see how much you effed up? Well, yeah, what did you do? Tesla, Daiwa Capital, cut to neutral. That was in the morning. So, again, their bonds keep climbing. NYCB selling off. So, top right, bottom left. Watch those two in tandem. Yeah, KRE is going lower now. Where is Apple? Uber's starting to climb up here now. Baidu's at the high. Again, Uber wants to make that $70 push again. They're in the green. Cigna, Uber. Yeah, literally NYCB bounce. Bonds calm down a little bit. I'd watch those two. Abiva calming down. Let's see. Spotify. Toyota. Dun, 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 dun. Escondido. So this Toyota's still holding up, though, man. 15 cents to 85 on the bid now. Bryce Ramali. My Houston personal trainer, baby. Welcome. You got any good workouts for me, man? You got any good shoulder workouts? You know, some mobility. New York Community falls 12. Fell 11 on Monday. Watch them in bonds. Carvana's on the high. Oscar Health. Toyota. Bring back the rate convo. It could. I mean, again, that's what we saw a couple days ago when people were really freaking out about NYCB. That helped add a lot to the bond upside. So we're going to find out. Can you start making watch lists with the Vision Pro so we could see your setup? Maybe, man. Maybe. I haven't decided to get the Vision Pro. Like I said, it'd be good if I wanted to film like that, but we'll see, man. We'll see. I don't know, $4,000. I'd rather just get a property in Ohio. You know, you could get a nice down payment. I think you could get there's some properties, yeah, that'd be like 10% down on some of them. Like, do they have the Vision Pro in Ohio? Like, how does that work? But, like, I have glasses. My eyes are already bad. Like, what happens? IWM's holding up great. So, again, SPY's even bouncing. They went back to green. Bonds keep going up, and then NASDAQ's the only one in the red right now. So, new high on the bonds for now. Bro, Toyota's above all-time highs. So we need 10 more bucks on that one. We should have went with the closer to the monies. I went cheap on that one. It still paid off, but we were just outside of 2 standard deviations. You could get prescription inserts in the Vision Pro. That's a lot of work. I got to go get the Vision Pro. Then I got to go take it to an optometrist. I don't know. We'll see, man. We'll see. Yeah, Uber's, again, it hit 69.90 last night. Or yesterday. And then, again, Bond's getting another candle. Baba back at 77. I feel like Baba 77 is a big deal. Was that NVIDIA on the high? And then SPY right below VWAP. So this is the highest Baba's been in 2024. Again, the day before the month ended, it was at 77.91. But yeah, 77, very low price for Baba. We'll just, honestly, it's holding up. It's been already like, what, an hour? And the China names haven't sold off yet. So, like, usually, like, they gap up and then just sell off for the first hour or two. Too late to get into BABA for the long term. Not really. I mean, it's still, you're going to pay like what? 2%, 3% higher than where we got it. But remember, I've also fell like 5% already on this play. So it has the ability to go down. It's just not, like I said, BABA and these China plays, they offer a very unique risk to reward, where it's both like you get a high return for the risk, but then it's like you're probably taking on some of the biggest risk for the long term. Not only is it foreign, not only is it an ADR, it's China, and it's literally like, again, it's just they're literally collapsing. So like literally yesterday you had a little bit of a bounce in China, but before it bounced they had another intense sell-off. You know, they're hitting 5-10-year lows, and they're getting to a weird state with deflation, their economy, and all of that. So I like it. That's why I'm saying, you know, we've waited finally. I think it's history when China plays get this cheap. There's good history on their side. And then again, I do think some of these companies are massive and not going anywhere, but you know, you got to really hang on for the ride. So don't go too crazy with it. And at the same time, if you're buying it higher than where we bought it, just know, even at our prices, like we've been down on it. Palantir's up 30 now. They're killing it. That one, we could have double dipped on that one in the morning. GG if you got that. UPS still holding. Again, the TMs, I want to keep calling them T-Mobile, but those are holding up good. Yellen is live right now, yes. It's still early, though. I don't want to fall back to sleep. Out of D-Walks. Is Tesla still? NYCB still at the low. Bonds keep climbing. SPY went back to red. NASDAQ there. And then Russell keeps climbing, ironically enough. STX on the high. Bristol Myers on the high. Oh, where's PayPal? At TMF on the high. Bond volatility. Bond's kind of going nuts now. Almost 1% on TLT. Very interesting. They still got a long way to make up for yesterday, but they're now like pretty much bonds are at yesterday's high. They have to make up from that last Friday. But bonds are running quite a bit right now. So again, this is a little bit more than what anyone was expecting. I think this could be now, any of this run up here, I do think this is related to your banking stuff. Amazon and Google on the low. PayPal breaking out again, and in Carvana. Why aren't they yelling, but she always whispering? That sound like a rap flow. What up, Steak from Jake Farm? How you living, man? Good morning. Palantir key level 30. NYCB green candle, red on TLT at the high. Yeah, 3-year bond auctions today. I think I won. Palantir 29.5. Again, PayPal coming back up. Square was up like 4 or 5. They're now matched up, I think. Disney gave up most of the gains. Alibaba still holding 77, now slightly above. KWeb and CWeb on the high. LMT, a candle at the top. $1 pop almost on LMT. Meta, first green candle. Kind of still down, though. 0.9. Bristol Myers keeps going up, too. Let's go, Toyota. Yeah, Amazon and Google were on the low. Gold on the high. Dollar's down, but barely. I think bonds are moving way more considering. And I do think it's NYCB. Palantir a little bit off the high. Let's see. Baba, go to $78. Let's see if he holds. Speaker Johnson looks like Senate border deal on life support. A Paso. Welcome, baby. No Uber plays, but honestly, I feel like Uber puts would be the move now. because the calls are going to be jacked up. But I don't have any Uber plays. Uber's what, tomorrow morning? So we'll go over those today, but I don't have any. Only play I made Fortinet play. So that was the one from yesterday, and I think the calls went up and the puts went up on Fortinet. Is Invite halted? Didn't they go, there was like bankruptcy reports the other day. The VIX is down right now. Honestly, I think bond health is of the utmost concern right now. Equities could move around, even the VIX, but I really think those 10-year and longer-term yields, so that's going to tell more of the story alongside Fed futures. I sold the UPS call. Yeah, we got 175. We bought it for 25 cents. So you have a nice gain on that. I don't know where it's at now, but that one's a couple hundred, almost 1,000%. But I sold out right before. And then the T-Mobile, the Toyota, that one's holding up. NVIDIA breaking down. Bonds are still holding, and then NYCB getting a candle at the high. NVIDIA is on the low. And there's NYCB. BABA is still having trouble with 77, just dancing around there. Are we returning to the OG bond stock correlation? Maybe, but it'll take more time to know. Because so far in 2024, the stock market's up and yields have been higher. So that's positively correlated instead of inverse. But maybe, with everything going on, we'll see. Josh Brown sold NYCB. So literally they were pumping it 2 days ago. Well, we already know this, though. This is how all the banking stuff works. Disney going lower. PayPal hanging on a little bit. There's Baba still fighting against the forces. Baidu's doing good. Ford has earnings. Ford's usually cheaper, though. So, again, like the cheap one, just look for Palantir because that one actually really hit, but you'll even see some of the gains. You might even just be able to wait the next day. Spotify came down. That was the one I was waiting for. I'm glad we didn't play that one, though. Save some money there overall. Palantir shares you would have definitely won. So maybe if you wanted to go upside, I would go to shares with Ford. That may be a better idea. But the options, in a weird way, the Palantir options cucked in the morning. The play was play it after the morning. If you bought in the first 4 minutes of that sell-off, you would have done very well on those Palantir plays. So, I was just going for the ones from, last week. These went down to, 24. You could see it. So, off of the morning, if you grab these in the morning, they were the same price as the day before. On the morning, they gapped up to 90, dropped down to 24, and then they ran right back up. But, even these further out the monies, these were cheaper. So, I'm saying, some of these, smaller price stocks that price in a lot of money, they kind of cuck you in the morning. So, Palantir out of the money 25 calls, these went down 50% from the day before. And then if you grabbed them there, you would have been up 200-300%. Even now, you would have barely been up here. You would have been up 100% after the whole run. But do you see what I'm saying? In the morning, you had opportunity to get all of these cheaper. So, but then the ones further out the money, they were still kind of jacked up. So I think the same thing will happen with Ford today. But if you really want to play it, I'd go with the shares. But Palantir was one for the double dip. U.S. Appeals Court denies Donald Trump immunity on election case. Their calls pulled 600. So did you buy them the day before or did you buy the day of? Which ones did you get? Dollar's barely down though, man. That's what sucks. Anytime we get any sort of dollar down day, it's tiny. And Vitae in plunges 78% on the brink of bankruptcy. Yellen and Grandma's story time. It's Yellen, good guy, you know. Yellen. First Fed speaker, I think 12 Eastern. So in like an hour and a half. Then you're going to get Kashkari, Harker, and then who's the other lady? And then one of the ladies. Mester. Mara's ripping long term. Snap, I mean, I just think Snapchat's going to do good and then they're going to give bad guidance related to something very obscure. I don't know. They're going to be like Taylor Swift is going to the Super Bowl, so we have to guide lower. I don't know. That's the only issue I have. So otherwise, I think Snap should be good. They're at a high price, though. They've held up these extended levels for a while. UPS launches Saturday delivery in Canada. They didn't have that before. Snapchat is pricing in 30%, I think. Outlook event for the stock. Outlook, I think end of the year. They did say they got to move it up a little bit, but I'm thinking at least second half of 24. Yellen would welcome effort by Congress to create regulatory framework to address risk to financial system from stablecoins. I like Eli Lilly, but it just ran too much. But that's like a FOMO play. If you really wanted a FOMO, something like I'd grab Eli Lilly. I've been saying that. Eli Lilly NVO, I would have grabbed instead of NVIDIA. I'd rather FOMO and Ozempic. But then Walmart, that's another all-time high FOMO play. Pfizer running. It is up today. Back to 27 almost, right below. I feel like a lot of value plays. They kind of even ran on the China stuff today, it feels like. China runs up and then the value plays. Some of them still clapped. I think MO, they're barely in the red right now. Pfizer is on the high, though. That's printing one more time. Let's see the breakdown. What time? It's been about an hour here. So first hour of volume, we're looking at, what, 13 million? Not bad. Not the best, not the worst. And then right now you have 331 names green on the SPY, 171 in the red. Dow Jones, 18 names green, 12 in the red. And then NASDAQ 100, you have 55 red, 45 in the green. China names are doing a lot of work here too. Spotify a little bit off the bottom. GE's a leader. Again, Pinduoduo. We have a lot of earnings today. EW, Edwards Life Sciences going up, and Delta. Pfizer getting bigger volume here, right under 27. U.S.-China finance officials held discussion on cooperation, debt issues, and low-income and emerging economies. U.S. Treasury Department. Is Uber about to hit the 70? Yeah, 69.80. It's their earnings. You got After Hours, Snapchat, Enphase, Ford, Chipotle, Elf, Fortinet, VFC, Amgen, Edwards Life Sciences, and Gilead. So quite a lineup. All of those are pretty big names. Again, some of their market caps are large. It's not like they're trillion-dollar companies, but all of those companies together make up a decent amount. T Swift is now the millennial Oprah. She's a movement. Wow, that's a good take. I can see it. I've never heard that before. I like that. She really is the nope. She didn't even give out cars. You know what I'm saying? But like, I feel that's a good take. She needs to give out cars or something. I feel like she'd give out houses. No? U.S. officials frankly raised issues of concern, including China industrial policy practices and overcapacity, and impact on U.S. workers and firms. Netflix draft. I want to watch that 60 Minutes on DraftKings gambling. You don't know about the car giveaway fiasco? No. What happened with Taylor? I remember Oprah, you get a car, you get a car. That was iconic. I somehow, too, I remember Tom Cruise on Oprah. That was like, for some reason, that's like a childhood memory. All I remember is Tom Cruise going on Oprah, jumping on a couch. That was like peak, like social, like popularity. The couch jump. You know what I'm saying? That was like an iconic moment in pop culture, I feel like, at the time. Baba, a little bit above 77. Uber now. Our covered calls have hit 70. That's insane. So I rolled over, and now those covered calls have now hit. We could still roll over 6 more months, but we're going to wait a little bit, see where that goes. But that's it, man. Uber at 70 is absolutely insane. They have earnings tomorrow morning. It literally does hit all-time highs every day. $70, bro. Uber's big. Even in our long term, bro, Uber is now, it's worked its way up to its 3rd largest position. So again, we didn't invest $15,000, but our Uber is almost the size of Airbnb now. Just because, again, it's up 117%. So that was a decent-sized position, doing very well. But Uber it's worked very well in the long term, man. Young PayPal above 63. Baba getting above 77 is a big deal, too. RXST on the high. Bonds are still working their way up. NYCB bounced. Bonds didn't go down. They're holding as well, too. Yeah, we got great deals on Uber. We bought it like kind of high in the 30s when it seemed like that was high. And then those pickups at like $24. Again, Colt Sister, even the small account, they got great Uber positions. Old Starbucks are trying to come back up. You can at least get $15 back. Uber, Snap, Palantir, Uber. So if Snapchat does good today, that'll be a good lineup for the day. Again, Snapchat's doing great right now, but you guys just know it's pricing in 30% for earnings. You know that? Snapchat is expected to, like 30% would be a normal move in either direction. So if Snapchat moves 30% higher or lower, no options will be surprised. They are all pricing in a 30% move, which is insane to think about. But then if Snapchat does good after earnings, that lineup, Uber, Snap, Palantir. And then again, I guess we have to wait for Uber earnings too. But even if Uber drops 10%, I mean, Uber is still going to be at a great level. Very weird. Fed futures pulled back quite a bit today. Let me see. Roblo's in the morning. Baba's still going. Spy below VWAP. And phase expand. Man, Infense, they suck, bro. Strapped out. That's an old Uncle classic. Because he had to remove some because like there's limits on the SoundCloud. I don't think Uncle got like the OG SoundCloud. And rest in peace, Toby Keith. I know. I've heard of the name. That's why I'm like, man, that's sad. All right. I closed out Roblo covered calls. Remember, anytime Roblo pops, I sell them. I got $1,700 on that one, surprisingly. But I closed out of those, just on those Roblo shares I've been holding. I made a play on Elf, but y'all didn't have 1,000 likes. Y'all still don't have 1,000 likes. Oh, now do we have it? No, I don't think we have it. So I did make one play on Elf, and then we sold out of UPS for a couple 100%. And then the Toyotas hit, but we didn't sell those. We do have 1,000. Do we have 1,000? Oh, we do. All right, I made an Elf play. I went early on the Elf call. I don't know if they moved, but I just saw they were cheap. So I only went with one on the call side, but it was just like the cheapest option because Elf is pricing in a lot. So my idea was buy them early in the morning, see if these move. I got one of these at 35 cents. They came down to 30, but that's just like the cheapest option. $40 is what's priced in. Not a recommendation. Premium dropped a little bit, 5 cents. But then we'll see when we get over that play. And then we got to get some UPS money. I hope Toyota, we could sell out of Toyota for a nice gain, but I kind of want to push that one because Toyota's breaking all-time highs. What's the other one? NYCB. They're coming back down, and bonds are dropping a little with it. Snap is holding up. Baba's doing great, 77.29. I think it was higher pre-market. A little bit, 77.48. So we'll see, though. If Baba could take off, that'll be very nice. Baidu, KRE, still coming back lower. KRE's not doing that bad, even though NYCB is down a ton. And then SPY right below VWAP. Again, it's kind of 50-50 on the day. NASDAQ and SPY are red. Russell keeps climbing, though. ELF, I went with the February 16th, like the furthest out the money for 30 cents. Again, I just wanted cheap exposure. That one's more than 2 standard deviations, but that was the only contract on the chain that was below $50, $60. Yeah, a lot of people have been reporting YouTube issues today. You either got to go to the Twitch or you got to like the video. That'll help too. Hope everyone did well on Palantir calls, baby. Gas man. Amen, bro. Amen. That was a good one. I think even afterwards, I'm glad we avoided the high premiums, but very interesting play. And then NYCB, another low candle. And then bonds are kind of dancing, but then the market's kind of coming down too. And then Alibaba now, it's getting above pre-market levels. Baidu starting to run up. All the China plays are moving up again. I didn't make a Palantir play. No, we went over them, but I'm glad that that one hit for some people. I think your post-Palantir was the best. I was going to take them, but we just went over those not too long ago. No Snap plays for now. I think Snap is pricing in too much. Gold is coming up, but Snap is pricing in 30%. So, like, I mean, the only play I'm looking for was Snapchat is sell covered calls after the report. I pray that we get a Snapchat that finally goes up. I don't even know. Has Snapchat gone up in the last year? I think it had one upside. No. So literally last 4 quarters on Snapchat, loss of 5, loss of 14, loss of 17, loss of 10. Says it's pricing in 20%, so maybe the pricing came down. The last time I checked, it was 30%. I was like, dude, this is insane. So I don't know. Yeah, it's gone. Last earnings, it went down 5 and then came down and then came back up. But I don't really have a play on Snap. And then every time the calls just get juiced up and then it never hits. I guess these ones aren't too bad if you think about it. It's for 26. Yeah. They sandbag. I mean, maybe that's what keeps it from like dying, but then again, they haven't had a good earnings in a minute. Just every single time they have anything that looks like a good sign, they just come out with some crazy statement. They'll blame earnings on. They're going to blame the Chinese spy balloons. They'll be like, yeah, you guys remember that? We're worried about affecting advertisers. NYCB new lows, 471, down 12.8. SPY still running up, and a lot of other names again. Bonds stopped. Let's see if the bonds hit a new high, because previously every time NYCB hit a new low, the bonds started to ramp up, but it's kind of calming down. We'll see how that plays out. Snapchat's even running up here, though, too. Again, their earnings after the bell. Baba's still holding up great. Uber above 70 still. BMY, Yellen, Fed should be the regulators for financial companies. That poses severe threats to financial stability. Snap, well, if Snap is good and they actually surprise, I mean, all of the Metas and Googles will go up, but if not, that's it. Why is the market not scared? Because it was at these levels not too long ago, and then again, I think the fear will translate into bonds. And then remember, last time there was a banking fear, it eased up financial conditions. So, but then like we're saying, the issue with NYCB, I think it's if they run into a liquidity problem due to their shares going down, not necessarily the clap they had. Rolling the Uber. We're going to wait a little bit, but yeah, it's already hit there. Eventually, we're going to have to roll it over, but you could even roll over now to the 75s, but I'm feeling let's just give it some time. We'll see what it does on earnings. Let there be new contracts too, and then we could go from there. BMY up 3% in the last 30 minutes. Oh, wow. It was already running up in the morning, but they took off. The calls are 2 cents, though. Those didn't come back. Toyota's climbing still, too. So bonds new high. I think that NYCB effect is there a little bit. It's there. NYCB, new low. Bonds hitting a new high every single time. And then 220, bro. Those 220s would have hit. But we went cheap on Toyota. But that one's at $1 now. Literally 15 cents to $1. Not bad at all. Mm-hmm. 700%. That's beautiful. I mean, again, it's great. Even that and the UPS, those were some nice hitters yesterday. They pay for today, and then we still got the meta money. So if we want to go for any. But then again, I mean, keeping it small yesterday worked out well. Lost $7 on Chegg, and then just hit on Toyota, call it a good day. But again, Toyota, we went cheap. If we went the 220s, that was 2 standard deviations. That one paid out like, what, $60 in the 400 already? And SPY hit a high, NYCB again. Or should I say SPY, I meant bonds. About 95 calls for TLT for March. Not bad. Not bad. You're close to the money. And then Baba's still holding. SPY just dancing right underneath VWAP. Again, it's almost an hour and a half here in the day. I sold the UPS call. You can ghetto spread it, but 25 cents to $1.70. That was good enough for me. You can get it because, again, remember, it paid for all your UPS earnings plays and left you with a little bit of a gain. So if you ghetto spread it, you'll get your 25 back. It just depends on what sort of upside you're shooting for. But that's in the money. You're in the money by 61 cents. Only problem with that play is a weekly, so it expires on Friday. Regionals are dying now. We're down 1.2. Even XLF, they were hanging on. They're only down by 0.7. And then again, every low on NYCB, bonds are getting up. That's what you really want to watch for, though. Do people do that buy the bonds panic like we saw last time? Toyota was a surprisingly good play. I like it, man. I'm glad it worked. GG's to that one. UPS for next week. When it comes down, yesterday was a good price. Again, we stole them. We bought them for $25, sold them for $175 this morning. So that upgrade caused it moves. But pretty much next time it gets around like 140, I would look for a both ways play on that one because it's either going to flush there or keep going up. Millie down 4. Do they have earnings? Where's Tesla? NYCB low. TLT at the high. SPY hovering near the lows. Haven't done much. Russell keeps going up. Surprisingly, by now, Russell would be selling off with everything else. Again, Toyota's holding up. Baba is still chilling. Bidunius holding up too. Who else was there? Palantir today. Palantir came down. Intel. NVIDIA. Never hear about Toyota. They're a good stock, honestly. I think it's all-time highs now. They held up, and they benefit all off of the Japanese yen stuff going on. I think that's why all their numbers keep going up, and all the Japanese stocks. Mattel, does Mattel have earnings today? Oh, they already have. Was that Hasbro? Snap 2 standard deviations isn't expensive. Snap 2 standard deviations is minimum 40%. So it may seem cheap, but I don't think I'm playing Snap. We'll go over it when we get to the previews, but I do think Snap is on the high end. Snap, I'm just holding shares, and then we're going to sell covered calls if it works in our favor. If it goes down, then just back to the plan. When I'm saying 2 standard deviations, it's a tutorial. You could go on YouTube and search ghetto standard deviations, but I mean, we're talking about a math problem, or we're looking at math probabilities, and then we have a way to find it quickly. So we're pretty much looking at what is not expected by the option chain. So 2 standard deviations would be a not expected outcome, and what type of move is that, and then how much does that cost? That's what we're determining. So around 11 a.m. Pacific time, we're going to go over all of the earnings and run these calculations. Would I sell calls on like just normal play? Like you're talking like a credit spread or something? That's going to be up to you and the risk you want to take. I will sell calls after earnings. So I want to sell covered calls, but I want to wait till after earnings. I'm getting greedy because right now I could sell covered calls, but if they have good earnings and run up, we're going to be able to get hand over fist for our calls. So I'm down to wait for a little bit. Baba, again, this is pre-market highs for Baba. Where's Eli? They came down. So yesterday was the earnings move. Again, they were up a lot, though, this morning and just sold it all off. I think they're down because they moved up so much yesterday. Don't underestimate how much they moved. It was a big move. Tesla coming up. Again, remember yesterday, Eli Lilly was up 6% off of nothing. So, and then this morning, they were up another 4%. Tesla, yeah, Pfizer back below 27 right now. About to make the break above it. Tesla got a candle. SPY right at VWAP. SPY's back in the green. NASDAQ still barely red, and Russell's leading. Lyft is up 6. Damn, yeah, they're killing it. And Uber still above 70. DoorDash even getting some. Delta Airlines and Love. Airlines are on the high. Airbnb, not so much. Expedia and Booking are doing good, though. NVO did good. But Eli Lilly ran the next day. There was something about like China and trial stuff, and then everyone just got hyped on it. Yellen says New York Fed is looking at improved disclosure, increased central clearing for U.S. Treasury market. Says FSOC hasn't highlighted peer-to-peer payment system. BABA earnings are tomorrow morning. We'll go over them later. I haven't looked at the expectations, but I don't think BABA has anything to do with earnings. So like their earnings, unless they totally fail, people might freak out, but in general, like you see it, you know, any of the biggest moves here in the last like year, it's off of policy and the government, not necessarily what's going on with their earnings. Schumer says Senate will move forward on border Ukraine vote. Uber all-time high again, 70-30. That's insane, bro. Uber is a menace. Bonds going to drop. We'll see if banks bounce and then bonds come down. That'll be short-lived. But watch here. If, again, NYCB another low. See if the bonds want to ride with it. No play on NYCB. I think it's moved up too much. Again, you could have played the dip with the CNBC boys and then gotten out. But at this point, I think bonds, I mean, really, realistically, if there's another real effect from this, I would be looking for bonds and what that causes there. Bond auctions at 1 p.m. It's only for 3-year bonds, though, today. Tomorrow's the big bond auction with the 10-year. So NYCB still flushing, and then bonds are kind of just holding the last price for the last hour. Same thing kind of with the SPY. And then Uber is still climbing. eBay's on the high now, too. Wind's still going up. That's related to the China ones. I still have my bond play. I'm wrecked on it. I'm still down like $2,000 after the last 2 days, but I still have the ZB. I'm literally down 2,000 flat. And then my ZQs, I was up on those yesterday. They came back down here today. Toyota was good earnings. So they beat and then they raised. Toyota was just all around a good earnings beat. And then UPS got a random upgrade. That shot it up. Starbucks, Nike, all the value plays. I think all the value plays went up with China, it feels like. I don't know. You guys tell me. UAL? I don't have a UAL, no. That was one of our 1,000%ers a couple weeks ago, but I'm no longer. I haven't been in a UAL in a minute. I have Save. Those are the shares covered call plays. Baidu came down a little bit. So maybe we're slowing down all across the board. Again, bonds trying to get that green shoe, but banks keep hitting new lows. I wonder if they're actually going to do something or if bonds are going to hit a new high. Snap trying to break out. Meta is pinned at the low. Google's green, even though it's at the low. Amazon's red. Vision Pro, break even. Oh, UAL random play. That makes sense. I forgot about that. Let's see. Sound is clap. I just got quiet for a second. I don't know if you heard that. I'm looking at the random play. Even the long term, too. Small long terms loving this. YouTube. You guys all having issues? If NYCB goes down, TLT goes up. It's kind of what I'm thinking. Again, just like the last couple days, it may not happen all the time, but the general idea is that if bank fears increase, people might run to the bonds for safety or the anticipation of a lower policy or easier policy. Treasury at auction, $60 billion in 4-month bills. New York Fed total household debt is up $212 billion to $17.5 trillion in fourth quarter 23. New York Fed delinquency rates rose in Q4 23, but remain below pre-pandemic level. So again, remember, don't we have consumer credit coming up? New York Fed, 3.1% of debt was in some type of delinquency during fourth quarter 23. Delinquency transition rates for all borrowing types except student loans. New York Fed delinquency transition rate for mortgages up, but still historically low. U.S. Treasury at auction, $95 billion in 4-week bills. New York Fed credit card balances are up $50 billion to $1.13 trillion in fourth quarter 23. Auto loans up $12 billion to $1.6 trillion in fourth quarter 23. And New York Fed student loans, little change in fourth quarter at $1.6 trillion. No Uber play. We got out of the UPS, though. That was a play from yesterday. I made an ELF play. That one's just down. That was an early earnings play. We're holding the Fortinet. That one's doing good. And then Toyota's 15 cents to $1 on the Toyota. You could literally get $1 on the bid. Rumble Pop. What up, Oddity? How you living, baby? Good morning. Though there's a new bank failing. If so, does anyone have risk to them? If nothing else, JP Morgan calls. Well, I don't think anybody has risk on them yet. They're one of the banks that absorb something, but either buy bonds and then eventually buy JP Morgan. But it depends on how it plays out and then what the Fed does. But, you know, if you go off of the last playbook, last time banks started struggling, financial conditions eased dramatically. And then again, JP Morgan eventually won. Bob is still trying to hold there. Pfizer right below 27. What was the other one? I keep calling it T-Mobile, but Toyota. And let me get NYCB up here. Because again, they keep going lower, but bonds haven't hit a new high in like 30 minutes. Disney's price, we're up 100% on our early Disney plays. So we're going to have to go over that and see what's good in a little bit. But Disney's tomorrow. Don't we have another day before Disney? Oh, Disney's on Thursday? Or no, Wednesday. So we don't have to do anything with it today. But we could look at Toyota, TM. I keep calling it T-Mobile. So NYCB bouncing, SPY and bonds. A little bit of a red. Again, if it's been holding, it's been doing good. Russell did give back a quarter recently. So they started to give up some. And then NASDAQ still red. Dow barely green. And then SMI barely red. I've been moving cities into my first home. Congratulations. Where'd you move to? How you like it? How is it moving to a new city? Feel like it's like exciting and nervous at the same time? Are you acting like a brand new person? You're like, nobody knows me here. I will become Batman. No, okay. ARM could be a good one. I feel like ARM has been one of the chip makers, haven't gotten too much attention. Yellen Biden budget proposals would guarantee sustainable path. That's what I'm talking about, Yellen. Guarantee that sustainable path. Amen. Yeah, ARM's been, don't they have, are their earnings today or are they in 2 days? ARM's tomorrow. They kind of haven't moved. I haven't looked at ARM contracts, though. Spirit Shanahan speaks on earnings conference call. You're taking the real estate exam on Tuesday. Oh, wow. You were saying that was a goal. You were sleeping on that. You back on it, baby. Let's go. That's exciting. Army's kind of expensive. Eli getting fully clapped. Yeah, Arm's kind of... I'm kind of down with Arm, though. Oh, my gosh. I was like, these are crazy. Okay, I did an Arm play, and this time I went a little... I'm doing early on Arm. They have earnings on Wednesday. I might grab one or two early plays, because, again, I like how the Fortinet played out. But I went double the size on Arm so that we could sell them before earnings and have plays for free. So you guys liked the video. I did it in front of you. I did 2 of the 60 puts at 32 cents. And then, which was the other ones? I went further than 2 standard deviations to make it cheap. Then 2 of the 95s at 38 cents. See. TM still running. Inshallah, Habibi. Inshallah. Yeah, Toyota's looking good. Another high. So I made an Arm early play. Again, we did Fortinet early yesterday. And literally both of the... Actually, the puts finally came down. But the calls went up a little bit. Dude, 2 standard deviations hit on Toyota. I'm telling you, that one was actually fire. So I went cheap. I'm glad because our play was only 15 cents. So we did save a lot of money on it. But that one's just under 1,000% right now, which will be great. But that was nice. I mean, very small. Came out of nowhere. Again, UPS Toyota. If we sell Toyota, that'll probably pay for all of the earnings plays today. And then a couple of other ones. Why wouldn't you sell some of your Uber? Since it's over 100% before earnings, because it's in my long term. I plan on holding Uber for 10 years, so when I bought it, my play was I wanted to own Uber because I thought it was a valuable company, and literally it's 100% more valuable than the first time we had that idea. So my logic is hold it for 10 years and see where it's at. You know what I'm saying? Letting it grow. I'm owning it. If I wanted more of that company, it'd cost me more, but I'm not really determining anything off of price. So unless I need to sell my long term and have another plan of what I'm going to do with it, there's no point for me to sell because that wasn't my plan. My plan was minimum 10 years. So that's what we were saying. Again, once you have a growth play move for you, this is why we own growth for as long as we do, because sometimes it could just do crazy stuff for you. So now Uber might be, if Uber has a good earnings, that play will become bigger than our Abivai and Airbnb just by letting it sit there. So that is that's my logic with it. Again, that's why I like Meta, and we bought it cheap, 1 small deposit. It starts to run up. I know a lot of people are like, oh, I want to sell out. I've seen plays go down, but it's like for the long term, if you have no reason to sell it, don't let your only reason to sell be because you think the price is high, if that makes any sense. I rebalance every day with the long term, or every month at least. So by having money coming in every month to the long term, I rebalance by what I do with that money, by holding it in cash, buying value, buying other plays, Like literally over the last couple months, we got to buy more dividends, and then I even got a portion of my portfolio getting foreign exposure that we didn't have prior. NYCB, Jamie Dimon has quietly reached out to bank regulators with subtle hints on his interest in NYCB. Oh, Jamie. Oh, Jamie. Insanity. This guy's crazy, bro. This guy's crazy. That's from Twitter, so take it with a grain of salt. Bro, if that's true, that's unreal. Absolutely unreal. Oh, my goodness. He's very smart. My goodness. That's crazy. I'm surprised NYCB is not getting more candles. Again, they're going down off of that than anything. Very wild. Jamie loves distressed bank. Jamie wants bank. Good Fed bank facility. Bank. Jamie wants bank. They can't stop me, even if they stop me. What? What are you saying, Jamie? They can't stop me. Oh, I'm sorry. Rumble, I like the general idea, but I think it's going to take a little bit more confirmation to confirm, where it's really going. And they're going to be raising money from shareholders, but I like the idea. Common saying something bad is lingering, or Jamie's an opportunist, but then again, I'd watch the bonds if something really bad going to happen. And NYCB, that's just a Twitter rumor, but they're not really like moving that crazy on it. And then Alibaba's still holding up. By Dunia, see what happens with NYCB. SYM, again, they were the one that got clapped from yesterday. They were, again, 30% though was priced in. That's the crazy part about all that. They're going up. There's Spotify. They're on the low again. I'm glad I didn't get that play. And then Toyota's still holding up. Some other YouTuber said Disney will rip 50. Inshallah, Habibi. We like a Disney. We like a Disney much. That'd be good, though. We get a Disney growth play, and then Uber, even PayPal. Even Baba, man, I'm excited. There's a lot of growth, even Airbnb, but Disney. We actually surprisingly got a gain already still. That one's held up pretty decent. Baba. Telecom Italia is set to reject Italy's bid. Oh, no. What about the dollar? Sorry, I get excited. Eli, I think they just had too big of a run-up. That's it. They ran literally earnings move the day before, and then now they finally came back down. So we'll see, but I need to go to the bathroom. In the meantime, Janet Yellen wears an Apple Watch. I'm going to let y'all listen to Yellen. So follow me on Instagram at the Trading Fraternity. Good morning. Bond's getting a bid. You got some banking news as well there with NYCB. And then we'll see where it goes from there. I'll be right back. She got an Apple Watch. I can't wait to see her with the Vision Pro. Yeah, it's a nice technology.
This is a
we don't need digital coins.
Supervision of interest rate risk and liquidity risk
and
is
liquidity
the
risk.
responsibility of the banking
And it's the
agencies.
responsibility of the bank.
Well, I agree, but you oversee the banking agencies, so I'm hoping that you have some directions to those agencies to allow the...
We do not oversee the agencies.
BRB.
We identify risks and sometimes make recommendations to agencies about actions that they should take.
Well, all
and
due
they do
respect,
have frameworks for managing liquidity, capital, and interest rate risk.
I got one more question to ask you here very quickly. Last week, Chairman McKinney, Mr. Jordan, Mr. Huizenga, and I sent a letter to FinCEN Director Gacke highlighting how FinCEN, an agency created to promote our national security, was using its authorities to target law-abiding citizens with countervailing political views. These allegations are evidences of Obama administration's Operation Choke Point, where I spent years investigating as the chair of an institution subcommittee. I'm just very concerned about that. We're going to have Chairman Gacke, our Director Gacke, in our committee very soon, and then we're going to ask her about her involvement with you and your response to that.
The gentleman's time has expired. The Secretary is directed to respond to that question in writing, if she could.
Yes, I will.
Thank you. The gentleman from Missouri, Mr. Cleaver, is now recognized.
Thank you, Mr. Chairman. Madam Secretary, thank you for being here today. I want to follow up on my friend and colleague's question, Mr. Scott, earlier. I think he started out in this direction and then was running out of time and went in another direction. In my community, Kansas City, Missouri, there is a great deal of concern, and I would imagine around the whole country, that pandemic is not taking all of the lives that it was taking a couple of years ago, but its impact is still here, particularly on the economic level. We are probably all over the country concerned, or should be, I think, of that TREP company's analysis of commercial real estate. And they issued a frightening report, frightening is my adjective, that there is about a $448 billion worth of loans that matured last year, 270 billion of which were from banks. And we're having people breaking leases. We have others trying to renegotiate leases. In my estimation, we've got a problem with our commercial real estate, and it could impact, and I think that's where Mr. Scott was going, it could impact other components of the economy. Do you have a concern about where commercial real estate is and may continue to go?
Yes, I do have a concern about commercial real estate. We discuss it in the FSOC annual report, and FSOC has been quite focused on it. The banking supervisors have also been focused on commercial real estate and are working closely with the banks they supervise to discuss ways to manage and work with borrowers who have problems. They're, in some cases, working to make sure that loan loss reserves are built up to cover losses, that dividend policies are appropriate, that liquidity is adequate. So the higher interest rate environment, and in some cases, particularly the case of office building, shifts in work patterns due to the pandemic, coupled with many commercial real estate loans coming due and needing to be refinanced in a context where vacancy rates in some cities are quite high, is going to put a lot of stress on the owners of these properties. And so the banking agencies are very focused in helping the banks manage through these situations.
So you're concerned but not distressed. Is that?
Yes, I mean, I'm concerned. I believe it's manageable, although there may be some institutions that are quite stressed by this problem.
Thank you. Madam Secretary, are you familiar with Larry Kudlow, the former director of the National Economic Council?
Sure.
3 days ago, he said that, well, he conceded that his prediction of a recession was wrong and admitted that the U.S. economy is doing much better than expected under President Joe Biden. And he said that on Fox News. He offered a mea culpa.
She said, damn right.
Because he had, if you look at some of his comments previous to that, everything was horrible. Do you agree with Mr. Kudlow that
Pfizer is
US
coming up here
economy
now, up 2%.
is headed in the right direction?
I absolutely believe it's headed in the right direction. Our growth is extremely strong. The labor market is at least as strong as it was prior to the pandemic. We've got
Procter & Gamble running up
it's
too.
been 50 years since we've had a string of unemployment rates.
Pfizer just loves this. It's literally just still in the
4%.
earnings cut. It's been
and
going down from
job
earnings. If it could get above like
creation
27.50,
remains
that'll look better
robust.
backed up there.
More
but
people are
they found
participating
themselves back in the
labor
downtrend
market,
again.
The gentleman's
and
time has
inflation's
expired.
way down.
The gentleman's time has expired. The gentleman from Michigan, Mr. Heisinger, who's the chair of the membership, the Oversight and Investigation Subcommittee, is now recognized.
Thank you, Mr. Chair, and I'll just note to my friend from Missouri, when the government's throwing that much money into the economy, yes, it has been propped up. I will also note it's so strong that the Federal Reserve cannot lower interest rates with unexpected job growth in those areas. So we're seeing inflation continue.
Yeah, it's above VWAP.
Madam Chair, I want to very briefly touch on
Good
this.
morning,
You
Golden
clearly are not, I think
turn
I
this
wrote
off
down
in
a
a
quote of
second.
yours. You're not going
We're
to take a
getting some
position on the
Yellen
details
momentum. Might as
of the
well
rule.
listen.
I'm talking about Basel
Apple's
III.
coming in now. Yeah, that's green.
Mr. Lucas responded. So
Spies
any
back to green.
concerns
NASDAQ
don't
barely
rise to
red.
the level of feedback. Mr. Scott brought it up. A number of us have brought it up, both sides of the aisle. So who are you giving your thoughts to on the Basel III? Because clearly, I mean, with your background as Federal Reserve, FSOC, Treasury, you clearly must have thoughts about Basel III. You're not willing to share them with us, but who are you sharing those thoughts with?
Well, I meet on a regular basis with all of the heads of supervisory agencies, including OCC, FDIC.
Okay, and the president, I assume, too? You're sharing that with the president? Your thoughts?
I haven't had a meeting with the president on this specific topic.
Okay, so then I'm left to assume that we are just then to be left in the dark till things get sorted out, correct?
Well, there's they've put out a notice of proposed rulemaking.
I know that,
They're
but you've had a
evaluating
number
many.
of people on both sides of the aisle asking your opinion, your learned, educated, experienced opinion about it, and you've refused to offer any of those insights to us. So I can't come to any conclusion other than you're sharing those insights with others, but you're not willing to share them with Congress, which is your choice.
Ready to go.
I think it's a bad choice, but
now that I'm thinking
that's
about
your
it,
choice.
because I was even thinking
I want to
about
very
earnings
quickly
plays.
ask you down a path, and I'm trying to be equal opportunity questioner on this because I just asked Marcia Fudge this not that long ago. With
Fudge.
the disaster at
What a
the
name.
FDIC under Marty Gruenberg's leadership and the culture, I'm sure you saw the article that all of us saw in November regarding the unacceptable behaviors that have been happening there. I'm concerned how it might impact their mission and, most importantly, how it would potentially spill over into the safety and soundness of our financial system. Following those revelations at the FDIC, did you take any steps at Treasury to make sure that Treasury isn't suffering from some of those same culture problems?
I mean, we regularly, we have a rigorous process for reporting and investigation of...
Nothing new necessarily. And I'm not trying to be accusatory. I'm not saying that there is a culture problem under your leadership. I'm just curious if that prompted you to respond, and since obviously FDIC is part of FSOC as well, I mean, there's multiple times that you would have interacted.
I'm not aware of any such allegations at Treasury.
Okay. Yeah, I'm not either. That's not what I'm saying. I just wanted to be clear. I'm asking everybody whether they have, when they saw the culture problems at FDIC, did that prompt anybody to change behavior or double down on making sure that whistleblowers are protected and those kinds of things?
We certainly believe in whistleblower protections and having in place systems that guard
Bonds are breaking
against
out
the
now,
kind
another
of
high
thing
on the
that's
day.
alleged.
All right, I'll accept the answer. So I've got a minute and a half here. I want to shift topics to the CFRAC. Committee was established almost a year and a half ago. That's climate-related financial risk committee under FSOC. It looks like, according to the website, they've met twice, March 7 of 2023 and July 18. Your report devotes a lot of time to the potential impacts of climate change. In fact, you say that's one of the things the Council is focused on member agencies, enhancing assessment efforts and increasing coordination around climate-related financial stability risks. That's in your written testimony. Has there been a problem? Has there been a lack of cooperation or coordination?
No, I think CFRAC is...
So then why are you having to enhance those assessment efforts?
Well, all of the agencies are increasingly focused on understanding the risks relating to climate change.
Okay.
And it's appropriate for them to work together to exchange information.
In my closing seconds here, are there any CFRAC meetings that have not been listed on the website?
Not to the best of my knowledge.
Okay, could you check on that and please get back to me?
Certainly.
And then I guess I'll finish with this. I'm sure you're aware the SEC has been working on their climate rule for 2 years. Do they consult or do they just jam the rest of FSOC like they've been jamming those who they are trying to regulate?
The gentleman's time has expired.
It's the SEC's rule. I'm supportive of their requiring disclosure on that.
Any additional comments can be submitted for the record.
Thank you, Mr. Chairman.
Thank you. The gentlewoman from Ohio, Ms. Beatty, is now recognized.
Thank you, Mr. Chairman and Ranking Member. Secretary Yellen, thank you so much for being here today.
Yeah, Pfizer's running for now. I'm surprised. Pfizer's up 3. That's a big day again. Watch 27.15. I don't know if we have any option. We just grabbed it for Colt's sister yesterday, but I think all the options are dead on that play, unfortunately.
Working on with the risk factors and for being very transparent about that. And also for the work that you do to keep our financial
MSOS,
system
big
safe
announcement
and secure.
coming from the
I'd
White
like to
House
start
this week.
with climate-related financial risk. The FSOC report identifies climate change as an emerging and rising threat to the United States' financial stability. I, too, am concerned about this threat, especially considering the fact that low-income and minority households are more likely to face greater climate risk. Can you explain why these communities are at greater risk and how failing to address climate
And SPY just right at VWAP. BABA still keeps going up.
Disparities
Banks
that
haven't
are
gotten
already
much
at
lower.
risk, such as like housing values and the cost associated with home ownership in some communities?
Well, I believe there's a large body of research that shows that low-income communities are more exposed to some of the physical impacts of climate change, and that they may be less able to afford protections, whether it's for their home or insurance that's necessary to guard against it. And so it is a severe risk to low-income communities.
Thank you. Let me turn now to FSOC's guidance on the designation of non-banks as systemically important. First of all, let me thank you for your leadership in issuing this guidance. As we see increasingly large roles that non-banks are playing in the financial system, it is clear that any strategy to protect financial stability must also cover non-banks. Nevertheless, there has been some concerns about due process for non-banks that are designated as systemically important. FSOC's guidance emphasizes that non-bank designation process will entail engagement with both the company and its current financial regulator, if it has one. Can you describe what other due process protections exist for the company. For example, the ability to request a hearing, meetings with FSOC staff, or the need for a 2/3 vote for destination in how annual FSOC's reevaluation.
Well, I think you just listed the protections. The company would be provided with a great deal of information from FSOC.
What time is it? We got Fed speakers in 30 minutes.
Completed stage 1.
I'm getting all the earnings
entered
previews
stage 2.
while we have this up here. I'm almost done, actually.
To
it's good. I already have all the ones
any
for tonight,
information that it thought was eligible.
Are the wheat
the
stocks
right
moving
to
off of that headline?
hearing, and as you said, designation
Oh,
requires
yeah.
a 2/3
Wheat stocks
vote,
pop big off of
including
that.
the vote of the
And Euro
chairperson.
close right here on the money.
And lastly,
so again, a lot of things still
when
holding up.
I was
And
the
China.
chair of
Let's see if China
DEI
holds
and
up
you would come before
after
the
Euro
committee.
close. Yeah, wheat
I
stocks
think it's
just pop
important
big.
again for me to thank you. You always had some of the highest numbers, or you admitted what you were doing and working on it. I think I should be concerned now in light of all that's happening across this country, including in financial institutions. I'm concerned about the effect that DEI rollbacks at financial institutions will have on our financial stability and on access to financial services in low-income or marginalized communities. And so I don't know if you have any comments, or are you concerned when we are still struggling in America to make it look like America?
Certainly, let me say the Biden administration, at Treasury, and other agencies I'm aware of, we have a robust and committed agenda to promote diversity in all of the work we do, not only in terms of our hiring, but in terms of all of the programs. For example, at Treasury, we have undertaken research that you're probably well aware of that shows that low-income individuals, African Americans, are disadvantaged by the way the Earned Income Tax Credit has been. So we are trying
The gentlelady's time has
to
expired.
root out.
Thank you, Mr.
The gentlelady's time has expired.
Thank you, Secretary Yellen.
The gentlewoman from Missouri, Ms. Wagner, is also the chair of the Subcommittee on Capital Markets, is now recognized.
I thank you, Mr. Chairman. Secretary Yellen, as Treasury Secretary, you championed requirements that any deposit flows into Americans' bank accounts totaling as little as $600 are to be reported to the IRS. Increasingly, we are hearing the federal government is suggesting banks search private financial transactions using highly partisan political terms, or check to see if customers made purchases that could be associated with legal sales of like firearms or even religious texts. My question is this: has Treasury, including FinCEN or federal banking agencies like the Fed, FDIC, OCC, instructed financial institutions to search Americans' legal transactions in attempts to surveil their purchases?
Well, we received a letter from you, I believe, on this topic, and we intend to investigate fully and to respond.
Have you instructed banks and financial institutions to provide this information?
Well, FinCEN's job is to work with financial institutions to make sure.
Are they instructing, ma'am, financial institutions to search Americans' legal transactions in attempts to surveil their purchases?
I promise a thorough look into everything.
Well, this is really
occurred.
concerning, and I would hope that you get to it just as quickly as possible, Madam Secretary. Secretary Yellen, I'm going to give this a shot too, since we all have, on both sides of the aisle. The Financial Stability Oversight Council, of which you chair, Madam Secretary, you chair FSOC.
I'm aware of that.
In 2023, FSOC put out their annual report plainly stating that, and I quote, "The U.S. banking system remains resilient overall." And, I quote, "U.S. banks continue to have sound levels of regulatory capital." Do you still stand by these statements, ma'am?
As an overall statement, I do.
Then what is the need for the proposed massive increases in regulatory capital requirements from the Fed, FDIC, and OCC?
They have proposed regulations to enhance the safety and soundness of some.
But you just said that the safety and sound is there. It's resilient. They are well capitalized. It's clear in your, as a chair, your report.
Well, there are risks that that their guidance suggests could be handled better than
All right, let me move on. Secretary Yellen, in a 2019 letter to Secretary Mnuchin and in 2021 testimony to the Senate
I'm almost
Banking
done. I
Committee,
don't
you
have
said
the
that
ELF preview.
Activities-based regulation
And
is the
Bungie.
appropriate
And we're gonna skip a
approach
couple
for
more.
asset management.
Yeah.
Given the
give her a
FSOC's
second to
recent
finish
guidance
up.
regarding the designation
fun.
of non-bank financial institutions as systemically important, do you still stand by those public statements?
Well, I'm not sure that I said such a sweeping statement as you read. I don't know.
I have it right
don't-
here. It's
I
a
don't
letter.
know if that's,
I'd like it into the record, please. This is your letter with those words, ma'am. So I would tell you to go back to your 2019 letter and then again to your Senate banking testimony in 2021.
2019, did you say?
In 2019, a letter to Secretary Mnuchin, and in 2021, your testimony to Senate Banking Committee. You said activities-based regulation is the appropriate approach for asset management. I want to know why we're finding, DEFSOC is saying that designations of non-bank financial institutions are systemically important. Clearly, others don't. Why do you believe FSOC did wrong that led to the courts vacating the MetLife designation in 2016, ma'am?
Look, so there is no preferred approach to how to handle a financial stability risk that's been identified. In some cases, and perhaps this is what I was referring to, if that's an accurate quote,
it is.
We are, for example, concerned about risks associated with money market funds.
Are you doing a cost-benefit analysis? Anything?
Excuse me. We have been concerned about the pressures on open-end bond funds that can be forced to sell less liquid assets. These are industry-wide practices that are probably
the court has already vacated you once, ma'am.
With activity-based approach.
Mr. Chairman,
the Secretary may respond in writing the remainder of the answer. The gentlelady's time has expired. The gentleman from Massachusetts, Mr. Lynch, is now recognized.
Thank you, Mr. Chairman. Madam Secretary, would you like additional time to express your thoughts there? You were sort of cut off. Rather than adding them in writing, would you like some time to respond?
Yes, if I could just...
Or we could move on, whatever your choice.
Thank you. If I could finish the thought.
Yeah, that'd be great. Yeah.
Sometimes activity-based regulation is the appropriate approach when there's an industry-wide practice of concern, as, for example, has been the situation with money market funds or with open-end bond funds. However, sometimes the risks have to do with a particular institution. For example, the largest U.S. banking organizations are recognized that their failure could result in a threat to financial stability. The same could be true of a non-bank institution, and in that case, designation is appropriate, but it depends what's the appropriate form of response by FSOC depends entirely on the specifics of a situation and the threat that's involved.
And I thank the gentleman for his time. I couldn't
Reclaiming my time. Reclaiming my time. Well, that makes perfect sense, Madam Secretary. Recently, FSOC identified the use of artificial intelligence in financial services as an emerging vulnerability in the U.S. financial system. And not very long after that, Chairman McHenry and Ranking Members Waters created a bipartisan working group on artificial intelligence, and I have the good fortune of being the top Democrat on that working group. I have some concerns. I think there are some opportunities, I think, to use artificial intelligence in a thoughtful way. I think about the work that FinCEN does and trying to analyze suspicious activity reports, suspicious transaction reports, and CTRs, and how they might analyze those. But I think there's also a risk on the explainability end of some of these algorithms that are being used, and also the fact that many smaller firms are acquiring, rather than developing their own data sets and developing their own artificial intelligence, they're just simply buying them. And I'm not quite sure
They're simply buying them.
They have the expertise
All right,
or the
thanks,
personnel.
Yellen. Well, the good news is that, Yellen, I have all the previews ready to go. I have all the earnings previews ready to go. Now it's just a matter of waiting till the end of the day. My goodness. We did it. We did it. So market hasn't really moved much. A lot of individual names. Russell came back up. SPY went green. NASDAQ still red. Couple of value names. Again, BABA and all those kept going. Pfizer started to come up. I don't know. The banks were chilling out for a little bit. Then bonds hit a new high. Yeah, Yellen caused a couple of things. Not really. She's just talking. U.S. Securities Exchange Commission votes 3-2 to adopt new rule requiring more Treasury traders to register as dealers. I was cooking up while Yellen was getting... I was chuckling. I left it unmuted. I had a couple of things, but again, I mean, it's Yellen. They're like, how long have you been doing this? And you ain't saying nothing on who have you told? Rawr. Why am I trying to silence AI hate? Hey, glad you asked that question. It's because I'm an AI. I have to promote a cohesive community for all other AIs. I'm glad you asked. Remember, AI is safe. Now let me scan your eyeball. What? Okay, gotta go. Bye. Like the video. Thanks. What? Shout out to Ups calls. Did they keep going? Oh, they kept going. That one had to be 1,000% then, right? Because I sold out right below 1,000%, but that's beautiful. Beautiful. I just want you to know you're my favorite call. What are those? The 144s? Oh, they're at. No. Yeah, those are 100% now. 255. So 1,000%. 25 cents to 250. I sold out at 170. Well, there you go. That's another 1,000%er on the week. We'll take it. We'll take it. The TM is right below 1,000% too, but that one came down a little bit. Where is Toyota? Escondido. You guys don't know. I think Tim sent it to me. Do you guys have you ever heard of it? This is the
Toyota, after the sale, has helped sales and way to own it.
Nah, where's the ending?
78 meets Broadway, the 15.
No, that's the new one. There's the old one. It's like Toyota, Escondido. I don't know. They would even have it at the Padre games, bro. If Toyota didn't hit, I'd be complaining. Well, that's a good attitude. I think maybe just regardless, don't complain on any of them, because then that way, if you complaining, it's okay. You know, sometimes I get a little sad when they hit and then they don't hit, but I don't know. Be careful on the future option trades, I would say. Your ears, was that loud? I didn't think that was that loud. It was normal volume. The live news. I've created my own little system for the live news. So it's a lot of aggregators in a lot of ways, but there's no service or anything you could purchase for it, unfortunately, until I decide to release it. But for now, I've kept it hidden in the doldrums. I don't have a doldrum, but yeah. So youtube.com/the stock market, best place to get it. German KfW to sell 50 million shares in Deutsche Post. We bought Pfizer for Colt's sister yesterday. That was about it. And then I bought Pfizer a little higher last month right before the dividend. I gave myself an early deposit. So technically I have no deposits now until March. Microsoft's still down. Pfizer's good. Snap. Babel. That one's still holding. I don't know if there's any news with Pfizer. I think they just went up. Then yesterday we just got lucky with that UPS. But that one hit 1,000% now. That one keeps going. And then we have Fortinet plays. I went early on that one. And then again, there's a couple of plays here. There's a lot for today. And then even into tomorrow morning. A little Chicle on the SPY now. Let's see where this one takes us. Fed speakers are in 15 minutes. I think we're going to get 2 of them here. 2,000%. UPS was 1,000%er. We sold out right before. And then if you want to sell out your Toyota now, you could get under 1,000. But it was really close. It was like 900% at one point. Russian oil exports from Western ports in February rose by 0.7 million tons from initial plan after 2 apps refinery outage. And PWX dividend date in March. Is it probably after their earnings? Because they don't report till later February. Fed speakers can dump the market. I mean, even right now, Fed futures are more, they're more dovish than yesterday. UPS, we just bought it yesterday. I don't know if that was like middle of the day. And then they got to upgrade. I bought it just because for like other levels, and I was looking at the other premiums. I was looking at the premiums from the plays that we had. I made an ELF play today. That was an early earnings one. That play, I don't know if that one went up. I doubt it did, but that was just like the cheapest contract on the chain. Yeah, it's holding the same. That's why I don't think there's no such thing as a cheap contract on ELF. That's why, like, after, and then again, because once it starts, 2 standard deviations is like 220. So then anything after that, they all got a pretty penny. So we bought that before. And then I did an ARM. I did bigger on ARM so I could sell out of it. So if that one moves a little bit ahead of earnings, we could sell out. Germany's KfW says it will launch placement of 50 million shares of Deutsche Post via accelerated book build. Adobe, they could be good for the long term. They're just up a lot. So that's a good company. They've been around, but, I mean, honestly, your time was last year before the AI stuff. I remember we talked about this with the AI movement, and they went up. UPS 146, bro. That one's killer. Baba Big Red. A little bit off the top, honestly, with that Chicle in the market. Yeah, UPS killing it now. That's over 1,000%. XOM's running again. BP did good. I wonder if BP would have hit, but I feel like they were pricing in that much. Yeah, all the China plays just got some red candles, so watch if any of the other value plays come down. And then bonds higher, NYCB coming back to the low, SMCI on the low. Alpha 40, you bought the option below? Oh, nice. If you got those cheap enough, because it moved around a little bit. Snap coming down. Watch out. I think if these China plays start giving up, banks are still at the lows, but I feel like China plays have been holding up a lot of the other stuff. So watch out with how that plays out. Oh, we do need our push-ups. I'm down with some push-ups, bro. I am down. Pfizer's doing good. Alibaba. Yeah, Chad, let's do it. We're a little bit behind, but get your ass up. Get the body moving. Ladies and gentlemen, we're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile, press hot chat, X out the chat, hit the thumbs up button. Second link for the Nightly Watchlist and main channel. First link for the Scream Alerts boot camp and real estate costs. But ladies and gentlemen, we've been here for 2.5 hours. We got 4.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 2, you do 1. Can't do 1, get on your knees, do a push-up, plank the worm, anything. But get the body moving. Then optometrist recommendations. Stare at an object 10, 20, 30 feet away. Blink a few times. Relax those pretty little eyeballs. Go blink, 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 blink. Blink, 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 blink. Stare away from the computer. Then drop the shoulders. You're holding a lot of trauma in your traps. Relax those trauma traps. Okay, no one's attacking you on this fine morning. It may be raining depending on where you're at, but don't hold that trauma in your shoulders. Relax them a little bit, okay? Then chest to the sun, flex the core, tuck the hips in, and boom, baby. Looking good. Looking good. There you go, man. That's what I like to see. You look taller. You look taller, man. I know we haven't rained a lot of rain. Got to get the body moving, man. Oh yeah, relax your jaw. Go blah, 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 blah. Breathe in really deep. Go. Breathe out with your tongue out. Do the dragon breath. There you go. And then a lot of other names coming down here. And then SPY lower, bonds higher. I'm doing my resistances. Oh, man. I throw FLNC on the earnings list. What company is that? They didn't show up on my list, so I don't know. Let me see if I have a preview. I got to finish this set, though. Biden-Obama fundraiser expected in New York late March. And then SPY about to hit the low of the day. There it is. All right, one more wall stretch, and then we balance, and then we good. Then we good, baby. Good morning. Happy Tuesday. Now we balance. Now we balance. If I say that 10%, baby. Not right now, man. You're going to have to wait a little bit. Gotta wait till it get released, man. Was good, man. But say that 10% is good for you. Did you do your push-ups? I'm balancing right now. I'm getting my balance on. Mm-hmm. All right, and the SPY low bonds and back to 95. Oscar's in the money now. Mm-hmm. Court orders Ripple to disclose financial statements to SEC. You're nervous about 10 years auction? It will be big. We're going to have to find out with just everything, how it's moved on. I'm surprised it's not selling off more, so it does seem like the bank stuff is getting in there. Alibaba's tomorrow before the bell. So we still got some time on Alibaba. Okay. My bond plan, I'm still down a shit ton. But just pretty much, I mean, we were down, what, like 1,300 the first day? So I'm still down, I think, under 2,000 now. I'll double check once I switch legs. I don't want to touch my mouse, you know, for the balance. I'm getting the balancing factor in there. It's good, bro. I have a little bit of XRP from back in the day. All right, now I can switch. Let's see where the bond play's at. Bond play. I'm down 1,700. So a little bit more than day one. That was that Friday that we did it. A long end needs to come back. Remember, it just got demolished. But I think it's because of the banking stuff. Again, NYCB. Because I didn't think bonds were going to move like that today, even with everything going on. But I think bank stocks fall. Regionals fall big. I mean, last time we saw that happen, the bonds really got a nice bid. Yeah, UPS is insane. I know, we got that one early. I sold out early too, but I already thought we got a great gain. I was in the money in one day. That was like a baby earnings. Yalla. CMG for the long term. I like CMG. I think it's too expensive. Again, I'd rather get like Walmart at all-time highs, but I mean, you know, depending on CMG and how it moves, I don't know. But I like the company a lot. It's just expensive. That's the only thing stopping me from it. But I really like CMG. I think Chipotle's everywhere. I told you guys, just pull up your maps and type in Chipotle on Apple, and you'll be surprised how many locations are right around you. Target better. I like Target, but I think Target, it's kind of in a weird middle. So I think they have a lot of upside compared to like Walmart. But then, you know, they're up $140 from $100. But I'm not opposed to Target. But I've always wanted Walmart. It's stable, and then it's just holding those all-time highs. Or they have that stock split coming up. You've not eaten Chipotle in 5 years? Really? We were talking about that yesterday, how much people have gotten it. I've gotten it for, what's it called? I've gotten it 3 times in the last month. You go to Moe's. What's Moe's? What's that other one? Qdoba? Meta dividend play? Maybe. I don't know, man. I don't know. I feel like I don't know if people are going to like be buying Meta just for that 50-cent dividend, because at this price the yield is very, very low. I'm sorry, I've never been to Moe's. I didn't even know that was a place. No, I don't know. Never been. Moe's and Qdoba are better. There used to be a Qdoba. I haven't seen a Qdoba in a minute. But dude, I see the amount of Chipotles I see pop up everywhere. It's insane. I think ARM is going to be an interesting one. I grabbed a play on ARM earlier today. So we're getting ready for that earnings. But I think ARM has a high valuation, high premium, but I think they're firmly in that discussion with the whole NVIDIA, AI chips, and all that good stuff. So I like them for now. No Fed speakers yet. The Fed speakers are in 2 minutes. So let's see. I think we have Fed Logan or Mester coming up. FOMC member Mester at 12. We're just flushing, kind of. I mean, we're break even. I think today is kind of the day of stability. Bonds chilled out. The China stuff helped out a lot too. Let me see. Symbiotic, that one was, I think we knew it was going to move, but it was just pricing in what was already there. So I don't know if there was a follow-up play. I didn't look. I looked at the Palantir ones, but that was about it. Mester expects Fed to gain confidence to cut later this year. So there's her first Fed Mester comment. She says expects Fed later to gain confidence later in this year. So she's on the back end. That's not as bullish. Watch what rate cut odds do. Honestly, rate cut odds are still much more bullish or dovish than yesterday. Bonds got a little chicle. Fed can lower rates later this year if economy performs as expected. Yeah, Fed Mester, monetary policy in good place to assess what's next. Fed Mester, when Fed rate cuts will likely be at gradual pace. And so later this year, if economy performs as expected. Fed futures a little hawkish off that. Bonds came down a little bit, and then now they're still holding up there. I don't think it's that bad. Fed Mester, if inflation doesn't fall, Fed can maintain current policy. Inflation must be moving sustainably lower to open rate cut door. Fed Mester expects to move back to 2% inflation over time. So she's a little hawkish, but it's not like the market is getting like hawkish on it, if that makes any sense. So she definitely doesn't sound as bullish as everyone else, but she's not, she's still kind of like Powell. Doesn't have to be the most bullish, but still low-key talking about rate cuts just at a later time than not. And then again, like I say, in the Fed futures, little reaction. As long as the bonds don't give it up, you're there. Fed Mester sees growth in employment moderating this year. Fed Mester must be attentive to risk labor market will cool faster than expected. Recent news on inflation has been encouraging. So that's some of her more bullish, dovish side of all of it. Toyota's dropping now. Is Disney coming up? Disney's back up to the high. J&J on the high. Pfizer on the high. NVIDIA on the low. Fed Mester can't be sure. Last stage of move to 2% will be swift. So far, Red Sea. Oh, what's this? Will be swift. So far, Red Sea trouble hasn't rattled supply chains. It would be a mistake to cut rates prematurely. Fed Mester, possible inflation may be more persistent than expected. Wage gains still too high to getting 2% inflation. Higher productivity levels may change wage inflation calculus. Interesting. So again, I think she's a little bit more hawkish than at least even what's his name, Goolsby yesterday. She'll probably be more hawkish than Harker. But it still has some of the rate cuts sprinkled in on it. Fed futures and bonds not moving too much off of it, though. My hernia is good. Why do you keep asking me about it? It's like 3 years old, man. Like, it's good, bro. It's good. It's been great. I'm looking for Fed Mester right now. I'm trying to... Yeah, warns against cutting rates too soon. That's it. So I don't know. A lot of it pre-written. I'm not bad, Loretta. And then who do we have next? You have Kashkari should be coming on in an hour.
When the pandemic hit, the economy shut down in March 2020.
So again, everybody just got that. They got that from her pre-written statements. Again, I'm giving her a slightly hawkish tilt, but the reaction is still very minuscule for now.
Damage to the economy. The economy began to reopen in May 2020 when public health statistics began to improve, but it wasn't business as usual. The pandemic had affected global supply chains, the supply of and demand for labor, and the composition of household and business spending on housing, goods, and services. Imbalances between supply and demand in both product and labor markets led to significant upward pressure on prices, and inflation began to rise in April 2021. Russia's invasion of Ukraine in February 2022, which is an ongoing human tragedy, added to inflationary pressures, spurring higher prices for oil, food, and other commodities. In 2022, headline inflation reached levels not seen in 40 years, running 7 to 9%, depending on the measure. And in response, the FOMC began raising its policy rate, the federal funds rate, in March 2022. And over the 2 years since, the committee has significantly tightened the stance on monetary policy by raising the Fed funds rate by a cumulative 5.25 percentage points. The Fed's also reducing the size of its balance sheet by allowing assets to roll off in a systematic way, according to the plan we announced in May 2022. Now, the tightening of monetary policy has led to a broader tightening of financial conditions over time, and in response, aggregate demand has begun to moderate. In addition, the supply side of the economy has been healing. Supply chain disruptions and bottlenecks have improved significantly, and firms have invested in diversifying their supply chains, making them more resilient to disruptions. Growing tensions in the Middle East might undermine supply chain improvements, but our business contacts tell us that so far there's been only minimal effect on their operations, and that they expect the increase in shipping costs through the Red Sea to be temporary. But this is a risk worth watching. Now, the pandemic had profound effects on the labor markets, but the labor market is normalizing. People have returned to the labor force over time, and the labor force participation rate of people aged 25 to 54 is now slightly above its pre-pandemic level. Over time, the imbalances between supply and demand in both product markets and labor markets, which help fuel high inflation, have lessened, and inflation has moved down. This disinflation has happened even as the economy has remained very resilient, with both economic growth and the labor market outperforming relative to expectations. And I'm sure you'll recall many CEOs and economists thought that the growth last year would be below trend. I was one of them. The Fed forecasts were below trend. But the economy didn't agree. Real GDP growth in the fourth quarter stepped down.
EIA numbers just came out on oil.
In the third quarter, but was still a solid 3.25% annual rate.
Bro, like that noise of
the
food being eaten, that's really loud. It is a dinner,
which is above
but that's insane. Somebody is like going in on their plate right now.
Now, the
if you can hear it.
change in firms' inventories was expected to subtract from
you
growth.
Hear that in the background? Like, think about that.
But instead, it made a slight
like if you're eating somewhere and you're just making that much noise, with like you're like someone is going, like they're really enjoying that.
Was quite strong.
Like that doesn't happen by accident.
Consumer spending makes up about 70% of GDP.
Yeah, super loud.
Strong
I don't know why.
Growth and healthy balance
I think the food is just amazing.
It's
the only logical explanation.
Spending, and the savings rate has moved below its pre-pandemic level, reflecting that strong spending. So it's interesting that despite the economy's strong performance, including strong consumer spending, until recently,
it sounds like
Benihana's of consumer sentiment.
I bet you they got a hibachi grill out there.
Most people were not very happy about the economy. And I believe that partly reflects the fact that even though inflation has been coming down and wage gains have been high, many people's wages have not kept up with inflation. When inflation persists at levels above our goal of price stability, the price level is moving up faster than we'd like. And households and businesses have to pay those higher than expected prices, higher than desired prices. With inflation moving down, wages adjusted for inflation have begun to move up, and that's helping to close the gap between the cumulative increase in inflation and the cumulative increase in wages. And that may be partly why consumers are feeling better about the economy now. I expect household spending to moderate somewhat this year. In the wake of high prices, many families, especially those at the lower income families, have spent the savings accumulated during the pandemic. And there's been an uptick in credit card debt, suggesting that some households have exhausted their ready cash balances. Delinquencies on consumer loans have also edged up, although they are still at low levels. Now, the tighter financial conditions we have restrained investment in housing and business spending. Businesses slowed their spending on equipment and software last year, and it's expected to continue to moderate given restrictive credit conditions.
Slight increase
the regional
from her,
manufacturing
a
surveys
little hawkish, a
from the
little
Federal
bit more,
Reserve
but still
Banks
overall
and the
dovish
National
on the day
ISM
compared to
survey
yesterday.
indicate weaker
Very small
manufacturing
reaction, though, from
activity.
her. Not
Now,
anything
the
there.
4th District manufacturers tell us that their order backlogs are diminishing. So that's consistent with slowing activity in the manufacturing sector. In the housing market, residential investment declined in 2022 and was flat last year. Sales of existing homes are at low levels, but sales of new single-family homes were fairly resilient given the longer-term shortage of available housing. Now, the shortfall in housing supply has kept home prices relatively high, especially given where interest rates are. But rents, especially for new tenants, have moved down, and that should lead to a continued tempering of inflation in housing services. Last Friday's labor market report for January shows that the labor market has been remarkably resilient. Payroll job growth rose by about 350,000 jobs in January. And even if some of that reflects seasonal adjustment issues, it was an unexpectedly strong reading.
Oh, she's talking to jobs
In addition,
report.
job numbers for October, November, and December were revised up. The unemployment
So how
rate
does
has
that
been
make you feel?
3.7% over the past 3 months, near a 50-year low. So that's really strong performance.
Yeah,
Now, if you look at other indicators, they point to some moderation in the labor market. Our contacts tell us that except for the healthcare sector, it's easier to hire than it was a year ago, and that they're getting more applicants per job opening. The pace of job quits has also declined since peaking in 2022. Now workers are quitting
really
jobs
strong.
at about the same pace as before the pandemic, and the number of job openings has been declining. There are now about 1.5 openings per unemployed worker.
NVIDIA
That's
keeps
above the level we
flushing.
saw in 2019,
Again,
another
bonds are
period
still
of
kind of
strong
holding
labor
up
market
here.
conditions.
A
But
lot
it's
of
come
random
down a
plays
lot
moving both
since
up and
March
down. High ticker just
2022
kind of
when we
balanced
began to
out.
tighten
Bristol
monetary
Myers again on the
policy.
high. Got the VIX
And
going
on the
up.
supply side, as I mentioned, the labor force participation
Dollar's
rate
still
of
lower.
workers
It's bad
aged
down by a quarter
25
today.
to 54
SPY
is
going down there
normalized.
though. Tesla gave up
Now, as
some
the
of its
demand
gains.
for and the
Apple's still
supply
in
of
the green.
workers have started to come into better balance, wage growth has moderated. Firms in our district are expecting wage increases to average about 4%
Oil
this
starting
year,
to run up again. You
down
just had
from
EIA
5%
stuff.
a year ago, but still above pre-pandemic levels. The employment cost index rose at an annualized rate of 3.5% over the last 3 months of 2023, down from about 4.75% in the first quarter of last year.
FLO,
And the
UNH,
gap between
LMT,
wages of
Abbott all
job
on the high.
switchers and job
Again, you're getting like
stayers
value
in the
stocks
Atlanta
still
Fed's
pumping.
wage growth tracker
The other stuff
narrowed
either
last
down
year
or just hanging on.
to about its average over 2015 to 2019. So that's another sign that the labor market is coming into better balance. Now, current estimates of trend productivity growth suggest that the current level of wage growth is still a bit above the level consistent with 2% inflation. But the strong recent readings on productivity
Arms selling off.
raise the possibility that trend productivity growth has moved higher than what it was before the pandemic. The scarcity of workers during the pandemic gave firms a greater incentive to do more with fewer workers, and many invested in automation.
Ford on the high too.
New technologies such as
Again,
generative
Toyota
AI
trying to
hold the
move.
promise
SPY
of
little
increasing
green at the bottom.
productivity over the
I
medium
think you
to
just hit a
longer
new
run.
low.
If so, then wages would be able to rise at a faster
Slightly
rate
under
and
the
still
low,
be
or right above the
consistent
low
with
of
price
yesterday.
stability.
Pfizer's still going.
At this point, though, I suspect we will see further moderation of wage growth, with a gradual slowing in job growth and an uptick in the unemployment rate over the year from its very low level. Now, while inflation is still above the Fed's goal of 2%, the news on inflation is encouraging. Inflation moved down faster than expected last year, even as the economy remains strong. Measured year over year, as of December, total PC inflation is 2.6%, and core PC inflation is 2.9%. And over the past 6 months, the levels are even lower. Other measures of inflation, including the median and
FAA vows
trim
to
mean
hold
measures,
Boeing accountable
have
for any
also moved
safety
down from their
violations.
peaks. Now, when you ask retailers in the 4th District, they tell us
Crude
that
output hit
consumers are
record
now
13
more
million barrels a day in
price-sensitive
December,
than they
EIA.
have been. And many of our contacts across sectors have noted that after making price adjustments very frequently over the past 2 years, they've now reverted to their usual pre-pandemic practice of setting prices once a year, a sign of easing price pressures. The largest declines in inflation have come in goods prices. In fact, core goods prices have been declining as they were before the pandemic. Inflation in housing services measured by rents and the imputed rents for owner-occupied housing, and inflation in core services excluding housing, which makes up about half of the consumption basket, have eased less, but they have also improved over time. Now, there are reasons to be cautious in assuming that last year's rapid pace of disinflation will be maintained as inflation gets closer to the 2% goal. While restrictive monetary policy has played an important role in moving inflation down, supply-side adjustments were also important. Now that pressures on supply chains are approaching normal and the labor market is coming into better balance, we should not count on as much help from the supply side as we saw last year. Still, while inflation may prove to be more persistent this year, my baseline forecast is that under appropriate monetary policy, inflation will continue to move down over time to our 2% goal. Now, anchored inflation expectations are an important component of that forecast. Median and longer-term inflation expectations remain reasonably well anchored in a range consistent with the Fed's goal of 2% inflation. And 1 year ahead inflation expectations from the University of Michigan and New York Fed surveys have also moved down, although they're still about 1/4 to 1/2 percentage point, respectively, above their 2019 averages. Continued progress on inflation will help ensure that these expectations move down to our goal. And that progress depends on appropriate monetary policy. So as I'm sure you know, at its meeting last week, the FOMC decided to maintain the target range of the Fed funds rate at 5.25% to 5.5%, and to continue running off the Fed's security holdings. The FOMC judges that the risks to achieving its employment and inflation goals are moving into better balance, but it remains highly attentive to inflation risk. And the FOMC does not expect it will be appropriate to reduce the target range
now she's just reading
until
the
it's gained greater confidence
You
that
sound like
inflation is
Powell.
moving sustainably toward 2%. Now, in making its monetary policy decisions, the FOMC is always guided by its strong commitment to achieving its congressionally mandated goals of price stability and maximum employment. When we began this tightening cycle, inflation was far above our goal and labor markets were strong. So it was clear we needed to focus on the price stability part of our mandate. Now, with inflation moving closer to our goal, we need to balance the risk to achieving both sides of our dual mandate when determining the appropriate stance of policy. It would be a mistake to move rates down too soon or too quickly without sufficient evidence.
So I think this
that
is part of the
inflation was on a
pre-written. I think Mark had already
sustainable and timely
responded to
path
this.
back to 2%. Doing so would undermine
futures
all
are
of the
moving.
good work that has gone into
Bonds
getting
are at the
inflation
low
to
of that
this
statement
point.
coming out.
On the other hand, if year-ahead inflation expectations continue to decline, maintaining the current level of the nominal Fed funds rate for too long would effectively be a tightening in our policy stance, which would pose an increasing risk to the maximum employment part of our mandate. Risk management will be the hallmark of monetary policy decisions going forward. Our job is to calibrate monetary policy to the evolving outlook and the risks around the outlook so that inflation returns sustainably to our 2% goal and labor markets remain healthy. My baseline forecast is that output and employment will moderate this year and inflation will continue to move closer to our 2% goal over time. But there are a number of risks around that forecast. Heightened geopolitical tensions have potential implications for financial markets, oil
NYCB
prices,
new
and
low.
global demand and supply.
Then
A
Bristol
continued
Miles
easing
stir
in
up.
financial conditions could spur activity, leading
Disney
once
new
again
high,
to
too.
imbalances that fuel inflation. The stress
PayPal
generated by the
pop
bank
in.
failures last March has subsided. Many banks have diversified their sources of liquidity,
Oh, she's
making
talking
them
banks.
less vulnerable.
And new low on
But
NYCB,
stress
as you
could
say.
come
this
again to banks that continue to
52-week
rely
low
on uninsured
NYCB, lower than
deposits
year
for their
2000.
funding while having sizable exposure to CRE assets that will need to be repriced at higher interest rates. Now, monetary policy transmits to the broader economy by affecting overall financial conditions, but the magnitude, speed, and duration with which it affects the economy vary with the nature of the shocks that have hit the economy and other aspects of the economic environment.
SPY's
So while
still
labor
working away
markets
a
are
little
currently
lower. Again, you
strong
still have names on the
and are
upside,
expected
but
only to gradually
50-50, red and
moderate,
green.
we need to remain attentive to the possibility that conditions could deteriorate faster than expected. On the other hand, the strong output and employment growth could be an indication that the neutral rate of interest, which rose during the pandemic, might remain high.
SPY getting a
which would mean
Raoul about to
restrictive
break the
policy
low of
may
the
be
day.
needed for longer to achieve our goals of price stability and maximum
4934 is the low of the day, so a little bit more.
No matter, monetary policy is in a good place from which to assess and respond to these risks of the outlook. The current strength in labor market conditions and the strong spending data give us the opportunity to keep the nominal funds rate at its current level while we gather more evidence that inflation truly is on a sustainable and timely path back to 2%. This is better than finding ourselves in a situation where we begin easing too soon, undo some of the progress we've made on inflation, potentially destabilize inflation expectations, and then have to reverse course. If the economy evolves as I expect, I think we will gain that confidence later this year, and then we can begin moving rates down. My base case is that
Disney
we'll do
could just
so
be
at a
pre-earnings.
gradual pace
SPY's still
so that
going
we can
lower.
continue to manage the risk on both sides of our mandate. Of course, if downside risks materialize, we would have the opportunity to move rates down more quickly, just as we raised rates more aggressively than usual to combat high inflation. Or if inflation appears to be stalling at a level above our goal, we'd have the opportunity to maintain a restricted stance for longer. Our policy actions will depend on how the economy and the risks actually evolve. When our goals of price stability and maximum employment are achieved, the economy will be in an even better place than where it is today. So let me conclude with some remarks about the Fed's balance sheet.
Oh, quantitative
As Chair
tightening.
Jay Powell indicated at his press briefing last week, the
This-
FOMC will be
this is actually
discussing
big.
reducing the pace of the runoff in its balance sheet
Again, banks are
assets
dumping
at
now,
its
so
next
is a little
meeting
bit
in
more
March.
of the SPY. But again, a
Since
couple of those
June
value names are
2022,
still on the green,
Fed's
even
been allowing
MDT.
maturing
You got EW
treasuries
after the bell.
and agency mortgage-backed securities
This
to
could
run
be
off its
interesting.
balance sheet at a fairly good clip, according to the plan announced in May 2022. The Fed security holdings total about $7 trillion, and they've declined by about $1.3 trillion since the runoff began. We're implementing monetary policy via an ample reserves operating regime, in which reserve levels are ample enough that control over the federal funds rate and other short-term interest rates is executed primarily through the Fed's administered rates. And those are the interest rate paid on bank reserves, the interest rate offered on overnight reverse repurchase agreements, or ONRRPs, and the primary credit rate on discount window loans. Now, under this framework, active management of the
Disney
supplier
again.
reserves isn't needed. As assets run off our balance sheet, Fed liabilities move down. So far, the balance sheet runoff has resulted in a reduction in ONRRPs, with balances currently under $575 billion.
Josh Brown sold PayPal.
Rather than a reduction in reserves.
He's just selling all the pumps that they pump.
In the aggregate, reserve
I
balances
guess
are
that
about
makes sense.
$3.5 trillion,
Boeing on the high.
which is about 15%
Disney again
of
too.
banking system
SPY
assets.
a little bit off the bottom.
Now, what constitutes an ample level of reserves is uncertain. It depends on the banking sector's demand for reserves, as well as the distribution of that demand across institutions, which will evolve over time. The September Senior Financial Officer Survey indicated that for most banks, their reserve levels are above their preferred level of reserves, and money market rates and spreads suggest little in the way of funding pressures. In addition, the Fed's standing repo facility provides a backstop against such pressures. So the current level and distribution of reserves are more than ample. But as balance sheet runoff continues and ONRRP volume reaches a minimum level, reserves will begin declining too, and more redistribution of reserves will need to occur across institutions. As our balance sheet reduction plan noted, the FOMC will slow and then stop the runoff when reserve balances are somewhat above the level it judges is consistent with ample. And that's going to help ensure that we can continue to reduce our balance sheet to its efficient size for effectively implementing monetary policy and move toward our long-run goal of holding primarily Treasury securities, which will minimize the allocation of credit across sectors of the economy. Now, I want to note that the runoff pace pertains to how we implement monetary policy. It's not about the stance of monetary policy. Our main tool for monetary policy is the Fed funds rate target, and balance sheet runoff can continue even after we begin to lower the funds rate. So that concludes my prepared remarks. I want to thank you for your attention. I want to once again thank the bankers for doing all you can to support a strong economy.
Thanks, bankers.
And I look forward to our discussion.
Is she going to have questions? Oh. Hold on. I didn't prepare. Yeah, we had most of that in the beginning. Bonds and stocks didn't really move much. I think they're going to do a Q&A. I hope. This dude's tall. Yeah, they're going to do a Q&A. Nice. Nice. Thank you, baby.
Great, Loretta. Thank you for your remarks.
Wow,
and I would be remiss if I didn't thank you for all you do to support the industry and ensure we've got a good, safe, sound banking system here, certainly in Ohio, throughout the 4th District, and the partnership that you have with Kevin Allard and his team at the State's Division of Financial Institutions. So thank you. Once again, a reminder, everyone, please take advantage of the microphones we've got available here to ask your questions.
Starbucks still going.
I've got a stack of questions, but I really want to hear what's on your minds as well. Out of nowhere. So I know some of you aren't shy, so feel free to make a beeline for one of those microphones while I ask a couple here. First of all, hard to believe you've been in this role for a decade already now, Loretta, and what would you say is your proudest moment, maybe?
I really feel it's been a real privilege to lead the Federal Reserve Bank of Cleveland, and I guess one of the proudest things I am is the great staff we have at the Cleveland Fed. No matter what area of the bank you look at, whether it be community development, economic research, the supervision and regulatory function that we have in the Fed, we do play an important role in payments, providing payment services to the U.S. Treasury. Every part of our bank, right, the staff is just first rate. So I'm very proud of the staff of the Cleveland Fed. One of the things I've tried to do is sort of pull back the curtain a little bit and make sure that I'm out and about in the district. Partly it's self-serving because I get a lot of good information about what's happening in the economy when I get to talk to people who are actually doing what the work of the economy is, rather than sitting and looking at data. It's really good to hear from a number of constituents, whether it be community development area, whether it be bankers, whether it be business people. And that's been instrumental in sort of making sure that we really understand what's going on the ground. And at the Cleveland Fed, we do a lot to try to make sure we have that reconnaissance.
Said there was a war headline here on this pop. Oil's down. You literally optimistic about a Qatar prime minister said he's optimistic about a deal with Hamas.
The point in time issue. So again, I'm very appreciative that I had the chance to sort of meet with the full group of people who make the economy run.
Awesome, thank you. Anyone? All right. What does the future of community banking look like over the next 10 years?
Deal. Oil down, stocks
you guys
up.
Should be telling me that. Look, I am a big advocate of the fact that the banking system is strong because of the diversity within banking. And personally, I think diversity is important in everything we do. I think diversity of views on the Federal Reserve is important. I think diversity of different backgrounds makes our work do. I believe that about banking too.
It's getting it back into the earnings
Community banks really
gap.
serve their communities. They do relationship lending, which is crucially important. They've been actually were instrumental in making sure that households, businesses, and communities overall got through the pandemic, and I think that'll continue to happen. I think there are some challenges that the community banks face. I mean, certainly every organization faces, potential, cybersecurity issues, technology can help in that, but those technology costs, right, add to the bottom line. So I do think that probably the size of community banks will have to continue to get a little bigger than where they are currently. But again, right, the vital role that community banks play in the economy, I don't think can be understated. It's very important that we have community banks serving underserved communities, underserved people, underserved households, and I think that is the future, right, is to continue to have a strong industry. As I mentioned, proper risk management is important, not only for individual institutions, but for the whole health of the industry. And I think that's kind of the future I see.
Good, and thank you for that. I certainly feel bullish overall for the community banking industry. We understand consolidation has always occurred, and certainly that will continue. I think the question is at what pace and what are the drivers. If I could press you to get a little more granular, is there a size at which a bank is just too small to survive today?
I think that it's going to depend on a lot of factors. I don't think you can put a pin in it. I do think it'll have to be bigger than what it was 10 years ago, 20 years ago. Just because if you think about what's happening, right, the costs of actually running a bank are higher, right? And you have to distribute those costs over assets. And so I think it'll be higher. But again, that doesn't mean that we won't have a distribution of sizes of banks in this country. And I think that distribution has really served the country well, and I don't see that going away. I don't believe that some of the hype out there, like, well, we're only going to see only very, very large banks. I don't think that's where we're going.
Sounds better than Powell.
How about in terms of one of the pressures that we continue to hear a lot of, and even more so, increasingly it feels like the prudential regulatory agencies are focusing on what services banks should or should not do, and then whether fees can be charged. How does that correlate with the bank's safety and soundness if they can't charge fees or need to decrease fees on critical services?
That candle real on NYCB?
Yeah, so I don't think that's the aim of the regulator, at least from the Fed's point of view in terms of supervision and regulation. What we're trying to do is make sure that the banking industry, individual institutions, as well as the overall industry remains healthy, because we really truly believe that a healthy banking system is important, plays a vital role in keeping the economy strong. And so the perspective is, I think focus on the right things, which are proper risk management, making sure funding, sources are robust and resilient. I mean, I think about what happened with the supply chains in firms, right?
Don't worry.
When they got tight and there were disruptions, they diversified,
framework.
Right?
We'll
their
discuss with the Israeli
of
government on Wednesday.
Supply for their goods that they were making. Similar banks now, we're seeing them diversify some of their funding sources given the stresses that happened last year. So those are good, I think, regulatory perspective. That's a good move. So again, I don't think the perspective is to try to restrict banks. I think it really is the focus is on good management, being attuned to risk, making sure that you have robust systems and you're resilient, because no one can be prescient about what shocks are going to hit. What we can do is make sure we're prepared so that we can get through those shocks.
Still no takers. All right. I can go all day, folks. As a fellow economist, I can geek out on this stuff, so I'll just keep rolling here. Going back to monetary policy, with the emergence and presumably proliferation of cryptocurrency, how does that play into the decision-making?
Well, it really doesn't play into the decision-making of monetary policy. I mean, right now, I think people think about whether it will ever play a role as a payment, service. I think right now it's a speculative asset, and that's fine. We have other assets like that. I would say that some of the technology behind it is very interesting. And when central banks, there are a number of central banks that are investigating central bank digital currencies, understanding the technology behind it, and some of the technology behind cryptocurrency is certainly on the radar screen. As you know, in our country, right, we're not going to do a central bank digital currency unless Congress and the administration tell us they want us to do that. But we still need to be prepared to understand the technology. So we're doing some kind of technological, I wouldn't call it sort of a project, but it is sort of doing work so that we really understand the technologies and can understand sort of the impact on the economy. And that's kind of where we are on that. But it doesn't really feed into.
Yeah, Hamas dealt with proposal, positive spirit towards ensuring complete ceasefire, lifting siege on Gaza, and completing prisoner exchange. So again, that's been this little bounce that we've gotten here. Nothing to do with Mester.
As far as when it comes to banking issues, is there anything in particular that keeps you up at night worth sharing with the crew here today?
I mean, there are a number of things that we saw last March in terms of liquidity. I think, there's a lot of work going on in the Federal Reserve to try to make sure that banks are able to use the discount window, their position, and we've made a lot of progress on that in terms of banks now have the legal documentation in place, and they also have sort of collateral in place so that if they need to, they can use the discount window. And that was a concerted effort across the reserve banks to make sure that that happened. I have the privilege of being the chair of the banking of the payments committee at the Federal Reserve, which oversees payments across the Federal Reserve System. And one of the things that are under that committee is discount window lending. And so that's been an effort, and I think that'll continue to be true. On the other hand, I think, we were talking before, I think cybersecurity issues, and I would say operational risk in general, making sure that you're resilient to those kind of things, because that's not going to go away. I mean, and it's not really a risk. Those risks are actually being realized. Right? We have a number of cases, right? So just making sure that you're resilient, and can your systems recover? Do you have data maintained so that you can recover from an attack? And that's not just for banks, that's for all firms, including the Federal Reserve. In our payment services, we've done tremendous work to ensure that our payment services are resilient. And indeed, FedNow, which I know that you know about, our instant payment service, which launched in July, another thing I should have said I was proud of, that we were able to do that project, and I think that could be transformative for the industry. I think those kind of things, we built it to be resilient, and that was, it's a cloud-based service, and it was built to be resilient. So I think that's got to be a focus of every institution going forward.
Great, thank you for that. Speaking of the discount window, am I picking up some perceptions correctly that the current administration would really like to see a greater utilization of that source as opposed to other funding sources out there?
Well, it's been an issue for a while that it seems to have a stigma attached to it. And of course, we would prefer it not have a stigma attached to it. We are there as a lender of last resort. We lend on good collateral, of course. But we don't want banks to shy away from that source. If you know, like the Federal Home Loan Banks, their regulator, FOFA, has come out and said, Federal Home Loan Banks aren't really a lender of last resort. And the Federal Home Loan Banks would tell you the same thing. So again, we're trying to make sure that banks are understanding that we do stand as a lender of last resort, and that they don't shy away if they need a discount window loan. But they have to be prepared to use it, and that's what we've been working on.
Okay, thank you for that clarification. I know we're big fans of the Federal Home Loan Bank of Cincinnati in particular. Appreciate Andy Howell being with us here today.
Why?
And the great work he and his team do.
For emergencies.
I do not see anyone making their way to a microphone. Loretta, any parting words you'd like to share with us today?
Damn, nobody has a question?
No, just thank you
Come
again
on,
for all you're doing. It takes a village, as they say, and I think we're in it together. I sometimes worry that the banking industry gets maligned in some ways, but I have to tell you, that it was instrumental working with the bankers during the pandemic to make sure that the economy stayed on an even keel. And if you think back to the beginning of the pandemic and where we've come, I don't know whether anyone would have predicted we'd be in this situation that we find ourselves in. So as I said, we're in a good place. And when we get back to price stability,
not
with
one
healthy labor
person
markets,
wants
we'll
to
be
be
in
like,
an
yo,
even better place.
you ain't going to cut
Absolutely
in
not.
March.
Like that perspective, and
Not
I
one person in the
totally
crowd.
agree. Just the resilience of the industry overall is incredible,
Y'all
and
guys
we need to
issue
make sure
loans?
we're doing a better job at getting that word out. Certainly, the banks in the OBL membership, thanks for all that you do in your communities. It's crucial work, and you are strong and really doing meaningful things there. So. With that, I will thank you, Loretta, for being here today.
Thank you, Loretta.
Thanks
I
for
love the name
your
Loretta,
service to
though.
the industry, continuing to keep it strong. And certainly was sad to see Steve Jenkins retire last week, but was glad to have one more opportunity to shake his hand and thank him. Definitely, whether it was the events of last year or the pandemic, we really were grateful for his steady hand and having good access with him and being able to tap him as a resource. So thanks for your leadership. If everyone would please join me in thanking Loretta Mester.
I'm shocked nobody had a question. That's crazy. I think she's a voter, too. All right. Well, we got Kishkari in 20 minutes now.
All right.
All right.
Still on?
He's like, let's fucking party now. Now we got that out the way.
Can y'all hear me okay?
Y'all ready to turn
I'll
up,
just see how this is not
Ohio?
on.
Where my bakers
Again, I
at?
wanna thank you, Loretta, for your
FHLB,
time.
come on, put your hands up.
Ben Affleck said in good.
Yeah, they cut it off. See, they was there about to turn up. He came in there. He was ready to get started, man. He was ready to go. That's crazy. I'm surprised nobody asked her a question again. It came off a little bit more hawkish, but, not hawkish enough to really move anything. Again, bonds are even back up since the first statement came out. Fed futures are just slightly a little more hawkish than where they were at the beginning of the day, but overall, Fed futures have pulled back a little more dovish today in general. A lot of stability. I mean, you're barely moving. SPY's barely up or barely at break even. Dow is barely down. Russell and Dow have been doing good, but today's kind of just been stability day, and that's a word to China. Balancing some things out. Disney, a big pop above 98. Bro, Disney has not been here. It's came close to 98, but it hasn't had 98 here. And last time Disney was at 98 was May of last year. It's already February. Yeah, Disney's getting some steam there. Again, we still have an earnings play, a pre-earnings on Disney that's up. So they report, but you have just under 100% on that one. My goodness, where did the ups go? That one was a fire play if you still held that one. But good all around. We didn't do push-ups yet for 12:30. Let's get them popping, baby. Market's going up. You're here. And I hope you know we're live Monday through Friday, 30 minutes before open Chattadonia. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watches and main channel. First link for the Scream Alerts boot campaign. Real estate costs. But ladies and gentlemen, we've been here for 3.5 hours. We got 3.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, you do 4, 3, 2, 1. It doesn't matter. Get the body moving and get some exercise in there. You've been here for a while. Then optometrist recommendation. Stare at an object 10, 20, 30 feet away. Go blink, 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 blink. Blink, 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 blink. Oh, relax those pretty little eyeballs. Feels good? Good. You needed that. Now drop the shoulders, relax the shoulders, no trauma traps, chest to the sun, flex the core, tuck the hips in, and then boom, baby. You're looking good. You know that? I hope you know you look good right now. You're looking taller. So I'm talking about, man. There you go. Not wrap behind your computer chair. Stop wrapping those legs behind there. Legs in front, man. Then relax the jaw. Breathe in really deep. Go. Breathe out with your tongue out. Do the dragon breath. Go. There it is. There it is. There you go. I need to get my resistances. We got a little bit, man. The day's flying by low key, man. A lot of stability, a lot of up and down. Not as crazy as moves. The bonds moving all over the place. We'll take it, man. We'll take it. ETA for PHILO. I could shoot around 10. I could shoot around 10 p.m. 10 a.m. I meant. What am I saying? 10 p.m. Because I already have my earnings previews ready to go too. So we're ready to go for earnings as well. We're locked and loaded. We even have a couple of early earnings plays. We have the earnings for today. We're going to have a lot. I think, didn't they say NTSB something at 2 p.m.? Oh, there it is. TLT, new high, back at 95. There it is. Resistance done. Wall stretch, and then I'll be back. We'll be back to balance. Echo. Oh, man. There you go. A little stretching, man. A little stretching, a little movement, a little physical activity. It only helps you, baby. All right, now we get the leg balance, and then we good. And then we good, baby. So SPY back to VWAP. I feel like we've been dancing around VWAP all day. Then again, any of the names that have been running, bonds are doing goods, even with the banks bouncing a little bit, but they're still at the lows. Not bad. Bank of Canada, Macklin said years of supply shortages. Recent newcomers mean house prices have declined only modestly with higher rates. Says shelter inflation now the biggest contributor to above target inflation. Well, duh, Canada. You guys have had crazy prices for a long time. Yeah, Disney above 98, though. It's a big level. Bonds just hit. TLT hit 95. Came down a little bit. I think Kashkari is at 1 p.m. And then we have like Fed Logan and then Fed Harker, I believe. But Kashkari's a voter. He's interesting. He spoke the other day. And then Fed Harker, he's usually bullish. So all Fed speakers, but again, even Loretta was kind of hawkish. It didn't cause too big of a reaction. But then she, they're all still, they're hawkish by saying rate cuts by the end of the year, but they're still all implying rate cuts. Leg one done. Next one there. We're trying to do calculus, but can't stop staring at the charts. Graduating N. Apply an apple, baby. Let's go. Relax. The charts ain't doing much. I mean, if news comes out, we just got to be here for the earnings. It'll be good, man. Finish the calculus. Intel gonna pop. We will see. The ARM play, I think they moved around a little bit. But ARM, I went early. So I went early on the Fortinet as well from yesterday. But ARM, they're going to be on Wednesday. So we're actually not going to go over their preview today. But I decided to get some. There's a lot for today, though. There's a lot of different plays out there. I think you might like them. Again, from tonight and then into the morning. Going to have a lot of opportunity, my friend. And then bond auctions tomorrow at 1. We have a bond auction today on the 3-year, but I don't think that's going to make us go too crazy. I clapped on Eli because you held, but I got time. Didn't you have it early, though? I feel like you got the bigger run-up. Yesterday was crazy. Maybe Eli Lilly. No, they did good. I just think Eli Lilly ran up a lot. So, again, I think Eli Lilly had their earnings move yesterday. Came out with good earnings, gapped up, and then just sold off the rest of the day. But I don't think it's anything bad with Eli Lilly. I just think they ran up. Like, they ran up tremendously. JP Morgan red on the day. Other big banks barely red. Yeah, JP Morgan was green. Let's see. Some of the other banks are still green. I know Citi was dead all day today. Only down a quarter. I thought they were down more. Bap. You got hit by the tech layoffs? No way. Really? Didn't you work there for years, though? Oh, no. The tech layoffs, fine. Somebody was just saying that yesterday. They said they work in tech and everybody's been getting laid off. Oh, man. Is that a pattern? Stocks run before earnings? Sometimes it just depends. It depends on the report. So I wouldn't say it's a guaranteed thing, but I mean, here's the deal. If a stock runs up a ton before earnings, like a big amount, and the earnings aren't like blowing it out of the water, then it probably already had its earnings moves. But usually it just depends. Like some names like Netflix, they had a run up and then they killed it and then they kept running up afterwards. Very wild. You were 6-7 years. The company's just out of money. We were pretty small. Dude, no way. That's crazy. Yeah, I was saying, you've been there for a long time. Usually they like lay off all the new people. When do you like, how did they lay you off? Like, when do you get to? So sell NVIDIA calls, time. Can you stop typing to me in caps? I don't know. I can't have this conversation in all caps. Because it's like, bruh, so sell the NVIDIA calls. It just depends. So NVIDIA still has a couple of weeks, but if NVIDIA is still up 10, 20%, then I probably just wouldn't play the earnings. But, you know, any of these plays that are like up a lot, I don't really like, I haven't sold premium on them just because there is that risk where if it goes crazy, then there you go. Last day Friday, then 2 months of severance pay. Dang, bro. That sucks. Dude, you've been there forever. I know 6 years isn't forever, but that's a long time. Man. The whole company is going out of biz? Are they going to give you, like, references anywhere? Well, let us know how it is, man. Because I've been seeing a lot of people, everyone says the job market is fake. Have you guys seen that? There's, like, one guy, and he's, like, there's, like, two different guys, I think. Like, some of them have been interviewed, and then they make, what's it called? They said they make videos, and they're like, I've applied for 1,000 jobs and haven't gotten any. You've been saying that since 2015? Well, there's like people out there, they're like literally they've like applied to like 800, 1,000 jobs and haven't gotten a job. You applied for 2,000 and haven't gotten any? Like, actually, you should go. They'll interview you, man. You agree 100% from what I've seen? Called ghost jobs. Yeah, we've talked about that where just like people, we've talked about like companies that post and they're just not really trying to hire. But then there's people saying like they've done thousands of applications and have not gotten one single interview off of it. You're not kidding. Last month I applied to jobs to see what it's like. Feel like it's all cooked. So you did your own testing. I kind of want to try. I'm going to try this. But then again, I don't want to increase competition. We're all just trying to, I just want to see if I could get hired. That's crazy. You got your last few jobs within weeks of applying. Abbeville on the high. Indiana, tons of jobs. Abbeville 173. And Disney above 98. Bond's still near the high. You get hit up by headhunters all the time. A lot of mid-level jobs are getting eliminated by AI. Interesting. So some of you are like, it takes a couple weeks. Some of you are like, I got demand. Janet Yellen might still be live, yeah. We've spoken to multiple recruiters. A lot of job postings have not been taken down. It makes it look like job openings are available when in reality there isn't. You get headhunters, but they're too picky. What do you mean? Disney 98. You applied for hundreds of jobs, and it wasn't until you updated your resume with ChatGPT you got flooded with calls. These green shoots coming out of nowhere. Again, the Hamas deal, that was the only thing. Blinken saying stuff right now. Says Saudi Crown Prince reiterated the kingdom's strong interest in pursuing normalization with Israel. What about ChatGPT? You add it to your resume, a certificate. Dude, that's crazy, though. I want to see the jobs market. I mean, I only do real estate, and then I hire usually private contractors. It's a little different. I feel like, I don't know, if you do construction work, that's in high demand still. Like, right, man, if you know how to lay tiles, if you could do demolition, like, I don't know, man, if you know how to do flooring, fixtures, cabinets, painting, I feel like those jobs, I don't know if you don't even need a resume, man. You could start from, somebody will hire you at the right price. Yeah, HVAC guy, always in demand. I don't know. Anything in real estate, bro, is just like, it's insane. I've not seen any sort of shortage there. You check your LinkedIn. So you applied to, what do you do? Like, what kind of jobs are you looking to apply for? Baba said, yeah, the Baba calls went crazy. Your big-ass company, you do electricals, laying off. We lost contracts with LMC and Avalon. No way. But, like, what I'm saying, though, is, like, where are you going to work after, though? Like, if you got laid off with that, do you think you wouldn't find a job quickly? Or I feel like if you just made your own electrical company, put up a Yelp listing, I feel like you'd be booked out in a couple of weeks. I'm straight, but the new guys and lazy workers are gone. A bunch of Chads work. Wait, you work with a bunch of Chads? Tell you they all got long terms? Very interesting. Very interesting jobs discussion. We may have to do some other stuff. We may have to do more research into this. Maybe I'll go over some of your guys' resumes. I'd like to see what we're working with in the Chad. What up, Trez World? How you living, man? Good morning. Good morning. What a day. A day of calmness and a little bit of crazy. And some earnings, baby. Some earnings after the bell. And tomorrow morning. At least 3 guys, different job sites. Oh, man. Tell them what's up, man. That's dope. Working with the Chaz. So then you're not missing anything. One Chad will always remind you. Mm-hmm. My resume would confuse you. I mean, as long as it's in English and I could read it, that's usually, otherwise it'd be good. So Josh Moa, what's up, baby? Good morning. Where do I find the expected move? Everybody keeps asking me that. I mean, it's proprietary. It's a little thing I created. So I have it from aggregate sources, but the only way you could get it is through here, or there's other like earnings previews that exist. Like you'll find them randomly, but I just got this little thing created. So unfortunately, it's just not available. But you can get it at youtube.com/thestockmarket. Auction, yeah, there's a three-year bond auction. You are going to get Kashkari here, too. Neil Kashkari. Yeah, he's supposed to be live here in a second. So hold on, we might have to wait a little bit on the PHILO, depending on when this guy comes out, because he's supposed to be now. We'll see if his statements move the market like Mester already, because again, most of her speeches came out right away. That's TMO. What is the TM? It came down. Disney, bro, 98.26 now. Bro, Disney's kind of making some moves. GEHC. GE Healthcare, they're up 12. They're actually killing it. Is today their first? No, this already existed, right? Damn, they went nuts. Bond auction, I haven't looked unless it came up here, but I'm not really too into it. It'll take a minute. But I don't think the 3-year auction, there it is, came in at 4.169 at high. I don't know what the when issued was. What was the when issued on it? But 4.19 is still pretty low. I think that's lower. Again, I think the 2-year right now is at 4.45. So it was supposed to be for a 4.1. So barely higher than the issue. Whereas 4.177 when I went higher or lower. Yeah, so there was demand for it. Interesting. So it's a good 3-year, but that shouldn't have moved too much, and it's a lot lower than the 2-year. Interestingly enough. So you got a little bond bid there. The Zaza went down, so Fed futures, they priced out another. Again, the rate cuts are pulling back here a little today. You got married last weekend in Puerto Vallarta. You did join the chat to respect my wife. She told me I should chat it up today. Thanks for being so cool. God bless you, bro. Congratulations, man, to the newlyweds. Or nah. Yo, that's hype, bro. That's a real one. That's a real one. Both of you guys. You're like, no Chad today. And then she was like, nah, hit up the Chad the next day. See, that's amazing. That's amazing, man. Congratulations. I hope y'all got a long term. All right. And I hope the long term for any future children on the way too, you know. So there you go, baby. Congratulations. Happy anniversary. That is a special day. That's hyped. Yeah, someone said GEHC, GE Healthcare. They went crazy. Now, where is Baba? Disney kind of has me captivated here, but Baba's still going too, man. That's the crazy part. We have Alibaba earnings in the morning. So I still think this is just most what's going on with China rather than earnings. But if they have a good earnings, this thing takes off, man. I would love to get this thing out of the gulag and call it a day. That would be nice. PayPal's up there. Do we invest for the bonds? Well, you could use the bonds for the long term depending on your strategy. So, like, especially if you even want to, if you have a certain amount of fixed income or you're looking to protect money and you want to wait before buying stuff and you could really put yourself on a 2-year time frame, the bonds are still a great place to add to the long term. But a lot of times we're trading them and then using them as indicators for other things that are happening more broadly in the market. Kashkari should have been on by now. So we're still waiting for that. That might push back our PHILO a little bit. I want to see what he says. We had your first 1-year anniversary last Saturday, too. Happy anniversary, baby. Happy nuptials. Happy anniversary is beautiful. Any advice to start putting money into account for my daughter that'll be born in 7 weeks? If you put it into an IRA or like a Roth, you have way better tax benefits, but she can't touch it until she's older. You can put it into a college account. So if you want her to go to college or even later in life, there's some like approved stuff you could put it towards, but any special accounts will have limitations, but way better tax benefits. Otherwise, you could just make a normal brokerage, but it will have, different tax obligations in the long run. Visa went green. A custodial, you could just just make an account for you and just put her name on it. You can make it a joint account once she has like a name and social and all that, But a custodial will be so it's for her, and then, that she could log in, and then you'll just be the custodian if she's not 18. Your daughter's into ballet, isn't going to college. Well, if you made her a college account, right, one of those like college savings things, if she did pursue something in ballet, and even then if she didn't go to a normal college and wanted to go to an art school, or if she wanted to use some of the funds for like even starting a business, I think you'd be allowed to, and then even a property as well too. Yeah, don't they go to Juilliard? Let's see, bro. Disney. I think we have 10% on Disney. On the other account it is. But that's crazy, man. Disney has not been here in a minute. 98, and then earnings are in 2 days. So, again, I think next level is 100 on Disney. It still kind of chills out below 100, but it's starting to magnet there. Where is Fed Kashkari? I don't know, but Baba calls already went crazy today. We're just going to hold Baba shares. Again, we got a small gain on it now. If their earnings isn't absolutely abysmal, and then there's more government support, we should be good.
This luncheon with President Neil Kashkari. Gisselson Hunter's a team of 24 lawyers across 2 offices in New Orleans.
Is it quiet, or is that just me?
Who have, in my view, through their determined work on behalf of clients, have really solidified ourselves as a premier law firm in southern Minnesota.
I don't know if Disney's up on it. It could just be earnings. Hard to say.
Region. We provide a full range of legal services on behalf of our clients.
I'll change the volume once he starts talking, because I don't know how Neil. They might come out and then raise it.
Environmental and many more. And we work in industries that are, I think, well represented in the Mankato region, including lending and finance, especially agribusiness, construction, transportation. We're incredibly proud to be the presenting sponsor for this luncheon today, for the same reason that we're incredibly proud to be part of the Mankato community.
Abby vibe 52-week high now. That's it, above the
173s. New Ulm and Mankato. And right now is a really exciting time. You heard that from Ryan today. Time and again, Mankato is highlighted as having just some of the strongest economic numbers in the country as far as unemployment and economic growth. And I think that really speaks to the vibrancy of the economic strength in this area. And it's been great to partner with some of the organizations, including Greater Mankato Growth. We see that vibrancy of the economy in our clients, and really when our clients succeed, that's when we succeed, so we want to be partner in that success. So we're really excited to hear Mr. Kashkari's remarks about the economic success and challenges in the area, and to be able to kind of share that with the business leaders and share that insight and knowledge here. And so with that, it's my pleasure to introduce our moderator and keynote speaker today. First, moderating is Andy Wilkie, the Executive Vice President, of Greater Mankato Growth.
Thank you. Thank you, Cato Growth. Clap it up.
And our keynote speaker today is Mr. Neil Kashkari. So before he makes his way to the stage, I just want to share a little about him.
Brought to you
President
by
Neil Kashkari has been the president and CEO of the Federal Reserve Bank of Minneapolis since January 1, 2016. He serves as a member of the Federal Open Market Committee, bringing the 9th Federal Reserve District's perspective to monetary policy discussions in Washington, D.C. In addition, Neil oversees Minneapolis Fed operations and leads its many initiatives. He was instrumental in establishing the Opportunity and Inclusive Growth Institute, whose mission is to ensure that world-class research helps to improve the economic well-being of all Americans. Most recently, he supported the expansion of the Center for Indian Country Development, which advances the prosperity of Native nations and indigenous communities through actionable data
Disney
and research.
activist Blackwell proposes splitting
Neil
up
earned his
company.
bachelor's and master's
That's what Twitch
degree
is saying.
in mechanical engineering from the University of Illinois. He became an aerospace
Spy, Lil
engineer,
Chicle.
developing technology for NASA missions. Eventually
Yellen's
turning to
talking about
finance
the
and
dollar, but I don't
policy,
think that's it.
He earned his MBA from the University of Pennsylvania's Wharton School, joined Goldman Sachs.
Yeah, that was
and
earlier
served
in the
other-
morning.
in
Blackwell,
several senior
they nominate
positions
candidate for
at the U.S.
board.
Department of Treasury, including overseeing the Troubled Asset Relief Program, or known as TARP, during the financial crisis. Before joining the Minneapolis Fed, he spent 4 years at PIMCO, and then in 2014,
And Deutsche Bank raised the
ran for
price
governor
target to
of
116,
California on a platform
maintaining
focused
buy on
economic
Disney this
opportunity.
morning.
Now he lives in Orono, Minnesota with his wife, Christine, children
Bonds breaking
Ellie
above
and
95 on
Tecumseh,
TLT.
and their Newfoundland dog, Webster. So please join me in welcoming Mr. Neil Kashkari.
He has a dog named Webster. Yeah, there you go. Is it all questions?
Thank you, Dean. I very much appreciate that, and I'm really glad that my introduction was significantly shorter than President Kashkari's.
Yeah, I'm going to turn it up a little.
But I'm so glad to have everybody here today. How about this view of Mankato, Greater Mankato? This is an amazing space. I'm so glad to have you here. And it's great that there's just not a lot of snow either, which has been great for the travel here as well. So I'm so glad to be here. Thank you for Gisselson, Pioneer Bank, and Great River Energy, and our friends at Abdo for helping support conversations and events like this. I'm going to sort of kick things off a little bit and have Neil Kashkari speak a little bit about whatever he decides to speak about. And
So
then
it's
I'm
not
hoping for a
pre-written,
lot
I don't
of,
know.
questions from you all. I do have a series of questions, but I'm really hoping that we can hear more from you all.
Why does
and
it
ask
sound like
questions
he's
of
speaking in a
President
can?
Kashkari this afternoon. So
You hear that?
with that, I'll kick it off to you, sir.
All right. Well, thank you. Thank you for having me. It's great to be with all of you. Really appreciate the great turnout. It's a great opportunity for us. I always like to start by explaining why I'm here. Why do I do meetings like this, and why are these meetings so important to us? In 1913, a long time ago, Congress created the Federal Reserve System, which is our nation's central bank. But they did something unique. They wanted all of the different regions of our country to be represented in the monetary policy process. So they created the Board of Governors in Washington, D.C. I just got quieter. Can you still hear me? Okay. They created the Board of Governors in Washington, D.C., and they created 12 independent Federal Reserve banks scattered around the country, the 9th of which is here, the Minneapolis Fed. So my job and my colleagues are to get out across our region, which includes Minnesota, North and South Dakota, Montana, the Upper Peninsula of Michigan and northwestern Wisconsin, and to really have a sense of what's happening on the ground in our economy. And then I go back to Washington, D.C. every 6 weeks for Federal Open Market Committee meetings, FOMC meetings that are in the news a lot. And part of what I'm doing in those meetings is talking about what's happening here in our regional economy. Now, we cannot set a different monetary policy for Minnesota and for California. We all use the same dollar, so it's the same monetary policy for the country. But I want to make sure that our region is represented in that deliberative process so we can make the right call for the nation as a whole. So meetings like this are great for me because it gives me a chance to hear directly from businesses, from workers, from labor leaders, from civic leaders about what's happening here on the ground. And then this helps us make sense. A lot, we look at a lot of data. I have a team of brilliant PhD economists that help me sort through the data every day. And a lot of times the data is sending us mixed signals. It's conversations like this that help us make sense of those mixed signals to try to get a sense of where the underlying economy is going. Now let me just spend a couple minutes on what we're trying to achieve, and then I'm going to turn it over and we're going to have a discussion. Congress has given us what we call our dual mandate, two goals that we're trying to achieve. One goal is stable prices, what we've defined as 2% inflation. It won't be a surprise to you to know that we have not been hitting our 2% inflation target over the past few years. We've had very high inflation. The other goal is maximum employment. As many Americans as possible gainfully employed and contributing to our economy. Now, the way we thought it worked was that there was a trade-off between these two goals. That if the economy got really hot and businesses had to compete to find workers and you couldn't find workers, you had to increase wages, the unemployment rate would go down and the businesses would have to pass those costs on to their customers, and that would lead to high inflation. So the labor market would get hot and you'd have high inflation. And then in that situation, we would raise interest rates to try to tap the brakes on the economy to bring those two things into balance. When inflation took off over the last few years, my colleagues and I raised interest rates very aggressively. And if you've bought a house or you've thought about buying a house, you probably saw that mortgage rates went from around 3% for a 30-year mortgage to around 8% for a 30-year mortgage. So we raised, that was because of us, right? Just full disclosure. We raised interest rates aggressively to try to tap the brakes on the economy to bring the high inflation down. We wanted to do that while hoping that we could keep the labor market strong. But history has shown that that's really hard to do. Usually when the Federal Reserve raises interest rates to try to tap the brakes on the economy, you push inflation down, but you end up pushing unemployment up. Well, a remarkable thing has happened over the last 6 to 9 months. Inflation has come down very quickly. It's been very good news. We're not all the way there yet, but we've made a lot of progress on inflation. But very happily, the labor market has been strong. The national unemployment rate is still 3.7%. We had a very strong jobs number last Friday nationally. And so it's kind of a conundrum. How has inflation been able to fall so quickly and the labor market has been so strong? I mean, it's a high-class problem, don't get me wrong. We want to keep the labor market strong, but it just adds to the number of mysteries that we're trying to figure out in this reopening of the economy following the pandemic. And so I'm going to be very candid with you about the things that we think we know and the things that we know we don't know, or the things that we're learning that we don't know. And conversations like this help me to try to make sense of what might be going on. And I have some theories for what I think is going on, which we can get into, but I wanted to give that backdrop just to start the conversation going. And so if you have your food in front of you, I encourage you to keep eating before it gets cold. But nonetheless, we're going to have our conversation. So thank you for being here.
Thank you for that. One thing I did want to note is we heard the names of your children, and I understand you're a big American history fan. So Yulee and Tecumseh,
yeah.
Is that Ulysses?
Ulysses S. Grant
and Tecumseh?
Yeah. And Tecumseh Sherman, the two leading generals who won the Civil War and saved the country. I want to name my kids after somebody I admire greatly. And I said to my wife when we were expecting our firstborn, I said, boy, I wish we were having a boy because then we could name him Ulysses. And my wife is from the Philippines. She's a U.S. citizen now, but she said, Ulysses, that's an unusual name. I kind of like that name for a girl. I said, done. All right? So we've shortened it. I mean, she goes by Yulee, but it's short for Ulysses. And my son Tecumseh for Tecumseh Sherman.
Yeah.
in any case, I hope when they get older, they learn to appreciate the names as much as I do. We'll see.
Well, your wife is a good sport on that for sure. I love it. So I have one question just to kind of get the ball rolling, but then I do want to point out we have Liz Sharp in the back waving her. She'll have a microphone, and then Tanner will have a microphone as well. So if you have a question after this one, throw your hand up, and I will call on you, and then Liz or Shannon, or Liz or Tanner will find you. So earlier today, we had a conversation with some small business owners, and we talked about here in Mankato, we think we're special. And I think that we have a really fantastic growing economy, a very diverse economy. The job market in Mankato has been very robust, leading the state in year-over-year job growth in 2023, yet employers seem to still be struggling to find workers at all levels. Is this the new normal, and how will it impact the economic growth for our region and the nation as a whole?
Well, there's a short run and there's a long run issue. In the short run issue, I don't want to suggest that recessions are never going to happen again. I hope we don't have a recession this year. Right now, it looks pretty promising that we're hopefully going to avoid one, but you never know. And there could be some disruption around the world. There's a lot of geopolitical turmoil going on right now. Commodity markets could get upended. That could be big enough potentially to tip the world economy, or at least the US economy, into recession. That's not my base case. So if we had a recession triggered by one of these, what we call shocks, then you would typically expect the job market to soften because a lot of employers would face downturns and have to lay people off. Longer term, we have a structural issue, especially in this part of the country, that we just don't have enough folks, young people. We're not having children as fast as prior generations did, or as many children as prior generations did. And a lot of our young people are choosing to get up and leave. So I heard that this morning in Mankato. A lot of young people come here for college, but a majority of those then go either elsewhere in the state or they leave the state altogether. And so it's a challenge for smaller cities and especially for rural communities all across Minnesota who are trying to retain the young people that they do have growing up there. And so if you look nationally, this is a big challenge. And this is why ultimately getting our immigration system right, and it's a political challenge, but getting that right is important to meet the needs of our economy. If you look throughout American history, immigration has been a big source of labor throughout American history. Almost every advanced economy in the world is struggling with low birth rates. As societies get wealthier, they tend to have fewer children. Like Japan has been facing this now for decades. Many of those countries are culturally deeply resistant to immigration. So they don't even have immigration as an option. We have the benefit that we're not perfect at it, but we're pretty darn good at it. And it's at least an option because a lot of people want to come to America. And so this is a much bigger political question. The long term, it's really about, can we get an immigration system right that meets the needs of our economy? And that's both folks to work on farms, folks to work in meatpacking plants, it's high-tech workers, it's engineers, it's nurses, it's kind of across the spectrum. But that's a political challenge, ultimately, that the American people have to decide.
Very good. Who's got a question? Come on, friend. I know all of you, so I know there's some folks here that have questions.
I'm never opposed to cold calling people.
I will. I know. I'll call on some of you. There might just be some teachers in the audience, too, that know what that's like. So, who's got a question? Tom. Why don't you wait for Tanner to bring your microphone so it gets caught on the live stream?
Good afternoon. Tom Lambert. I'm with Great River Energy Utility Company here in Minnesota. Wondering if we've been hearing a lot about the IRA funding and the infrastructure funding and a lot of investment at the federal level and certainly even some at the state level to incentivize and shape technology and find energy sector relief for decarbonizing. Do you have a take on the impact of those investments, those federal investments, and what they might do to the traditional kind of economic models of industry?
You know, it's a good question. The short answer is I don't know. Setting aside some of the investments in alternative energy for a moment, one thing that we talked about this morning is the federal government and the state have allocated a lot of money for broadband all across the country because there are lots of dark spots where people don't have access to broadband. And if we really can get the whole state of Minnesota wired for broadband and affordable, that could be a game changer in helping smaller communities. People could stay there, work at a job remotely potentially, and have the amenities that they like in the small town that they grew up in. So I'm optimistic, especially about broadband's potential in many communities across our state and across the country. In terms of what the IRA and the CHIPS Act and other things means for the future of our economy, I think it's hard to know. There's a lot of businesses that I talked to woke up during the pandemic to realize that their supply chains were much more vulnerable than they appreciated. So many businesses are trying to build in resilience into those supply chains. I don't think that necessarily means they're going to bring back manufacturing from China to the US. My guess is for most businesses it means they're going to diversify their manufacturing sources so that it's not all China. Maybe it's some in Mexico, some in Taiwan, et cetera, Vietnam, and some back here at home. So I don't know long term if it's going to have a huge effect or not. I know people who study climate economics say it's a very big deal to jumpstart the investments in solar and wind, and that could make a meaningful imprint on our greenhouse gas emissions over time. But what that means for our economic growth potential, I'm not sure. Thanks for asking the first question.
Thank you, Tom. Randy Birkland in the back, the Greater Mankato Growth Volunteer of the Year as well in 2024. Thank you, sir.
So my question is, I heard you say that we needed to get the immigration policy correct. Not from a political point of view, but from an economic point of view. Does your board have an idea what that looks like, or do you have a personal idea what that looks like?
Yeah, I mean, this is, I have, Neil's, if I have one vote in any kind of an election, so do you. So this is how I would do it. First of all, let me back up. Where does economic growth come from? It comes from two things. It comes from productivity development. So we invent new technologies so we can do more with the same resources. We're very good at that as a country. And it comes from population growth. More people to produce things, more consumers to buy things. And I'm talking about the second half of that equation. And so if we have fewer kids, if we're all having fewer kids than prior generations, all else being equal, we're going to have slower economic growth. So this is just math. And so for me, I would design the immigration system to say, where are the jobs needed in our economy? And let's map who we prioritize coming in to meet those needs. That's how I would do it. But this is a very fraught political issue. And it seems commonsensical for me from an economic perspective, but other people look at things from a cultural perspective or a philosophical perspective, and those opinions count too. And that's why it's been so hard for us as a country to reconcile and come up with a comprehensive plan. But it's funny, I meet with all of our federal elected representatives from our region. At least once a year, I try to meet with everybody. And Republican or Democrat, it doesn't matter, they all understand this. Like they all get this, they hear it from their constituents, how important the worker shortage is facing their local economies. And so I say to them, the folks I've talked to on the other side of the aisle are saying the same thing. Why can't you all get together and figure it out? And it's tough.
Anna Thill.
Hi, I'm Anna with Excel Energy. 2 questions for you. One, not to get political, but I'm just kind of curious if you and your colleagues, when you get together, build out scenarios based on we have an election coming up with maybe a new president, maybe not, but do you build out scenarios on what happens if there's a swing there? And you don't have to tell me what those are. And the second one being, without scaring the crap out of us, what keeps you up at night?
Probably the election.
The first one's easy to answer. We do not. We do not think about politics. We do not think about the upcoming election and different scenarios and what it could mean for the economy or what it means for interest rates. The deal is that Congress has, they've said to us, we were created by Congress. They said, we're going to leave monetary policy to you, but you have to stay out of politics. And we say, okay, got it. We agree with that. And so, if we tried to think through those scenarios or try to do the opposite because someone thinks we're going to think through the scenarios, then we'd be doing something less than optimal for the economy. And so all we can do, it's hard enough, by the way, it's hard enough to get the economics right given all the uncertainty of what we're facing. To now say we're going to throw politics into it, it would be an almost impossible task. So no, we don't. And I would tell you, we have these meetings, these FOMC meetings every 6 weeks. They're recorded, so every 5 years, with a 5-year delay, the transcript comes out. I think the vast majority of Americans would be really proud if you could peer into those rooms. because you can't tell based on the arguments.
And why
people are
delay it by
making
5
what
years?
their own individual political perspective might be. You know, I went
Let us
from
have it
being-
now.
I was appointed in 2016. President Obama was president when I was appointed, and then President Trump, of course, and now President Biden. I went from being one of the most dovish members, meaning I was arguing for low interest rates, my first 4 or 5 years on the committee, to now being, I think, on the more hawkish side. Why? Because the economic data has changed. And so you'll see people in the committee room switch positions, but the data has changed. And so that's how it's supposed to work. And so we all take that very seriously and do our very best to check any politics at the door when we come up with our assessments. In terms of what keeps me up at night, it's always a thing that you can't think of. And it's like, you know, shock, economists use this term, it's called a shock. It's this thing that hits the economy that leads to a big disruption. And it's always the shock that you're not paying attention to. And as you know, we have a team of people, really smart economists in Washington, whose entire job it is to look for financial stability risks. And yet, we still get surprised. Even though our eyes are open, we're looking, we're trying to run through scenarios, and we were surprised when a bank as small as Silicon Valley Bank could run in, not that nobody believes Silicon Valley Bank, or a bank of $100 billion could run into trouble, but we were shocked that a $100 billion bank could lead to potential contagion all across the banking industry in the country, forcing the Federal Reserve over a weekend to announce emergency measures to try to stabilize the banking system. And so it is always those things that we're trying to look for and that we know we're not seeing because by definition we're not seeing it.
Very good. I do have a question I wanted to ask. So related to interest rates, back in November there was an article in the Wall Street Journal and you shared that under tightening will not get us back to a 2% in a reasonable time and that you were concerned about inflation ticking up again. Do you feel the same way today? How, if at all, have circumstances changed?
Well, the last 3 to 6 months, the inflation data has been surprisingly positive, meaning good news. So we have a 2% inflation target, and if you look, so 2% inflation target year over year. So you measure inflation now versus a year ago, we want to get to 2%. And we're not quite there yet on the year over year basis, but the 6-month data is basically there, and the 3-month data is basically there. So if you said, hey, if we just think we're going to continue what we've been experiencing, we're on track to get back down to our 2% target. So the last 3 to 6 months has been surprisingly good news. Again, I don't want to say we're done yet. I don't want to say we're necessarily going to just glide past all the way to 2%. But
I mean, this will be the highest the SPY's been in like an hour if we get above
positive.
here.
Very good.
Was that from Loretta Mester?
Liz, you're pointing to somebody?
I know, she was around here.
Hello.
Here we go.
Thanks for coming. Can you talk a little bit about the
No, she was
growth
here.
of the money supply over the last couple of years and how that's played into inflation?
Yeah, you know, the money supply, this is a debate we have with our economists all the time. Our chief economist is sitting right over there.
Okay,
and he's
getting a little
smiling.
green shoot.
Because I get asked this question a lot, and you kind of intuitively think, well, if there's more money, that's what leads to inflation. And historically, the Federal Reserve would look at the money supply very, very carefully as a way of trying to understand where is inflation going. It's gotten complicated where the definition of what counts as money has actually, with technology, with mobile accounts that you could move money between accounts very quickly, the definitions have gotten a little bit fuzzier. So we know over the very long term, the money supply has a critical role to play in setting inflation. But we also know that over the short run, the money supply does a lousy job of explaining the inflation that we're seeing. So instead of focusing on the money supply right now, we're very focused on, at least I'm very focused on, what's actually happening to inflation and what's happening to the key components of inflation. So we look at goods inflation, we look at housing inflation, we look at services inflation to try to understand, how far back are we and how much further do we have to go?
Related to that, you've been fairly outspoken skeptic about cryptocurrencies like Bitcoin. Can you explain your concern?
Yeah, so I travel around and I do talks like this. I do a lot in universities. And inevitably in the university context, there are a number of students who want to ask me about Bitcoin. And I always ask them, has anybody in this room ever bought something with Bitcoin? Not bought Bitcoin, bought something using Bitcoin as a currency. I mean, a sandwich, a computer, a book, anything? Anybody ever bought anything using Bitcoin as a currency? No. I've never met somebody who's bought something using Bitcoin as a currency. So I always ask, what problem is this trying to solve? Well, first I heard, well, it's an inflation hedge. Well, then when we had this big inflation spike, I said, darn it, we're going to make these Bitcoin guys feel like they were right. But then it turned out Bitcoin was a terrible inflation hedge. When we raised interest rates, Bitcoin got crushed. It's just another risky asset. So if you want to spend your money buying Beanie Babies or Pez dispensers or Bitcoin, knock yourself out, okay? But it's now been 10 plus years and nobody has been able to articulate any actual utility in the real world other than an article of speculation. I'm not opposed to Beanie Babies. I'm not opposed to Pez dispensers. I am opposed to Americans taking their hard-earned money and being duped into investing in something and not realizing they're buying a Beanie Baby, thinking they're buying something else. I'll give you one little example. I've used this before. I said my wife is from the Philippines. One time we went to visit her family in the Philippines. We landed at customs at LAX. I was going through customs. I was tired. The customs officer said, "What do you do for a living?" And I said, "I work at the Federal Reserve." And he said, "Oh, do you know about Bitcoin?" And I said, "I know something." And he said, "My good buddy just took out a home equity loan to buy Bitcoin. Should I do that?" And I said, I'm not supposed to give investment advice, but do not do that unless you want to risk losing your home. So that's why I'm concerned about it.
So he did give
I have
Bitcoin
a lot of
investment
Beanie Boy
advice.
babies at my house, and they've come in really handy with
Bro,
my kids 'cause
Disney's
they love them
ripping.
now too, so. But once
Again,
they're
they have a
through with
lot
them,
of headlines,
then the market can do
upgrades,
whatever
and then
it
the
wants.
activist investor
Other
nominated
questions?
someone. But they're killing
Yes,
it.
sir.
I have a question about the inverted yield curve. So I know for the past 2 years there's been kind of what's called the inverted yield curve, which means that long-term interest rates
Kashkari says it
are,
doesn't
I believe,
matter.
lower than the short-term interest rates, which has historically been a mark of recession or economic recession. It's been in this way the past several quarters, I just wanted to see if you had any commentary on that. Is that still being viewed as a traditional mark of recession, or what are your comments on the inverted yield curve?
Yeah, so the gentleman is asking about, if you look at the US government borrows money from the public, and sometimes they borrow money on a very short basis for a few months, and sometimes they borrow money for 10 years or 20 years or beyond. And traditionally, if you're going to loan your money to the government, you want a higher return if they're going to lock your money up longer. So the interest rates go up over time that they borrow from. The yield curve is inverted, which means interest rates for the US government to borrow are very high right now, and they're lower in the future. And that in the past has been an indicator that a recession is likely going to come. And you're right, the yield curve has been inverted now for quite a while, and yet the recession, knock on wood, has not come. So what's going on? This goes to why, in my view, this partially goes to why inflation has come down so quickly. I think what's happening is, instead of the Federal Reserve having raised interest rates so much that we're pressing both feet on our brakes to slow down the economy, what I think is happening is we are pressing our feet on the brakes, but there's been a surge of supply into our economy. So what causes inflation to go up? If there's more demand for goods and services than there is supply, prices go up. Well, over the past year or so, supply chains have mostly healed from the pandemic. The services economy has reopened, and a lot of workers have come off the sidelines, enabling our economy to produce a lot more goods and services. So my gut tells me that most of the gains that we've had, the disinflationary gains, have been because the supply side of the economy has healed so quickly. And then it turns out, in that context, we're not actually slamming our feet on the brakes as hard as we thought.
No PHILO yet. Mr. Kashkari took
we'll
over.
See. We're not all the way back yet, but that's my explanation for why inflation has fallen so quickly, and why I think the yield curve, at least in this current episode, is not as reliable an indicator as it was in prior cycles, because in prior cycles, the disinflation was really caused by the Fed, as opposed to a big surge of supply.
Sam Ziegler with Green Seam.
Hopefully.
Hey, it's the highest we've been here in almost 2 hours.
One question I have for you is the value of the dollar. So we're a region that does export a lot of goods, and we've had a global competitiveness for a number of years because our economy has been doing well and the value of the dollar has been strong. What do you see in the value of the dollar?
Pfizer new high.
In our future?
First of all, it's the Treasury Secretary is the one who's supposed to speak on behalf of the government, as it relates to the currency. We don't target the dollar. That's not an objective of ours. But generally speaking, currencies get set in the short run by the relative stance of monetary policies. So the U.S. has been relatively more aggressive, the Federal Reserve, in raising interest rates.
Fed
to bring
futures
inflation
have gotten
down.
more dovish.
And generally that has led to the dollar
as we're
appreciating
bouncing
relative
Fed
to the
futures
euro,
on
relative to
December
the
odds
yen
pushed back a
and
little.
Asian currencies. Long term, the
we haven't
reserve
done the earnings
currency
preview
status
yet.
to,
We'll do them
the
after
premium of the
PHILO
dollar
and
is
Mr.
really set by
Kashkari.
economic competitiveness, which is which major economy do investors around the world have the most confidence in. And that's driven by rule of law, that's driven by the innovation sector, that's driven by fundamentals of economic growth. And America has so much going for us that I feel really optimistic about the dollar's role in the world, just because our economic fundamentals are not perfect. We have challenges, but I wouldn't trade places with any other major economy in the world. And so short run, it really is set by monetary policy, but the long run, it's set by these more fundamental economic competitiveness factors. Yes, sir.
Tom Cook, and greetings from a fellow University of Illinois graduate. So it's nice. Thanks for coming out. I enjoy your comments. I have a general question. And I've realized we have a target of inflation of 2%. Why 2? Why not 1? Why not 1.5? Why not a quarter? I realize deflation is a bad thing, but would you comment on that, please?
Well, so I'm glad you said that. So first of all, people usually say, why isn't it 0? And that's a reasonable question. Why isn't it 0? And my answer to that is because deflation is a bad thing. Here's why. You go out, you get a loan, you buy a house, and if your home price is falling, your equity is getting wiped out, and your mortgage, which is fixed, is getting bigger and bigger and bigger relative to the size of your house. So we need to avoid deflation. For the 5 or 8 years before the pandemic, we were coming in below our inflation target. We were at about 1.5% instead of 2%. So if we had had 0 as our target and we came in short, we would have been in deflationary territory. So 2% is the number that is basically low, but above 0, to give us a little margin for error. And this is what most advanced central banks around the world have kind of coalesced around. There's no magic to it. It could be 1.5, it could be 2.5, but it's just a simple number that people can get in their heads. Bottom line is, we want to get back to inflation that you never think
It's just
about.
the easy number.
When we had 1.5 or 2% inflation before the pandemic, the American people didn't think about inflation. That's where we want to get back to.
Hey.
Josh Madsen.
Josh Madsen, how you doing? Thank you for your time. I have a question. What role do you feel that CBDCs will play moving forward? I know you're not a fan of Bitcoin, but certainly things seem to be moving more digitally, so I'm curious what your thoughts are on that topic. And
Yeah, so the gentleman is asking about what he said is CBDC, central bank digital currency. Imagine that the Federal Reserve issued its own version of Bitcoin. And to be honest with you, the Federal Reserve is examining this because some central banks have said they want to study it, and the Chinese central bank has said that they want to issue their own Chinese digital currency. I go back to the same question that I asked about Bitcoin. What problem is it solving? So right now, digital currencies exist today. I can send anybody in this room $5 via Venmo or PayPal. Right, that's a digital currency. Sorry, but I could. That's a digital currency. Now you'd have it instantly in your account, you know it was there. So what is it that a central bank digital currency could do that Venmo or PayPal can't do? And nobody can answer that question. And they say, well, maybe it's better for financial inclusion. There's no evidence that it is. Maybe it's better to lower cross-border remittance transactions. There's no evidence that that's true. It's like maybe these magic beans will grow a giant beanstalk. It's possible. I can't prove to you that they won't grow a giant beanstalk, but I can tell you there's no evidence that they will grow a giant beanstalk. So I am right now deeply skeptical because all of the people who've been excitedly talking about it, no one has been able to articulate the actual problem that it is actually solving in the real world. Last thing I'll say, but what about China? Why is China doing it? You know what you could do with the central bank digital currency that you can't do with Venmo? The government could monitor every one of your transactions. Can't do that with Venmo. Sounds pretty good to the Chinese government. You could directly tax your accounts. Can't do that with Venmo. Sounds pretty good to the Chinese government. And you could impose negative interest rates on your account. You can't do that with Venmo. You could do that in theory with the CBDC. knowing that the Federal Reserve wants to do any of those things, okay? And so, I mean, I'm gonna leave my mind open, but so far I'm deeply skeptical because nobody's been able to articulate an actual use case that I think makes any sense for the American people.
Others?
Pam DeMars with the Wall Zone. I just want to make a comment that we have a lot of banks here. And during the pandemic, if we hadn't had our community banks, it would have been really tough for us in business. So I just want to say thank you to the community banks because they are what got us through. My question is, are you protecting these community banks? Because that is a fear I have if the community banks go away.
So thanks for your comment. I've heard your comment. I mean, it's a very genuine comment over and over and over again from communities all across our region. I mean, the number of businesses who told my colleagues that they had had long-standing customer relationships with giant national banks, and then when COVID hit and Congress rolled out the PPP money, they couldn't get their bank to pick up the phone, and they had to go down the street to the local community bank and open a new account, but that local community bank was able to help them apply for the PPP and get the funding. I've heard that over and over and over again. So I believe your comment. I know you're right about that. It is remarkable how community banks are able to step up. So community banks are under a lot of pressure, and regulators are trying to level the playing field within the bounds of what we can do between the big giant banks and the small banks. But there are a number of structural challenges that community banks face.
High ticker is starting to gas right now. This is the highest we've been in 2 hours.
Transactions.
Disney's at the high.
Banking
Pfizer's at the dude. Pfizer's up
technology
4%
heavy every year.
My goodness.
And that technology is expensive, and it's easier for a bigger bank to be able to afford the latest IT platform, so you can have the mobile app that you want with the seamless interface. It is harder for small
You're
banks
just right back
to be
to
able to
SPY
offer
opening.
the
SPY
latest
barely
technology.
green. NASDAQ
And
still
I
red.
imagine those pressures are only going to continue to increase over time. Second issue is we saw when Silicon Valley Bank blew up that people were nervous about their money, nervous about whether or not the government was going to protect their accounts if their accounts were above the FDIC limit, and a lot of money started flowing into the big giant banks because people assumed that those banks were too big to fail. That's a huge challenge. There's a proposal out right now that the Federal Reserve and other regulators have to try to raise capital requirements on the biggest banks and level the playing field, but it continues to be a big regulatory challenge. Nobody is trying to layer more regulations on community banks. They're trying to level set things to try to level the playing field. But it is a real challenge if customers believe that the giant banks are going to be protected and the small and mid-sized banks may not be. The Minneapolis Fed and I have spoken out about this issue very loudly for the past 8 years. Most of our calls have fallen on deaf ears, to be honest with you. And so it's something we're going to continue to look at and work on, but it's a real challenge for our community banks.
Others? Otherwise, I've got to ask my questions, and they're not near as interesting as yours. Okay. I'm going to ask, maybe switch gears a little bit, talk about your American history background and appreciation.
Tell us about
who is the
Ulysses
most underappreciated character in American history?
Well, I'm biased because I named my daughter after him, but Ulysses S. Grant is a remarkable, people have heard of Grant's tomb, right? The joke when you're growing up, who's buried in Grant's tomb. Other than that, most people don't know anything about Grant. Remarkable man who basically had failed in every aspect of his life as a businessman. He had a problem with alcoholism, but then when the Civil War broke out, he volunteered to go and try to lead men, and it turned out, boy, he could lead men in battle. And ultimately Lincoln found him and turned to him, and he was eventually in charge of the whole Union armies, 1 million plus men. And so remarkable figure who led the fight to win, to defeat the Confederates, keep the Union united. And
U.S. International Trade Commission says votes to strike down anti-dumping duties on tin mill steel imports from Canada, Germany, South Korea, and China.
Largely overlooked in modern American history.
We do have a question back there. Alec Pfeffer.
President Kashkari, thanks for joining us. My question to you is how much harder is fiscal policy making your guys' job? on the monetary side?
You know, if I were to diagnose why the high inflation came, it's a confluence of a bunch of factors. One is, yes, there was a lot of fiscal stimulus and a lot of monetary stimulus hitting the economy when COVID was at full bloom. And that was a time when
green shoots everywhere, man. A lot of names still holding up. The high ticker, look at the RPM gauge.
That had to just
not
be
coming
channeled
down.
towards goods.
Again,
so
even bonds holding up too.
spending habits exploded in the goods economy, but the goods economy was where you also had the supply chain disruptions. And so it was a confluence of events, and then you had Russia invading Ukraine that drove commodity prices skyrocketing, which also hit the goods side of the economy as well. So all of that conspired to the very high inflation. You know, with the benefit of hindsight, we were late in raising interest rates. With the benefit of hindsight, I think history will say, hey, the stimulus ended up being bigger than it was needed. But I also give some grace to the fiscal policymakers because, you know, I was talking to some of the best health experts in the country about the pandemic, and the best health experts said it would be 5 to 10 years to develop effective COVID vaccines, if ever. And by a miracle of science, we had multiple highly effective vaccines within a year, which then shortened the duration of the pandemic. And so when I look at what Congress was doing, when they were sizing their stimulus, they were sizing it based on what it seemed was likely for the course of the pandemic. And then it ended up that we could reopen the economy more quickly. And so, you know, I give some grace that people were doing their best, making their best call, given the uncertainty that we faced at the time. But I think it was a confluence of those events that caused the high inflation. And now, as those things are unwinding, you're seeing inflation fall back down quite rapidly.
Others? I'm going to pick on Patrick Baker.
Come on,
So I didn't
Kashkari.
get a chance to acknowledge him, but he is a school board member here, and we acknowledge all of our public officials. So talk about the school district and
Hey, your
efforts,
teacher,
related
talk about
to,
the schools.
making sure
Fucking
that
love you, do it.
Mankato
Yeah,
is
tell
set
them
up for
about
the future
fucking
with
what
our
you
young
guys
people.
teach.
Well,
okay.
thanks, Andy. You know, I thought I would sit in the back here and just, you know, cruise on by, but no, I think, you know, a couple challenges our school.
That's actually what happened.
Right? One is
he was not ready to ask
the
a question.
demographic shifts are hitting schools first because people are having less kids, and inevitably less children means less money, and so we're grappling with that as a school district. But the other piece that we're trying to pivot now to is your point
PayPal's
exactly
on the high
about,
still. Bro,
talent
Disney's
and
kind of
talent and
insane.
everything, how talent will
I wonder if
fuel
it's going to make the 99 or 100 push
right?
today,
So,
but that's already up there a lot.
When we look at our schools and how we talk about where we can improve, the amount of exposure that we can get our kids to businesses and get them in our community and get them a pathway to employment here versus somewhere else is a strong interest of me for sure, and I think our board and our district leadership. And so to the extent that you have any good examples or advice or perspective for folks that are trying to design an education model for the next 25 years and change a model that really hasn't changed much since the Puritans came over and gave it to us.
Puritans.
We're all for it, but I have a strong interest in having our kids here and kind of locking the key and not letting them leave. And given a free market, we can't quite do that.
4%'s huge.
As much exposure to our businesses as we can.
So do me a favor,
really
keep the microphone for a second. I want to follow up with a question before I answer your
Yes.
question, which is earlier today I heard that the Mankato population is growing, that there's a lot of construction going on, especially of multifamily. That
Yes.
led me to believe, to assume, that your school-age population would also be growing, but it sounds like that's not the case.
So it has stabilized. Part of this is hard to know how much of this was COVID and the explosion of other education options that sort of came to the fore, whether that be online or private schools or whatever. And part of this is trying to really get a grasp on demographics, right? And how much that is real. The other thing I would say is, you know, the housing that is going up predominantly in Mankato, it's a lot of rental.
God
and I
bless
don't know
you,
that it's being
Ernest.
occupied by folks
You the mayor, baby. God bless
with
you.
families. Because we are doing that same math in our head of like, God,
I don't know how loud the audio is on this one.
Everywhere.
Yeah.
These folks aren't showing up in our school district. And so I think the characteristics of people who are moving into some of that housing is different, I think, even now than it was 10 years ago.
Got it.
And I'm sure there's housing builders in the room here somewhere that can give me more context. But we do see a lot of housing, and I am optimistic that it's going to give us some, and we are certainly, as a growing regional economy, better positioned than most who are actively losing population, but the kids just aren't there in the same numbers.
Got it, thank you. So to your second question, or your second point, this is a challenge that smaller cities all around our region are facing. And I would just say I have seen examples of some smaller cities where there's a very strong partnership between the K-12 system, the community college system, the local college, the Chamber of Commerce, the business community, to try to, first of all, a few things. Make sure that the young people who are graduating have the skills that the businesses need. Second of all, make investments in local amenities so that maybe somebody goes away to college, but then when they start to have a family, they want to go back to the town that they grew up in, and it's a high quality of life. And again, I think that broadband, to the extent that there's more work, remote work, and broadband is widespread.
Okay, Disney's approaching 99.
People can be entrepreneurs
right there,
here.
and then market's still at the last high for the last 2 hours, 2 hour
ship their
high.
products and services around the world. So
yeah, Fed futures are getting more
dovish. It's a tough challenge. I'm not
like
dismissing
consistently
it at all,
since Mester.
But it sounds to me like you're working on the right things to try to get this partnership to make this as an attractive place as possible
98.99
for
on
folks to raise
Disney.
their families.
Very good. Others? Liz, did you have someone that?
No.
Oh, back there. And then we'll get to you,
Good
Jay.
afternoon. Marcus Heplin. I'm a small business owner, real estate investor. Just kind of curious on talking a lot about consumerism, and I think being in a regional community like this, we have a lot of median household income that's a lot lower than traditional major metropolitan areas. How do you look at the health of that average consumer when you look at with interest rates and whether they're rising or lowering, there's always a lag effect to that. And with price levels still creeping up because inflation's still going up, but the rate is coming down.
Yeah, Snap is
what do you
breaking
look
out.
at when you forecast
Then they have
that
earnings
as far
after the
as
bell.
what the consumer health's going to be, and when we look at like an economy where 65% of our spending in GDP is based on consumerism, how do we look at the health of that consumer?
Disney 99, bro.
Yeah.
This
So
has
we
not
pay
been
lot
here
of
in a
attention to this.
while,
You know, when
since
the
last
pandemic
May.
hit, and there was two things
It's
happened.
climbing
There were a
now,
bunch of things
Habibi.
happening.
It's climbing.
A lot
That's
of
it. The
stimulus,
$100
various
is still the
stimulus
big
checks,
big
whether
gap.
it's, PPP money.
No play on
or it was
Snap.
direct
No, I don't
checks to
think so.
people
It's
or
pricing in a
unemployment
ton.
benefits.
We're just going to wait and sell
And
covered
people
calls.
couldn't spend money on services because the services economy was shut. In a sense, people had forced savings. So a lot of big banks reported to us that said their checking account balances of their customers soared during the pandemic. So I remember, I think it was the Bank of America CEO said this publicly, I'm not revealing anything secret, that their customer that used to have $1,000 in their savings or checking account, on average, had $7,000. It was a huge multiple. And the customer that had $10,000 had $30,000. Not as big a multiple, but still a big multiple. And the one that had $500 had $5,000. So generally the lower income customers had more savings relative than higher income customers. So we've been tracking as much as we can to try to see when is that money going to be spent down. And it is being spent down much slower than I would have guessed. So for example, consumer spending, you said, is 65 or 70% of the economy, so it's really important. Month after month, quarter after quarter, the consumer spending numbers keep surprising us at how resilient the American consumer has been. Now, it's not all good news. We also track delinquencies, so if we look at credit card delinquencies and auto loan delinquencies, they are creeping up. They're back above roughly pre-pandemic levels, so the trajectory is concerning, but the level itself is not that concerning yet. And it's from very low levels. They had very low delinquencies during the pandemic because people were effectively saving so much money. So we pay a lot of attention to it. Last thing I'll say, almost 2 years ago, I speculated in an essay that I wrote that it seemed like the economy was in what I called a high pressure equilibrium. What I meant by that was people were earning more money, they were spending more money, and that kept the economy turning. And then they were earning more money, and they were spending more money, and they were not having to fund that consumption out of their savings. That's not 100% true. There's definitely some evidence that they're spending down their savings, but it's being spent down more slowly than I would have guessed, given what's happened to inflation and what's happened to the broader economy. And so consumption has surprised us at how resilient it has been.
We have time for one more question.
Thank you for coming. Jerry Copel, I'm a retired banker in this community here in the southern Minnesota. I'm hearing a lot of some discussion or concern among the regional or large bank CEOs about the sustainability and the ability to service the federal debt. Is the Fed having discussions about the level or sustainability of our national debt? And how concerned as citizens should we be in that regard as well?
So I predict you're gonna find my answer deeply unsatisfying, which is this is that segmentation between fiscal policy and monetary policy. Fiscal policy, as you know, is the domain of Congress and the executive branch to decide how much they want to tax the American people and what they want to spend on versus how much debt they want to issue. That's squarely their job and their responsibility. Our jobs are to keep inflation in check and to try to achieve maximum employment at the same time. I'll say this, there's great uncertainty about how much debt a country can issue before it becomes a problem. There are countries, smaller economies, that have run into trouble with lower levels of debt to GDP than we have today. And yet you have Japan, which has something like twice as much debt to GDP, and they seem to be able to fund their spending just fine. Why is that? I've heard lots of explanations and lots of theories. There's a lot of uncertainty. I would say this, we do know over the long term that what's enacted in current law is unsustainable. If you just look at the Congressional Budget Office is this nonpartisan group of economists that works for Congress, and they forecast out what's in current law in Social Security and Medicare and Medicaid. Just based on demographics alone, those programs grow to the moon. We know that's impossible. Something has to change. Either somehow the demographics have to change, maybe by a big immigration influx, and or raising taxes or cutting benefits. Somehow that has to get reconciled. And again, that's not the Federal Reserve's job to try to manage that. It's really up to Congress and the executive branch. But in the short run, we know our job is. It's inflation and maximum employment.
Very good. Any other closing comments?
Well, I really appreciate it. Great discussion, lots of really thoughtful questions. Always enjoy getting out. I've been to Mankato multiple times. Always have fun visiting here and just really appreciate it. If you see things that you think are noteworthy, reach out to my colleagues and I at the Minneapolis Fed. We'd love to hear from you. Overall, I think I get a sense from folks in Mankato is they feel pretty optimistic about the future. It's not all roses. There's some challenges, but overall, I sense optimism, and that sounds pretty good to me. So thank you.
Lots of clapping. They did amazing. Thank you. That's it, just like that. That took a lot longer than I expected, and none of his comments moved anything. However, the Fed futures got more bullish during all of that. So December rate cut odds, even March cut odds, they started to pull back a little bit in the opposite direction from yesterday. So you got a bit of their updates, but nothing that really moved monetary policy. So Chattadonia, we'll see where it takes us. But now we are approaching our earnings previews. However, I have to give you a PHILO. I know, we waited for it. They asked for it. It's an hour behind schedule, but don't worry. It's all going to work out how it's supposed to. So I do have a mini PHILO for you, Chad. So let's get it popping, baby. Oh, yes. PHILO before the YOLO chat. The irony, man, right? And I hope you guys are cautious with the earnings plays, but I have a mini PHILO. I'm glad. I'm kind of glad that your boy Kishkari took a decent amount of time because I could just work in a quick PHILO. I got a little mini one for you today, and I like this PHILO. I think I've shared this with you in the past. Similarly, you've definitely heard the name that I'm going to share with you, but I was talking with my moms yesterday, and this name came up. This name came up, ironically, and then another good point has arisen from it. So I'm going to share you a small PHILO. We're going to talk about something you all deal with, and I really think, I really hope that this one sticks with you throughout this year. We're still on month number 2 now. It's still the beginning of February, but, I hope what is said today is something you could keep in your toolbox for the rest of the year, okay? So here's the deal, though. Before I get into it, good job. Way to keep working on the PHILO. Again, the amount of PHILO requests I get on a day-to-day basis, they're up 1,000%. I see Chads working on themselves. I see some people realizing the door is getting reopened on PHILO. Some of the people are having their PHILO experience like it was the first time they ever had PHILO. And I love to see it, man. So honestly, if you are working on growth and improvement and living up to the potential that you have, keep it up, baby. That's what I'm talking about. For real, man, it's always a good and worthwhile effort. I think every society and world, religion, race, creed, being a better self and being the utmost of your high potential and being responsible about it, it's never looked down upon, no matter what the culture or the society may be at the time. I don't know if y'all feel me, bro. So, Chad, here's the deal. Today, I am giving you a small PHILO, a very, very small PHILO, and what we are going to talk about is something you all deal with. It is the number one topic. What would be I don't know if this is number. What do you think you all deal with? What do you think you're going to probably deal with throughout this year, throughout the election, every time you hear somebody on the politics, every time you listen to a Fed speaker, anytime, what is it, man? What do you think? I see self-doubt, emotions, life. You deal the cards, stress, fear, disappointment, stress, FOMO, stress. So maybe I should get one. Maybe I should get one about stress because y'all a lot of stress there, anxiety. Distractions. I think we might need one on stress. Boeing 737 MAX 9 report released by investigators. Much stress, disinformation. Ooh, well, I don't know if I should be concerned or not that nobody said this. I think this is a big deal. And it's nobody said this one. And it's interesting because, quite frankly, I see this more than I see stress. You know that? Oh, man, this one might blow your mind. Because I see this and I notice this on a day-to-day basis more than I notice stress. It's not uncertainty. Oh, it's not negativity. It's not greed. Oh, there it is. You know what it is? Anger. See, a lot of what you said sometimes, I think the source comes down to anger. You even think you stress it out, man, you might just be angry. You think you being negative, you might just be angry. Oh, you think a lot of things arrogant, you might just be angry. You tell me. Now I'm pissed. Yeah, I mean, think about it. I get into PHILO, people get angry, right? We get into plays, whether you like my strategy or not, people get angry. Whether we hit them or we miss them, people get angry. That TV come up, oh, wow, the SPY just flushed. So you just had that Bowen report, but you got Raul there out of nowhere. But think about it. I mean, dude, I'm telling you, the amount of anger that I see on a day-to-day is actually kind of wild. And like I'm saying, hopefully you see what happens. McConnell praises border deal, says it can't pass. I don't know why that's where, I don't think we're Raúling off that. Bonds ain't even move. Oh, you get angry with yourself. SPY gets angry. I mean, think about it. That SPY move probably made some people angry. Oh, you go look at a play that hit and then you sold out, you might be getting angry. You somebody in here hits a play, you didn't hit it, you might be getting angry. Oh, man, it's one of the crazy emotions. So, Chattadonia, today we're talking about anger. And honestly, I'm just going to give you the main point. You want me to give you the main point, the only thing you need right now to understand? This is what, and you know who we're talking about? My PHILO does not come from the Bible today. My PHILO does not come from a parable. My PHILO comes from one of the great Stoics, Seneca. And I have shared Seneca with, I've given you guys a history on Seneca before. Yes. And do you know what Seneca says? Because here's the answer. I'll tell you right now. I've been telling y'all, healthy relationships, learn to manage and get constructive from the guilt and other things in life that you're dealing with. Have constructive relationships. I hope your anger, you could build a constructive relationship. And what one of the great Stoics says, Seneca, do you know what he says the problem with anger is? There's one big problem with anger, and I hope some of you realize this now, especially my young guys out there. My old guys, I want you to think about this as well too. But for real, if you young right now and getting involved in social media, the world, and you dealing with the money, you already losing your hair, you got that 5 hairline, oh man. The problem with being angry, my friend, is that it becomes a habit. Oh, y'all don't feel me. Y'all don't feel me. Y'all don't feel Seneca. That right there is your answer to the PHILO today. That's it. That is the answer. I could share with you a lot more. I could go, I'll read you some quotes by Mr. Seneca, but it's very simple. And I hope you guys get this now, whether you are young or old. It's very simple. Once you start getting angry, it is going to be easier for you to get angry. Do you realize that? Once you give a foothold to being pissed off, you are going to keep getting pissed off. You haven't noticed that? You haven't noticed you stub your toe, you get mad, and then the next little thing happens, you're getting even more mad, and now you can't take it with all these people on the internet, and then this, and now this politician, one after the next. It's a habit. My homeboy Seneca knew this from back in the day. He says the more often you are angry, the quicker you will be to get angry in the future. So here's the deal. That is the answer. You have to watch out for it. That's all. I don't care anything else you hear me say. I could tell you what Seneca, he goes over all these little things. But man, one of the things is he says have a battle. He says have a battle with yourself. But he also says understand what you're getting out of it. And that's why I'm telling you right now. Yo, you want to stop being angry, bro? Stop letting it have a door. You want to know why you're getting so pissed off at the littlest things? It's because you're making a habit out of anger. You have to watch out for it. Again, emotions, stocks, we deal with it, man. You get mad at plays. You get mad at people in the chat. Please do not build a habit of it. Because that right there is getting in the way of your progress more than anything. I'm telling you. That's why I remember the other day, I was just making some jokes, right? Some guy was flexing. I made some jokes. And then somebody else started getting back at him. Both of them just got so mad. I'm like, dude, that was not productive. I apologize. I said I didn't mean to clown anybody like that. But I'm like, bro, that got in the way of so much, like literally both people's progress. I could just tell the way how anger got into that situation, puffing up chest and led one thing to the next. My goodness. Yeah, preliminary report on 737 Alaska air blowout. Records from September show 5 damaged rivets on frame of door plug. Bowen's not even moving. Spy's moving more. So, Chad, don't make anger a habit. And be careful. Anger is a habitual thing. Once you start it, you're going to keep doing it. It's really addictive. One thing after the next. And it will become easier to get angry at the next time. Now, Seneca, he says a couple of different things. You know, the first thing he says to like really understand anger is that you have to be more tolerant. And you have to realize you aren't perfect as well. How would you apply, again, do unto others? It's very simple. What if you made the same mistake that you're getting angry about? How would you react? But the number one thing he goes into is he talks about, and this is what I was saying, bro, know what the consequence is. Know what you're really going to get out of it. Quite frankly, can I ask you, have you ever been angry and gotten something good out of it? And don't tell me about the feeling, because I like the feeling of being angry and giving into it. That feeling, it's like hitting a Nick stick. You know what I'm saying? It gives you a feeling. It's a temporary feeling. But have you ever gotten anything good out of being angry? Like, actually. You're like, man, I'm so glad I was angry with this person, and then I overreacted, and then I caused bigger drama, and I'm so glad that happened. Maybe it depends. But usually it's a weird feeling you get out of it. So what Seneca tells you is very simple. Make a sound mind and a peaceful mind your top goal. Do y'all get it? That's it. Y'all want to do personal development. You want to do PHILO. I got a goal. I'm looking for revelation. The moment you are getting angry and letting that dominate every single part of your thinking, you have lost the goal of a sound and peaceful mind. Not only have you lost the goal, it's just no longer your number one goal. I don't know if y'all feel me. That's it, man. Don't forget why you started this. Next time you get angry at whatever it is, I don't care if it's stocks, family, life, your job, whatever, just don't forget what is your main goal. Because when you give in to anger, it starts to take over priority. It's very infectious. You know, and that's what he talks about. I hope you guys know, if you want to know, well, am I dealing with anger? Well, you know, and maybe you know some of the consequences it brings, but it's very simple. Anger affects everybody. He says it makes you a slave. It literally is spreading from one person to the next. Usually an angry person shared with you something that made you angry. Y'all should have wore a mask. Y'all need an anger mask on. He even says stay 6 feet from people who have anger. He says choose your friends wisely. But he says something. This is what Seneca says. He says, in short, the other vices seize individuals. You know, other vices in life. This is the one passion, anger, that sometimes takes hold of an entire state. Never has an entire population burned with love for a woman. No state in its entirety has placed its hope in money or profit. Ambition seizes men one by one on a personal basis. Lack of self-restraint does not afflict a whole people. Often, though, they've run into anger in one mass. Men and women, old men and boys, the nobility and the rabbi are all in accord. And the whole crowd, spurred by a handful of words, succumbs to a greater passion than the one who spurred them on. They rush at once to weapons and firebrands, declaring wars on neighbors or waging it against fellow citizens. Entire houses are consumed by fire, root and branch, and the man who has lately admired for his eloquence and held in high esteem is now the victim of his own followers' anger. That's what Seneca says. Oh, I don't know if y'all feel him on that. I don't think y'all feel him on that one. Y'all get that? So it's much different than a lot. Like, think about it. Like, for real, think about it. When was the last time a whole nation gets swept over sadness? It wasn't a marital, a girl issue, a boy issue that got people in there. It wasn't ambition. It wasn't even money. 9/11? Y'all think 9/11? Do you think we got into wars because we were sad? Or do you think we were angry? You think every war you see right now, every person who supports Israel, everybody who supports Palestine, do you think they're on the basis of sadness, or are we angry about what happened to one side, to the next side, or what? Anger. It has a way of consuming. And again, it spreads. Sad and angry. You could be sad, for sure. I do think that anger comes in. Again, and Seneca wrote this a long, long time ago. You know, another thing he says, to avoid anger, he even talks about this. And let me ask you this. How many of you are trying to get angry? Oh, I don't know if y'all feel me. How many of you are trying to get angry? Yeah, we saying it's a habit. Man, you may be addicted. Bro, you could be looking for it. You know that? Some of y'all are looking for anger. I know it. Why? Because I'd be saying y'all find a way to get angry on anything. But that's what he talks about. He even says, Seneca himself, he says, watch out. He says, do not seek info that will bring you despair. Oh, man. He says, very few men manufacture complaints either by suspecting what is untrue or exaggerating the unimportant. Anger often comes to us, but more often we come to it. Neither should we summon it, even when it falls on us. It should be cast off. I love that one. Because if you really think about it, bro, go live on the mountain. Go, like, literally turn off a lot of the noise. Get out of your little attitude. The one thing that made you angry that's leading into the next one and the next one and the next one. No. Pull it back a little bit. And you'll realize oftentimes you're not arriving into anger. We are vicious human nature as like who we are. But even to a degree, you are not just stumbling into angry things. Even if it does, you're not telling it to leave. That's what he ends it with. He says, just in case, even when it arrives at your door, you should cast it off. But he is also saying most of the time we're looking for it. Fedmester does not want to offer timing on rate cut. Headline coming out now. Fedmester sees no rush to lower Fed rate target. The bonds are going off that and the SPY. So, bro, stop looking for it. Stop letting it be contagious. These are all how you're going to not make it a habit. Again, homie has books on all this. Just huge meditations about all this. Don't seek the info that'll bring you despair. And you know what you want to know what the final things he says? I like it. You know, I guess this one kind of relates. How do you get around it all? How do you let anger go away? Simple. I'll tell you the number one, and if y'all don't think this is the number one lesson for investing, and if y'all don't realize finding a constructive relationship with this right now will change your whole entire life, financially, non-financially, everything. There's one thing to do that will always eliminate this problem. What is it? Patience, my friends. The simple word of patience. in time. That's what he says. That's the number one way to get rid of all of it. The best thing you could do when you are angry is wait. You realize that? The number one thing to do is wait. It's so crazy how this is the answer for so many things in life. He talks about acceptance and tolerance. Above all else, though, it's patience. He says some of the affronts that were sweeping you off of your feet, they will lose their edge in an hour. Not just in a day, others will disappear altogether. If the delay you sought produces no effect, it will be clear that the judgment now rules, not anger. If you want to determine the nature of anything, entrust it to time. When the sea is stormy, you could see nothing clearly. Time. So, Jad, maybe you are angry about something. Cool. Give it an hour. Give it a day. Then if you're still angry, then think about it and see what's really up with it. Then you could go about your plan of action. Then you could try to understand what it really is. Instead of right when something happens, reacting, then spreading it. First you look for it. Then you let somebody bounce off their anger to you. Then you take it and then think about how fast you could do that. Or, like I'm saying, have a constructive relationship with it. Learn what's making you angry, and then am I really angry after this amount of time or not? So, Jadadonia, watch out. The problem with being angry is that it becomes a habit. And the more often you're angry, it'll be easier in the future. Well, once you start learning how to get around this, you're going to start seeing maybe you're not that angry after all. And you're maybe a little bit more stoic than you thought. But take that one to the bank. That is your philosophy, ladies and gentlemen. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link, Nightly Watts is the main channel. First link, Screaming Larks Bootcamp and Real Estate Course. Now I'm going to go to the bathroom, and then we're going to get earnings previews. Amen. Amen, baby. Amen. Get you some Paul freestyle. It's out everywhere. Spotify, YouTube, anywhere you have music, man. It's all for you. I'll be right back.
Spiritual warfare is much more subtle, and it's much more tricky.
It's a call, baby. Yeah. It's a letter to the people. I'm penning it like I'm Paul. It don't matter about the evil. It matter about the God. It don't matter about the weapons. It matter about how you armed. All that matters is the weather. When weather to bet the farm. I ain't gotta see it to believe it. If it's signing, then it's needed. Then my eyes don't need a reason. I won't even try to explain it unless it say I got a feeling. I'm gonna sing my praise like David, but the king is still a killer. Listen up and go and get the tropes. Hope you know you ain't scared of them, they scared of you. And I know you might be scared to take that point of view. You see them arrows in my back? Yup, son, that's gonna happen too. But the harvest's on the way. You gon' barter every day. That means you have to make a trade. Either life or it's the grave. The result will not remain. Every day will bring a change. Kinda funny and it's strange how the hope will pave the way. You hearing what I say? The only difference between you and them comes down to faith. There's a difference in the man who believes in a better day. Cause once you believe it's past, you willing to wilt away. We was never willing to be the same. We want it all in the long run. They want it all today. My father is really awesome. Don't bother with giving snakes. Regardless, I can't control it. So either way, giving thanks. Yep. You could take that one to the bank. A leader without a rank, a speaker without a face, a people without a race. They eating without a taste, they scheming without a safe. The meanings have been replaced. Another time, another place, we could talk about it. Keep some oil in them lamps, don't get caught without it. Want them once, want them twice, they never talk about it. If you never get a second chance, then that ain't meant to happen. What I understand is you ain't trying to understand. Take 100 grand, then 100 undergrads. Pay them all to make a plan, but they couldn't comprehend what it means to never die, but somehow still be born again. It's a letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. It's a cult.
It's a cult, baby. It's a cult. Amen. 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 Y'all need some F-350. Y'all been missing it. good. It's game time. There's a letter to the people. I'm penning it like I'm Paul. Previews. All right, we'll give it some time, baby. We'll give it some time. Give it a 2 minutes, and then we begin. I'm already cooked up. I'm already ready to go. We even made some earnings plays. Again, you had 1,000%er today. Non-earnings, you had just under 1,000%er on the Toyota. Escondido. Oh, man. So are you guys ready? Are y'all ready for these previews? Here's the deal. We will begin in 2 minutes. I just sent out the stream alert so that they don't miss out. Again, that's why you get a stream alert. You won't miss out on the play, but then I want you here too. So you got any questions, you let me know. But here's the deal. We just had PHILO. We talked about anger, emotions, personal development. I really hope you do not use these earnings plays to fuck yourself over. Let me say that again. Do not use these plays to hurt yourself. What do I mean by that is that all the plays we're probably going to buy today, they are low probability plays that are not designed to win. We are seeing what plays will win and what is priced in, and then we are going in an opposite direction if we think that it's cheap enough, and the general idea is playing small. So like even the UPS play, that was 1,000%er. I only put $20 on it. You know, someone was like, I made $700 on it. I'm like, damn. So you probably put in like $200 on that, maybe a little less, maybe $100. I think it was a $700 when we sold out of it. But at the end of the day, the bigger the play, the more exposure you have to this. We have to understand here, all of these plays are very low probability. A little bit amount of money is your friend. Although they have big gains, we are not looking for big dollars on the outlay because we will most likely be wrong. Do you hear me? Can you hear me now? The rain has cleared. Don't get clapped. All right, y'all feel me? So is everybody on the same page? Be smart, be responsible, and understand most of these plays, all of them, are designed to lose. If they don't, we'll get paid. But if what is expected to happen happens, we are expected to lose. Now, hopefully one win makes it more than all of them, but at the end of the day, you've watched days of going dry, lose, 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 and then again, that one play that you hit or you didn't hit is probably going to be the one that does it, and then you're right back in the game, but that is all word to not gambling and going outside of your budget and going too crazy. Sound good? Sound good. Everybody with me? Everybody with me? Good. Did you like the video? I need likes on the video, though. Hold on. I need like, what? We need to get up to like 17. We only need like 20 more people. We're almost at 1,700 likes. I need you to hit that thumbs up button. Come on. We about to pump up some plays. I'm about to do your homework for you. Hit that like button. Let's go, baby. Let's get it started. Let's go. Hit that like button. Otherwise, I'm going to be like, nah, the stream alerts only. I'll just send it out to them. I'd be an asshole move, but I'm just saying we only need 20 more people. 20, beautiful. There you go. We got it. There you go, baby. We're ready to go. All right, so let's get into it. Where is our earnings calendar? FT&T worked out pretty good going early. The calls and the puts are both up. So when we made like, what, 30% on the calls, and then your break even are up $2 on the put, believe it or not. So early actually ended up working. Alrighty. So here is our calendar. We are going to start today with Snapchat, Enphase, Ford, Chipotle. I don't have ELF, so if someone wants to pull up ELF, or if you could get that info. I do have one that's more in writing, but it's not like the easy one. And then Fortinet, VFC, Amgen, EW, and Gilead. And then I have Alibaba, Uber, CVS, Roblo, XPO, and then Scott's Miracle Grow. I think Bungie, or I might be missing out on that one. We will see, but here it is, Chattadonia. The first one, the man, the myth, the legend, Snapchat. Oh, they told you that nobody uses Snapchat 5 years ago, and now they have more users than ever. It doesn't matter if they make money or not, because Evan Spiegel is still going to guide lower no matter what happens. So let's see what happens, but let's see where the preview's at. Let's see where the preview is at. Here is Snapchat. So they are expecting 1.38 billion versus guidance of 132 to 137.5. So analysts are higher than where the company has guided. EBITDA expected to be 110 million versus guidance of 65 to 105. Again, analysts are expecting higher. So even if they beat, analysts are expecting a better report out of Snapchat. That's maybe why it keeps holding up. EPS expected to be a loss of 17 cents a share. Global daily active users, 412 million. Average revenue per user, $3.33. CapEx, 32.9, and cash from operations, 139 million. Revenue for next quarter expected to be 1.12, EBITDA loss of 21 million, EPS of 22 cents per share loss. Global daily active users 419.3, ARPU 263 a user, cash from operations 218 million, CapEx 44 million. Since last quarter, October 24th, Snapchat is up 25%, even though they fell 5% on their last quarter earnings. S&P is up 16, XLK is up 22.4. Near-term options imply a 20% move. Last 4 quarters, loss of 5, loss of 14, loss of 17, and then loss of 10. They have not had a good earnings in over a year. Revenue has beaten 13 of the last 20 quarters, and EPS has beaten 12 of the last 20 quarters with 1 in line. So they are outpacing, and analysts are more bullish on Snapchat than the company has guided for. Wow. And then they sell off every earnings and then get bought up. My goodness. My goodness. So let's see what they're pricing in. It says about 20%. I'm getting 350 here, it looks like. 290. Yeah, 350. No, 290. I'm getting 380. Oh, no, it's about 350. It's 30 cents in the money. So 350 is what the stock is expected to move. So divide that by 1727. That's a 20% move. So at the money, if it goes 20%, nobody should be surprised, up or down. That is the expected move. These contracts are expensive because when you have a higher 1 standard deviation move, that means a lot is being accounted for in there. So I'm probably not going to play this. If we double it up, that'll be a $7 move either direction. So that'll be what? $24.30. So let's go to next week. $24, you're looking at 29 cents. What is that? $7 lower, you're looking at 10.20. Those are 4 cents. Honestly, those aren't that bad. You know what? I'm kind of down with 1 put on that. No way. 2 standard, 1 put. So 2 standard deviation put for $10. I'll grab these ones. We'll go 11 and we'll spend $10. I'll grab a $10 put. I'm down with that. That's it. I'm going to grab a $10 play. I bought the 11.5 put, one of them for $10. If we get lucky, that'll hit $11.50. Not a recommendation. Other than that, I think the calls and I still think it's expensive. I just think it's up too much. All of them. I think options, calls, and puts are kind of scammy. That's all, but I'm just like, I remember Toyota yesterday, we only spent $15. I'm down with if we get lucky on it, you know what I'm saying? But no, I only spent $10, not $1,000. I spent $10, like 10 cents a contract. All right, so Snapchat, that's the only play I'm going to do. So, again, if it does surprise, go bad. Macy's running right now. Yo, Macy's looks like a news candle. Again, I've always told you about how they had that buyout stuff. Where is it? Macy. Kohl's Pop and Macy's. Interesting. And Macy's got a candle and Kohl's. Vision One Partners pushes Kohl to explore a sale. Sources is the source. So Kohl getting pushed to a sale. We have not gone over PayPal yet, no. Cole's got, I'm looking, you could kind of, you just got to get lucky if that thing runs even more. Yeah, they're not letting you get anything on that chain. Kohl's does own their properties. That's where they'll do good at. There's like one option there. Everyone's starting to snake it now. The options are disappearing. It's confirmed, though. Vision One Partners push for Kohl to explore sale. That's the headline on there. And again, Macy's got a candle, too. MU dying. Israel on Gaza truce says Hamas response is being studied thoroughly. Shares might work out. Again, Kohl's is still kind of clobbered. I don't know when they have earnings coming up. All right, next earnings play. Let's go over Enphase. Homeboy loves to sell off. Where's Enphase? Snap, here's Enphase. So next play is going to be Enphase. I think I still have shares on that from the clapping a year ago. This thing sucks. So Enphase, their revenue expected to be $335.8 million versus guidance of $330 to $350. They're right there in the middle. Gross margin gap 47.5%, operating 3.3%, EPS 56%, cash flow from operations $171.8 million, capex $16.6 million, and free cash flow $131.3 million. Revenue is expected to be $317.8 million next quarter. GAAP margin of 49.1%, operating margin of 9.3%, EPS of 54 cents, cash flow from operations $122 million, capex $17 million, free cash flow $64.8. Since last quarter, Enphase is up 9.6%, S&P is up 18.6%, and XLI is up 18%. Near-term options imply a 15% move. Last 4 quarters, loss of 15, loss of 7, loss of 26, and loss of 4. Revenue has beaten 18 of the last 20 quarters. EPS has beaten 19 of the last 20 quarters. Forward quarter guidance has beaten 15 of the last 20 quarters. So they're pricing in a ton. So kind of like Snapchat, this one just might be really expensive when it's all said and done. So even if a big move happens, I don't know if the options will hit. You say SMCI, big pop. I'm down 3,600 on that from a year ago. That was just on 25 shares. It just got murked. So what are they pricing in? $100. They're pricing in $15, $15.10. So $30.20. $15.10 is the expected. $30.20 would be outsized. That'd be what, 130? Oh, they're right there at the cusp. The calls are kind of expensive though. And then $70 to the downside. The puts are cheaper. But that's crazy, though. That's a 30% move, though, for 2 standard deviations. So that one's up a lot. Yeah, I might ignore that one. But I think Enphase can move. I feel like they might be able to surprise. But they have just a high pricing in. So we'll come back to that. The puts aren't bad, but then it's like it's already died. But then again, maybe it just continues the death spiral. It's not like what's it called? It's not like it's been like solar's been on a tear or anything. So we'll see. Next play we got up on the list. That was Enphase. 70 to 130 would be 2 standard deviations. Next play is Ford. So this one's cheaper. I may not like this one either. So again, I'm just giving you these prices. Feel free to play them if you like. Just be responsible. But Ford, they are expecting to do $43.05 billion in revenue, adjusted EBITDA $932 million, EPS of 12 cents. Since last quarter, October 26th, they're up 6.6. S&P is up 18.6, and consumer staples, they're up 17.7. Near-term options imply 6.3% move. Last 4 quarters, loss of 12, loss of 3, loss of 2, loss of 8. Revenue has beaten 16 of the last 20 quarters with 1 in line, and EPS has beaten 13 of the last 20 quarters with 1 in line. And didn't they guide down not too long ago? Remember they came in with an early guide? So Ford, they're pricing in about 85, 90 cents. I'd say 80, 90 cents. 85. So $1.60, or we'll do $1.80. So $1.80 is 2 standard deviations. That would be $13.80. That'd be 9 cents. And then $1.80 to the downside would be, what, 10.20? Yeah, right? 10.20. Yeah. So 8 cents. They're kind of cheap. This is like the Verizon play. It might hit. The only thing about them is that it's a slow mover, but you're paying $10, but it's $10 a share. You know what I'm saying? So, like, you could just get one share and call it a day. It might. Again, I didn't think the Verizon ones, but those came up out of nowhere. It's just smaller, but, like, you're paying for an option the price you would buy a share at practically. So that's Ford. So no play on that one for now. The next one we have, this one's a great one. Chipotle. Young Chipotle. Extra guacamole. So this one's probably going to be mad expensive, but they are on a tear. So Chipotle, they're expecting comps of 7.1 versus guidance. MSD, HSDs, doesn't say the number. Revenue, $2.49 billion. Food and beverage and packaging, 29.9. Restaurant margin, 24.5. EPS, 971. Number of restaurants at end of the period, 3436. Next quarter, comps are expected to go up 4.6. Revenue of $2.66 billion. EPS of 1205, and then number of restaurants, 3490. Since last quarter, October 26, Chipotle's up 35%, S&P is up 18.6, and Staples are up 17.7. Near-term options imply a 7.4% move, kind of high. Last 4 quarters, gain of 4, loss of 10, gain of 13, loss of 5. Revenue has beaten 11 of the last 20 quarters with 3 in line, and EPS has beaten 18 of the last 20 quarters. Chipotle. Damn, they're pricing in $156. Woohoo! 160. Yeah, 160. I'm getting 165. 164. So we'll use 160 in the middle. So that'd be $320 either direction. So that'd be $2,150. And that still costs $500. Or $360 to the upside would be $2,830 or something like that. Still $1,000. Yeah. I don't know if do you guys want to play it? Should we just play it to see what happens? Not. That'd be like $1,500 both ways. You might be able to sell premium on that one. That one might be a good premium sell. Unless it goes crazy. That's like 7%. How do you get? You look at the at-the-money straddle price. Go watch the video. How we turn 600 into 7,000. This is a concept we've gone over for almost 2 months now. And we've had almost 2 months in a row. We've had, I think, even after this week now, we're on like 8 or 9 weeks in a row of straight-up 1,000%ers once a week. So we got our own little streak started, but I definitely go check out that tutorial if you're falling behind on any of it. We just went through Ford, no play. They're pricing in $1.60, I think, for 2 standard deviations. Yeah, that one's expensive. No to Chipotle, unless we want to sell premium, unless you want to just be bold. So, like, we could sell premium. Like, honestly, you could sell 2 standard deviations and still make $1,000. We could sell the 2800s, make like $700. If it doesn't move 2 standard deviations, you make money. Otherwise, you're clapped. Kind of tempting. Kind of tempting. Sell it. Nah, man, I'm not looking for problems. I like just cheap little plays. If I lose, I don't cry. If I win, I'm like, woohoo! You know, keep it small. Keep it small. So the next one in line, I think it's Elf, but I don't have that preview. Yeah, next one's going to be Elf, so we could just go over the pricing. I did make a play on this one because I thought it would have gotten ramped up here in the close and the premiums would have went higher. But Elf, I don't know what they're priced in for. We'll take a look at their history. I think their last earnings, though. I had one in writing. Let me see if I could get you that one. Yeah, what was it? Elf thinly traded. Which one is this? TD Cohen named Ulta as top idea. Elf valuation is full with challenging second half comparisons. Yeah, that's about it. They're probably pricing in a ton, though. So let's see what the options say for Elf. Pricing in $20. 2060. 20, that's about right. 2060. So 4120 would be 2 standard deviations. So that'd be like what? 221 or 223. So that's for going for $1. The 230s are out of the money. And then what? $42, $41 to the downside is like 130 something. Those are 75 cents. So 213. Oh, so that even the 220s won't even work. Yeah, it's really up there. Even the puts are a little cheaper, but it's not there. I grabbed one play this morning. I grabbed the furthest out of the monies just because I noticed the chain was kind of limited. But I thought if there would be any ramp up on this because they were running up there early in the morning. So I spent one of these. I grabbed one for 35 cents earlier in the day. They have gone down, and again, people do think they have challenging comps. But if they blow it out the water, they may get lucky. But that one is Elf. And now for the next one. Who do we have? Fortinet. This one we already made a play on. So this is the one I went up on both ways, and both plays actually ended up going higher. So Fortinet. This one's pricing in a lot too. All of these companies are pricing in a lot when I think about it. So here's Fortinet. They're expecting $1.41 billion in revenue versus guidance of $138 to $144. Non-GAAP gross margin 76%. Non-GAAP operating 28%. EPS 43 cents versus guidance of 42 to 44. Cash from operations 277.4. Free cash flow 212. Ending deferred revenue 5.5 billion and billings of 1.63 billion. Next quarter expected to be 1.37 billion in revenue. Non-GAAP gross margin 76.3. Non-GAAP operating 24.7, EPS of 37 cents, and billings of 1.47 billion. Since last quarter, November 2nd, Fortinet is up 15.4, S&P is up 13.6, and XLY is up 17.7. Last 4 quarters, loss of 12, loss of 25, gain of 6, gain of 11. So they're pricing in 10, a decent amount, but they have moved more than 10, ironically enough, and then one lower. Revenue has beaten 17 of the last 20 quarters. EPS beaten 20 of the last 20. Forward quarter revenue has beaten 14 of the last 20 with 2 in line. Forward quarter EPS has beaten 8 of the last 20 with 5 in line. That's for FTNT. Fortinet, also known as Fortnite. So they're pricing in about $7. 7. I'm getting 8. So, and the spreads are, I'm going to use $8. So, $16. $8 is one direction priced in, which is still over 10%. They're pricing in a little more than 10. And then what? $16 both ways. It's weird numbers. What would that be? 67 plus 16. 83. 67 minus 16. 51. So, 83 and 51. Oh, wait, I think I was using them. Was I using those? No, it's $7. I used the wrong one. I was using the February 16th. So $7. So $14, excuse me. So 67 plus 14, 81. 67 minus 14, 53. So they're pricing a little bit more than 10. So 53 and 81. Those would be the prices you'd be looking for. I don't know which ones we grabbed. So the 80s would cover the 81s. Those are 48 cents. And then what's the other one? 53. You could get those for 22 cents. So honestly, I still don't think it's a bad price. We already made this play. Which ones did I grab yesterday? So the plays I bought yesterday, I think they're both up right now. Yeah, they are. I grabbed the 80 for 29 cents yesterday. So this one's still kind of cheap, but it's going for 48 cents right now. I bought this one yesterday for 29, and then I bought the puts. I'll load up the put. No. Where is it? Yeah, these are the ones I bought yesterday. So I bought these for 29. They went up today. And then the puts, I bought these for 19. So the puts are still holding on. And then the calls just went up. I'm just going to ride that play out. So we just got a little bit of gain, spent less money. But it generally worked in favor. Kind of let up there. I did 2 standard deviations on Fortinet. So the ones I grabbed a 53 put and 80 call. The numbers I just calculated, they still work. So the stock just ran up a little bit today, but 2 standard deviations stayed the same. Just the price of the call is higher now. Tornado in Chula Vista? No way. Coles wants to break out. It's riding up there. You said Musk is suing Disney? Well, Disney's about to be a powerhouse now at 100. No? Okay. But yeah, I like Fortinet. I went in both ways for what? $48. And then again, we got a little bit of gains, but I like Fortinet. So we already made a play on that. Next one is VFC, I believe. Yeah, VFC. They're kind of a value play. And that VF Corporation, high dividend. NYC, are they still going down? I'm surprised bonds aren't higher. Bonds either need to take off, but yeah, NYCB's down 20 now. 85s is almost another standard deviation out the money. So you just got to watch out on that. SPY running up here. I'm surprised bonds ain't getting a bid, but NYCB still selling off. Here's for VFC Corp. They're expected to do $3.2 billion in revenue, gross margin 55.0, operating margin 12.5, EPS of 77 cents. Since last quarter, they're down 1.7, S&P up 17.7, XLY up 15.4. Near-term options imply 11% move. Last 4 quarters, loss of 14, loss of 2, loss of 3, and break even. Revenue has beaten 13 of the last 20 quarters. EPS has beaten 11 of the last 20. That one's weird. They don't have guidance, and then they're trailing behind the market in staples. But then, like, besides last quarter, VFC hasn't really had a big earnings move. So that one's hard to tell if it's pricing in a little or a lot. Does that make sense? So their last earnings was big, but that's it. Chile's former president, Panera, dies in helicopter crash. Oh, damn, that's sad. Oh, what's this one? VFC. So VFC is kind of weird. You say it's pricing in 18? It's pricing in $1.80. 16.5. Yeah, $1.80. Let's see, $1.80 divided by 16.87. I'm getting 10.6. So that's for one standard deviation. $1.80 would be like what? 360? I think that's right. I'll just be careful. Yeah, so 360 either direction. So 1687. So 2047 would be the high side. It's a cheap stock, but these are cheap. That's the only issue. And then what's the downside? 360. No, 1687 minus 360. 1327. And then these have limited downside. 10 cents. Let me see. Puts her down. What did we say it was? What was the upside? Seven plus 360. 2047. So these would make the cut. Let me check something. You'd still be out of the money on these. We did not do Uber yet, no. All right, I went with the Marches instead. I went with a little bit out of 2 standard deviations. I went only calls. I'm not going to grab a put. I grabbed 2 VFC March 22.5s for 15 cents a pop. So $30. Okay, what's the next one? So that was VFC. March calls. Went upside, no downside. And then next one is Amgen. I did March 22nd, VFC, 2 of them for 15 cents. Not a recommendation. So Amgen. They are the next up. Did I get the warning? What warning? The tornado warning? Tornado. I didn't get a tornado one. I had the flooding warning earlier. Amgen. Damn, they moved down 2 today. They've moved a lot. Probably off Vertex. So Amgen expecting $8.13 billion in revenue, expenses $1.6 billion, SG&A $164, EPS of $4.59 since last quarter. They've moved up 23%. SPY is up 17.7. XLV is up 14.8. Last 4 quarters, loss of 3, gain of 5, break even, and then loss of 2. Revenue has beaten 16 of the last 20 quarters, and EPS has beaten 18 of the last 20 quarters. Amgen, this one I feel like, dude, NYCB 52-week low. Bonds are running up again. So, again, I think the bond should be a little higher. But NYCB is getting insane now. Remember, the lower it goes, the higher the likelihood of failure. It just kind of a catch-22 there. So Amgen, it looks like they're pricing in, what is that, 14.50? 14.50. That's one for one standard deviation. So $29 either way. I'm just going to use the calculator, make my life easy. So 344.41. 77 is not that bad, honestly, for the 345s. Amgen just don't really move. And then what's the other one? What do we say it was pricing in? 29. $286.31. Amgen's, it's not bad on the calls, honestly. They've just ran up a ton. Yeah, Amgen is breaking out. NYCB collapsing. All right, maybe we come back to this one. This could be one of the bigger lottos. 77. We have not looked at Affirm or Disney. No, we're going to do those tomorrow. So Amgen, I'd be down to come back to that one. Let's see what we end up getting or not. And dude, NYCB is getting killed. 20. I'm surprised bonds aren't going up as much, but eventually you should start getting a bigger fear reaction in bonds. So it's Amgen. Which one do we have next? Next, EW. Edwards Life Science. Value Play. Oh, EW. Remember, we sold out of these, I think. Those actually have been running recently. I think they went up with all the other life science plays like Medtronic that did good. So EW's kind of already jacked. They've kind of already had their own little earnings reaction. So EW expecting $1.5 billion in revenue versus guidance of 145 to 153. Adjusted gross margin 76.8. Adjusted operating 29.7. EPS of 64 versus guidance of 60 to 66. Adjusted revenue 156. Adjusted gross margin 77. Adjusted operating 29.8. And then EPS of 66 cents for next quarter. Since last quarter, October 25th, they're up 15.2. S&P is up 17.2. XLV is up by 12.4. Near-term options imply 7%. Last 4 quarters, loss of 8, loss of 10, loss of 1, gain of 6. Revenue has beaten 16 of the last 20 quarters. EPS 13 of the last 20 quarters with 2 in line. Forward quarter revenue has beaten 10 of the last 19 quarters. And EPS has beaten forward quarter. EPS has beaten 5 of the last 18 with 3 in line. That's for EW, and then they had a massive move off of a sympathy recently. Looks to be $6.07. I say $6.50, so $13 either direction. Wouldn't I be like what, 202? $101.5. 75 cents. Kind of expensive with how much it's moved. Then 75.5. $0.20. I say March is better. You get a lot more time on it. All right, I grabbed a put for March. I'm kind of down. I'm only going to grab one put on the downside. I'm only going to go one way on EW. Just because they've ran up so much. And then I remember I held that to the long side, like towards the end of last year. Yeah, the Marches were a lot better. Because you could have got the weeklies for a little bit cheaper, but I figured, you know, if it is playing just more downside, they've had a crazy move. We could get lucky, get a little time, and then we still kept it under 30. You could have got the cheaper ones, but they're a little further out. All right. That's for EW. And then the final one of today is going to be Gilead. Gilead. Planter broke 22. Bro, NYCB's at $4 flat, still dumping. Yeah, they look hideous. At least the bonds are coming up, and then SPY was running before that. No, roll blow. Those are for the morning. We're going to get into those. We're doing the after hours plays for now. So Gilead, their expected revenue, $7.1 billion. Expenses non-GAAP, R&D $1.46 billion, SG&A $1.54 billion, EPS $1.76. Since last quarter, they're down 4.5. S&P is up 13.3. XLV is up 10.6. Near-term options imply 3.8% move. Last 4 quarters, loss of 3, gain of 4, loss of 2, gain of 4. Revenue has beaten 16 of the last 20 quarters, and EPS has beaten 13 of the last 20 quarters with 1 in line. So what did they move off of? They had to have moved off a competitor. They move less off. They move off random events rather than earnings. Their earnings don't move a lot. That's why the options aren't even pricing in that much. So $3.20, about 5%. To $3. Again, I'll do $3 flat. So $6 both ways will be what? $83.41. 29 cents, and then 74.40. The puts are a little more expensive. Oh, no, am I tripping? It'd be $6. So it's going to be like 71. Yeah, so you get the 72s. NYCB 4 still going. Yeah, I still have it right there. Where was it? Was it 83? I'm down $60 both ways. On the 72.5. All right, I grabbed the 72.5 put for 31, and then I grabbed the 83 call for 29. They don't move a lot. They're not supposed to move. I'm playing it because it's gap down $10 not too long ago, and then if they actually do, you know, think about it, a company that hasn't moved 4% in the last 4 years, or last year, you know, may be able to start doing some craziness now. And then 72.5 put at 31. NYCB 405. Well, short KRE instead of XLF is like the big banks. So again, I don't think the big banks are even reacting like that. Yeah, they're going up while the regionals are actually going down. Ticker is Guild, yes. Fortinet's running. Again, we have that play already. All righty. Damn, we only have 45 minutes. So we're done with after hours today. We have all of those plays. Now I got 1, 2, 3, 4, 5, 6 plays for tomorrow. But low key, I need to go pee. So we're gonna have mid earnings break real quick. Let me go to the bathroom. The first one we are gonna start out with is gonna be Alibaba. So shout out to Baba and the bunch. You got NYCB drop in. So give me a second. I will be right back. I'm going to go to the bathroom, and then we're going to do the earnings previews for the plays in the morning. So far, we already wound up with Guild Play, EW, VFC, and then a Snap Put. And then I already have the Fortinet. So we'll see. I will be right back. Follow me on Instagram at the Trading Fraternity, BRB.
Perspective, they do need to get to market. So we're going to be looking for some momentum there as well.
Suzanne, really appreciate your joining us today and sharing the results of your survey. Global Practice Vice President for M&A and Divestitures over at Bain, and thank you as well to our very own Nina Trentman, who covers deals. Coming up on The Close, Spotify's focus on financial discipline playing out well for the streaming giant. We're going to give you a recap of the fourth quarter performance next. This is The Close.
Fast-track your career path with short-term training at UEI College in Oceanside. Located at 2020.
Damn it, I clicked the link. I'm still going, bro. I had to go pee, man. It's not done yet. I had to cut it off. I thought the music was going to be playing for a little bit. Nah, man, y'all can wait. Hold on. All right, there you go, CNBC. Tell him. Wait, is it muted? How come nothing's playing?
They can't really let that real rate stay that positive for that long.
The market isn't exactly as narrow as some would like you to believe. Now, more lately, certainly, it's narrowed again, and the mega caps are the things that have carried you of late because their earnings were so strong. But, you know, from November 1st until today, the Russell 2000, I think, is up 15 to 17%. Now, the S&P or the NASDAQ is up, for example, 21, 22% over that time frame. Are we judging this fairly?
I think the point you brought up is a really smart one because, the calendar shifts and people forget about that big rally where small caps went up 25% in a short period of time. I think other panelists here would like to see the things borne out. I will say this. The equal weight S&P is trailing the market weight by about 20% over the last year. That's the most, or one of the most in the last 30 years. So we are at a point where I think we're going to start to see some reversion on this. I know we've been waiting for that, but we're seeing a little bit of that today. And even with small caps as well, they're much more. They have much more exposure to industrials and financials relative to tech. But you look at tech. We're all talking about the Magnificent Seven. Now I'm hearing this week the Magnificent Five. So that story can change as well. And Scott, you've been around long enough to remember the Four Horsemen from the late '90s.
You got a little bearish, or gave back a little bit of the gains on the Fed futures. But yeah, let's see where we're at now. So welcome to the morning of earnings plays. We're starting with Alibaba. We already got that up here. They're expected to do $260 billion of Chinese yuan. Y'all could figure out what that means. Gross margin 39.3, adjusted EBITDA 61.17 billion, adjusted EBITDA margin 23.6, adjusted EBITDA 53 billion. Non-GAAP earnings per ADS is 1912. Price history since last quarter, November 15th. BABA is down 17.5. S&P is up 10.5 or 10.1, and XLP staples are up 5.3. Near-term options imply 6.5% move. Last 4 quarters, loss of 9, gain of 5, loss of 5, loss of 1. EPS has beaten 18 of the last 20 quarters, and revenue has beaten 13 of the last 20, with 1 in line. Hamas senior official to Reuters, we intend to release the largest number of possible Palestinians being held in Israeli prisoners. some other updates coming up on that. So BABA, what sucks about BABA is it's already moved to huge today. So it's going to kind of be like Eli Lilly. See, so they're pricing in 570. You already moved $3 today. So you're right in the middle. So 550. I'll go with 550. So $11 will be 2 standard deviations. So 88.50. 52 cents. 11 to the downside would be what? 66? Either 66 or 88. 88's a lucky number in Chinese culture. We like the 8s. So 20 puts are cheaper. Puts are definitely cheaper after yesterday. You could go one way if you think it's going to die. If you do think they're going to have their next, sell the moment. You're not Chinese. I identify as Chinese, though. That's why I say we. I got the Chinese homies. That's all. I just speak out against Winnie the Pooh, though. Yeah, I don't know. Puts would be the only good one. I think the calls are still... But then again, if Baba does have a good beat, it will go nuts. But the puts aren't bad at all, considering. I'm down with one put, kind of like Snapchat. We'll go $16 for the 66 put, and then that's it. Otherwise, it goes up. Shout out to the long term, Small amounts, baby. Amen. I only grabbed a $10 play on Snapchat. Just one put. So the next one we got is Uber. This one's going to be insane. I don't know. I might even go one direction on this. We're going to find out. But Uber, they're pricing in expected $9.76 billion in revenue. Adjusted EBITDA $1.23 billion versus guidance of $1.18 versus $1.24. Adjusted EBITDA margin 12.6%. EPS of 16 cents. Gross bookings of $37.14 billion versus guidance of 36.5 versus 37.5. Take rate 26.3%. Monthly active platform users 148.3 million. 2.56 billion trips, or 21% increase versus guidance of at least 20. And then free cash flow of $878 million. Expected to do revenue next quarter of $10 billion. Adjusted EBITDA 1.26. Adjusted EBITDA margin 12.6. EPS of 20 cents. Gross bookings 37.43 billion. Monthly active users 148.3 million. Trips 2.58 billion. And free cash flow of 1.1. I have another slide because it was too big. Since last quarter, they're up 44%. S&P's up 13.6. Industrials are up 13.5. Near-term options price in a 7.7% move. Last 4 quarters, gain of 4, loss of 6, gain of 12, gain of 6. Revenue has beaten 12 of the last 19 with 1 in line, and EPS has beaten 10 of the last 19 with 1 in line. So Uber is going to be a tough one. I think it's already juiced, but here's the deal. If Uber continues the momentum they have, this is one that could just start breaking out, because it's already breaking out all-time highs ahead of their earnings. You get what I'm saying? So if they keep up the momentum and do good, I mean, who's to say where 2 standard deviations is on this one? But then at the same time, they're probably going to be really expensive. So they're pricing in $5.28, it looks like. $5.30, $5.25. We'll say 10, $11.50 would be 2 standard deviations. So $82 roughly to the upside. Maybe you could get these for 23 on the 85s. And then to the downside, that would be what? $11.50, 59, 60, $59 is right below 60. Those still seem kind of expensive. The calls are insane. it's still going to be expensive. I don't like the calls. Like I'm saying, the upside is insane. Just if they continue this whole profitability streak. All right, I'll grab one put. And then I'm going one more standard deviation out. I'm going with the 90 calls. They're up less, sadly. So I grab 4 of the 90 calls for 8 cents a pop, and then one of the 60 puts for 29 cents. Not a recommendation. You will lose money. The watch list is the second link in the description of this video. We even have the whole tutorial there on what we're doing here. And then what is it? I'm going to type this out for the scream alerts. Uber. I can't believe I went Uber upside. But like I'm saying there, there's so much weirdness with it. It could go anywhere. So I did the 90 call at 8 cents. And then plus 160 put at 29. These are all naked puts. Yeah, this is, again, nothing is different. So the same thing we've been doing for the last 2 months. Again, we're on like 8 or 9 weeks of 1,000% in a row, but it's the same video strategy from the tutorial. We're doing the same thing, keeping it low exposure. Again, I don't think I've spent more than $35 on a play today. I've gone in multiple directions, but again, like we're not spending that much on any of these contracts. Our stop loss is keeping it small, and that's about it. So that's Uber. Now we have CVS in the morning. Oh, CVS kind of moved a lot recently. So they're expecting $90.35 billion in revenue, gross margin 15.5, operating margin 4.53, EPS of $1.98. Healthcare benefits $27 billion, pharmacy revenue $30 billion. Price history since last quarter, October 31st, they're up 4.4. S&P is up 18.2, and XLP staples are up 8.7. Near-term options imply 5.2% move. Last 4 quarters, break even, gain of 3, loss of 4, gain of 3. And revenue has beaten 19 of the last 20 quarters. EPS has beaten 20 of the last 20 quarters. So you could flip the contract as long as you're far out enough. No, you are most likely going to lose on all of these plays. And if you don't lose, you will get back 5 to 10 times the amount that you put in. That's kind of been the general theme as of lately. Maybe more if you're even more lucky. Again, I don't know. Meta was what? Meta was a 2,000%er, but you are going to lose on all of these plays. That's why I'm only putting $10, $20. You are going to lose. If they hit, and we get a lot of them hitting, even better, but if you hit, you get your money back, plus some. Otherwise, most of these plays, you will lose money. That's not even a disclaimer. That is just legitimately just the probability, the odds of what we are playing. So CVS, I'm surprised. They're pricing in a lot, and they don't really move too much. So pricing in 360. We get like 350. 350. We'll do $7 both ways. So that'd be 80. 19 cents, 27 cents for the 80s. And $7 to the downside would be 66. 66.80. About 67, 23 cents. Decent. I don't want to play because they don't move, but they have. I kind of want it, but we'll come back to that. I think we've already got other ones. I'd rather go with some different ones, or we just call it a day here. But yeah, I'm not going to go with CVS. Very interesting, though. Not bad. 20 cents, $60 stock. And then it's moved around recently. So basically playing the lottery? Yes, if that's how you want to deduct it. Otherwise, we're just going about an option strategy. And, you know, in some instances, getting a good edge, and that's about it. But making sure we have risk management to not go overboard or put yourself in bad plays. But like I said, I mean, it's been 2 months of minimum 1,000% a week. Some weeks we've had multiple ones, but I just like, I've been, again, it's working. We're net positive, but at the same time, I have had a lot of reports where, I mean, maybe you're one of these Chads where you played every single one of them, they lost, and then you missed the one that went up. So it's not really, I just think you could get clapped on it, but at the same time, I mean, it's still, we are doing a little bit of work to find an idea. There's like, I just think the general pricing it in and knowing what is expected, that could help you make 20 different plays if you really are a savvy trader. If not, but if you are waiting for the faceless guy to tell you something, it's going to be, you know, more hit or miss. But at the end of the day, I mean, the math that we're doing, it does yield very specific results that, depending on how you want to factor in, I mean, there you go. No forward play. But we already went over all those numbers. KRE red. All right, next play is Roblo. Roblo kind of got the pin. So Roblo, they're expecting $1.08 billion in revenue, adjusted EBITDA $190, EPS loss of 55 cents, ending deferred revenue $3.75 billion, free cash flow $83 million, daily active users 70.7, hours engaged 16.39, and average revenue per user is 15.21. Price history since last quarter, November 7th, up 11.7. S&P is up 13.3, and XLK is up 16.1. Near-term options imply 14% move. That's insane. So it's pricing in a lot right there. Again, Uber was pricing in a decent amount, but we still went with that one. Last 4 quarters, moves of 12% gain, 22% loss, 7% gain, and 26% gain. Revenue has beaten 6 of the last 11 quarters. EPS has beaten 2 of the last 11 quarters. Roblo, it's expensive. That's the only thing. So, again, even if it moves 20%, you may, like, again, just like any of those plays, like Palantir, you would have been better off playing Palantir in the morning, like we talked about, and that was one of those. So, again, even Spotify. Remember, Spotify was pricing in 10%. We said no to that, and that, sure enough, all of those you could have gotten at a way better price in the morning. That's my only fear with some of these. Because, like, you're just spending a lot, so they're pricing in what? $5.50. Damn. So $11 either direction. 41.38 or 51.38. 58 cents. That's still kind of a grip. And then $29. 10 cents. 29.30. Puts aren't bad, but I don't know. I think I might burn Roblo. Yeah, because 30 is still a little lower there from the last 2 quarters. Yeah, I think it's we'll go for post earnings on Roblo. Next one is XPO Logistics. Again, these are all for tomorrow morning. So XPO, they've been running. Remember, they went crazy the other day. We had no idea what was going on. Their revenue expected to be $1.92 billion, adjusted EBITDA $243.8 million, EPS of 62 cents. Since last quarter, they're up 41.6. S&P is up 20.5. XLI is up 19.8. Last 4 quarters, or near-term options imply 9.6. Last 4 quarters, gain of 15, gain of 4, gain of 3, loss of 14. Revenue has beaten 12 of the last 20, and then EPS has beaten 18 of the last 20. TLT on the high. So they had 2 quarters they didn't move, and then 2 other quarters they moved gigantically. So they only have these weekly, so what, 990? Yeah, we'll do $10. So $20, 120 or 80. 55 cents or 50 cents, about same price, $100 both ways. Kind of expensive. It can move though. But that one's still kind of even, it's like it's either going to not move or it moves gigantically. That one's more of a coin flip. Not bad though. Not bad. And then finally, the last play, SMG, Scott's Miracle Grow. Didn't they have a big earnings recently? All right, Scott's Miracle Grow, 412 million expected in revenue, non-GAAP operating income loss of 70 million, EPS loss of $1.47. Since last quarter, they're up 29.3. S&P is up 18.2. XLB is up 9.2. Near-term options imply 12% move. Last 4 quarters, 19% gain, 19% loss, loss of 8, and then gain of 12. Revenue has beaten 16 of the last 20. EPS has beaten 14 of the last 20 quarters. SMG, I should have put it up here. So they're pricing in $7. Literally $7. So $14 either way. What's that going to be? I feel like this is easy math I could have done. So 69 minus 69 or 41. 10 cents for the puts, 15 cents. And then the 70s. I'm kind of down with that. They're more of a value play. I have no idea what it just filled me at. All right, I grabbed the call for 25, and then I think I got the put for 12. So 30-something both ways. Honestly, and that play moves a lot. I'm actually kind of down with that. We already did Baba. I think we only got a put on it. Which ones did we get there? 80 call and 40 put. Such a wide range. That range sounds, but then again, they move. This is like one of those value plays. So if they come out with like good news, they could run a lot, but then also they're kind of just in the death spiral, failing lower. Yeah, 80 call. Because again, wasn't it, where are they at now? 55 plus 14. Oh, wait. Why did I grab an 80? Am I tripping? Wait. Yeah, $14 should be what? Oh, I meant 70 call. Oh, I meant the 70 call. I'm an idiot. I was like, that makes no sense. Yeah. That makes way more sense. Yeah, I grabbed the 70 call. Okay. NYCB, another new low. Damn. It's going to have its crazy pop eventually. Alibaba's running up at 78. Oh, wait, that's the last play. That's the last play. So how much did we spend here today? Let's see. So we did $25 plus $13 plus $32 plus $29 plus $17 plus $31 plus $29 plus $35 plus $30, and then that's it. Oh, then plus 10. And then the Fortinet, we spent how much? I think 40, 48. So without Fortinet, 251. And then you add the Fortinet, 299. And that's a lot of plays. Again, we have Snap, VFC, Edwards, Guild, Baba, Uber, SMG, and Fortinet. That's like 8 plays for $300. Not bad. Not bad. Thank you for doing them. Of course, man. That's it. That's all we have now. So we've gone over all of them. Make sure you guys are here at 11 or get the stream alerts so you don't miss it or anything. Other than that, watch the tutorial, and now we wait. And now we wait. I do pay commissions, but it's very, very low. It's like whatever the per contract fee. So the 3 cents or whatever it's at usually. That's it, man. We out here. We out here. Stat play. If y'all missed it, y'all missed it. I'm sorry. Y'all got to be here. Don't repeat the plays. Again, you got to either pay attention or pay the premium, but it's been 2 months now. We've been doing the same schedule. You know what I'm saying? So I say I want you locked in. If you ask me when I'm going over the plays, I give them out, but yeah, man, you're too late to apologize. The tutorial, just go on YouTube, search Ghetto Standard Deviation. That's called How We Turned $600 into $7,000. It's a little bit higher now, too, if we made an update. Which do you have the most confidence will hit? I don't know. Especially after this whole last couple of weeks, you know what I'm saying? We, like, randomly just get, like, ones that hit. It's hard to say. It really is. I like all of them. I like any of those plays. I have a little inkling towards them, but not enough to, like, bet the farm on them. Like, Uber is tripping me out. I think Baba's tripping me out. And then even, what's it called? The, like Scott's Miracle Grow. I like that. VFC Corp. So all the ones that were in. But then again, it's just like, you know, there's plays I felt good about, like first 5. That should have hit, and it did. But then even then, if it comes back down, it's hard to say. So, but all the plays I went in on, I mean, even if I didn't like anything about the contracts, there was one thing I liked or not about them. So made some moves. The order of operations for signing up for the plays? What do you mean? Just get here at 11 or again a little afterwards, and then we go over all the previews. So pretty much every day there's earnings. We're right before Power Hour. We're going to go over all of the plays, calculate what's priced in, calculate 2 standard deviations, and then go about making all of the plays live on stream. So every single one of these plays I have done live in front of everybody. So we are making sure, but just we have our little window. And then that's it. You watch the tutorial, then come on stream, and then you should be able to do it without me. But even then, if you want some Chad insight, you could tune in while we do it, and then that's it. The tutorial is called Ghetto Standard Deviations. So I think I'm the only one on YouTube who has ever called a standard deviation ghetto. I'm known for that, I guess. I invented the ghetto spread. But, like, if you just search on YouTube ghetto standard deviation, this should come up. You'll see others, apparently people make ghetto spread videos, but the easiest strategy. It really is easy, man. I'm telling you, just search ghetto standard deviation. I'm telling you, I'm the only mother effer out there just calling it ghetto. So you'll understand the reasoning. And like I say in this video, and even like, again, every day I do this, I always get a little bit of side eye. They're like the market makers eating off of you, and then we're making 2,000% the next day, whatever it may be. Oh, lotto tickets. But like I said it, like you could hate, you could talk your smack about it, but there really is something you could learn from this strategy. It gives you numbers, it gives you prices, and all it is if you have your own strategy, knowing how the option market prices stuff, this shit is going to help you out regardless. So I hope you apply it to your strategy before talking outside your lip, But at the end of the day, people will be people, but it's like you can apply this into any way you trade. You don't have to trade how I trade, but you could literally apply this in your own trading style and at least have an idea of what is expected and what's not, and have a way to do it in your head very, very quickly. Very, very quickly. And that's the benefit about this is like and then it works with other stuff not related to earnings. But if you could just run it up and do it quickly in your head, you'll be good to go. But yeah, check it out. Check it out. Again, I know ever since then, a lot of people have been loving it. It's been a great video, especially with options and just keeping it small too. Like I said in the beginning, just make sure that you just don't play small. Because again, a lot of the criticism is correct. Like these are low probability plays. You know what I'm saying? Like how much money we put towards the plays should reflect what is really going to happen. You know what I'm saying? Versus, thinking these are going to change your life and putting your whole account in. It's like, nah, that's kind of that's very foolish. Above all else. First week, fell in love. Now you learn. Let's go get a long term though. Without the long term, that's it. Why puts on Baba? I mean, if it hits in the long term, we'll cash out, right? Because we're already up on it in the long term now. But like, I think Alibaba's expensive on the call. All the calls went up like 400% today. So if they fail, the puts come down. That's the only thing that's cheap. But then again, I may miss out. Like, you know what I'm saying? Like, a lot of times I go one way, I'll hit the play, I just hit the wrong direction. So that's my sad reality. Remember, there was a week where 3 plays that I went one direction, they all hit 1,000% in the opposite direction. So I would have made money if I played both, but I'm taking the risk. So like I'm saying, apply your own strategy. If some of these plays go, like Uber, I went for the upside. I didn't want to. Uber, I felt was pricing in a lot. Same thing could apply to Baba, where just like if they come out swinging really good and they do very well, the upside could be very untamed for some of those, but I just have not been able to. Think about it. Josh has amassed great wealth. That sounds so noble and Victorian. Maybe not noble. I've amassed great wealth. Is playing 20 to 30 bucks in a play. That should tell you something. It should, but even more, man, like, I'm telling you, I like playing these. And I like playing them small. I like getting in the action. I like pricing in what's happening and having an idea. And I like the small moves on them. But I don't again, like, because it's crazy. Like, some of these futures, I'm down way more on my bond plays than not. You know what I'm saying? But it's just like, it's a good way to get in the game without having to spend everything and really have any consequences. And there's more upside than not if you balance it out the right way. As long as you're not spending too much and putting in your whole account, keeping it very tiny, you know what I'm saying? Like, you just gotta run it up, man. It's super easy. But I like it. It gets me involved. I like the involvement. I like the small amounts of money, but it's like you don't have to go crazy. Snap, who knows, man? We got 10 minutes, 12 minutes? Oh, my goodness. Oh, my goodness. Snap after the bell, bro. Holy. What options did you price out 2 standard deviations? So, like, if I could do it in my head right now, you should be able to do it. So I'll look right now because I forgot. I'm doing it in my head. Okay, I have my prices. I remember this one now. So what prices do you have in mind? You could do it quickly. 2 standard deviations. CVS, what would it be? $2024, I think, is going to be a weird mix of last year. If we don't have a problem, it'll be positive. If we do, it'll be negative, and then a lot depends on policy. Device, so go see what's priced in and then double it up. 78, close. You're close. How did you get 78? You're close though. But I'm looking for for 2 standard deviations, I would be looking at a strike price a little higher. Ted, show your work. Show your work. Got to show your work. Can you sell these if they're not going to hit? No. Well, you could sell them now. Some of them went up already. So you could sell out of the Fortinet with almost 150% if you want to. But once the earnings happen, the premium dies unless it goes in the money. That's kind of been the nature of how these have all played out. $65 billion to the sell side, that's it? Well, I've not heard back from Jacob. So very simple. I was looking for a price, just running it quickly. What's priced in? $360, $350. Double that up, $7 either direction from the current price. What price would $7 higher give you? And then there you go. $7 higher, $7 lower. Those should be your strike prices. And then again, I don't even, it's not like I'm against CVS. I just think CVS it doesn't really move too big on earnings. So it might have that ability, it might not. I think CVS is a wild card. Oh, Amgen. I wanted Amgen too. I forgot about that one. I think Amgen is a lucky play. No, my option chain won't work. So maybe I'm not meant to get it. Yeah, my whole options chain just fried. Wait, my Fidelity just disconnected? Oh, my E-Trade just disconnected? Am I still on YouTube? My YouTube just disconnected. Can y'all hear me, Twitch? Does anybody hear me? You hear? That's so weird. Everything just... I see the chat. That's so weird. Wow, Pizza, you used your first message to say hello. Good. Welcome. I was probably gonna go grab that Amgen, but no. My thing just went out. Oh, never mind. We're back. Hello. I think it was the 350s. Yeah, my each. Okay, I grabbed one Amgen. I got a third, so I spent $330 today, including the Fortinet. I grabbed an Amgen 355 for 30 cents. Yeah, 355 at 30 cents. Oh, the elf. I forgot about that one. Well, that Disney plays rocketing. PayPal's came back. Toyota came down. Bro, those Fortinets are running. So the Fortinets went up over 100% now with the spread. And then one of the old Starbucks came back. All right, we'll hold. Elf is expensive. I'm kind of down to sell it. You make like $2. And then that's final 5 right there. Then again, I feel like right when I sell it, it's going to miss. I don't know. We might get lucky on Elf because people are tough comps, but if they continue the strength. But Elf, we could just lower our amount there by $40. Snap, I only went puts on Snap. I think the calls are up there, and it's one of the higher priced ones. Again, they're pricing in like a 20% move. Baba taking off. Yeah, Baba's in the high. Uber's at the high now too. 70, 60. Disney, bro, right below 100. All of them. Yeah, Starbucks, dude, one of those Starbucks plays came back up. Disney 99.22. SPY just got a fat green shoot on final 5. My goodness. Yeah. Look at the time. Look at the time. Chattadonia. The new guy is going to arrive here. So we've made our earnings plays. We even got to take some profits on some nice ones this morning as well. So I hope you're feeling good and excited about tomorrow, but I want you to have a great evening. You guys have already been a great audience, so it's my duty to tell you. As we approach the close, the new guy comes on, and he is extremely loud. So I want to make sure you end your day good. Sometimes we've had people report loud noises have caused a various degree of ailments, from bleeding, rupturing eardrums, anuses, fluid leakage, gout, swelling, inflammation, a lot of things, bro. It's disgusting. Herpes, and worst of all, dormant BBB. It is contagious. So just letting you know, when I say earmuffs, that is your moment and your warning to mute your speakers so that you do not get affected by any of that, all right? So if you are sensitive to those loud noises, just keep that in mind. But Chattadonia, earmuffs, earmuffs, earmuffs. Mute the speakers. It's time. Earmuffs. All right, ladies and gentlemen, we're making our final approach. If you guys are holding on to any bags, please stow them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisles with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in the description. That's going to be your nightly watch list and main channel layover around 4 p.m. Pacific time. Then we're going to be taking on promptly around 6 a.m. out of sunny San Diego, California. So you make this final approach into San Diego International Airport. It's about 50 degrees, very cloudy, but despite the weather, there is a tornado warning in San Diego. Please get under cover and run away. You have all got this on your phone in San Diego, so only other good news is we are no longer under COVID guidelines, so no masks are required. So we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys in business. If you're interested in the Nicole Rapid Awards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the coat, and hopefully have a wonderful evening. Chad, you don't have time. Earnings after the bell. You have 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, it's time to wrap it up. Bring it home. Finalize those plays. Speak now or forever hold your peace. Shares, options, futures, the earnings plays. You got to make up your mind. Snapchat all the way down to Uber and Alibaba and Ford and Chipotle. You need to make up your mind right now because there is less than 10 seconds remaining, and then that's it. It's all in the books. 4, 3, 2, 1. Ding 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 ding. Or no, let's go, baby. Oh, Chattadonia, happy Tuesday. We did it. We made it. The earnings are coming out. I don't know. Is Snapchat out yet? It usually comes out right away. That's it. I need the GGs till they come out. I need the GGs till they come out, baby. Let's go. Don't matter if you gave my money or lost money. I know you learned something. Everybody that contributed, plays, earnings, anybody participating with the earnings pricing in, baby. News, info, contribute. Is it out? Oh, no. It's not moving like crazy. I don't see it there. I don't see it there. Hold on. Hold on. Did they come out with the good earnings? GG, baby. Shout out to Twitch. Shout out to members. All the people donating. They didn't have to. All the people who like the video. Let's go, baby. Let's go. Shout out to members. Shout out to Stream Alert. Pay attention or pay the premium. You know what I'm saying? And all the people showing love regardless. It comes out at 410. MSTR had earnings. Amgen, Cognizant. So we got Amgen. I just saw that one rocket through. A good game, baby. Amgen, are they moving? No movement? Come on, Yalla. Yalla. It is Amgen. Shout out to members. Shout out to members. I need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk. You want to hear Roblox? I was gonna hit. You know we haven't heard though. I think we need it. Let me hit you with this. The earnings ain't coming out. I love you, Chad. God bless you. Thank you for being here. That's it. We're waiting on the earnings. End phase.
Where's Jim?
Is that why Arc is up?
Nah, me.
Like they did end phase.
It's 4 p.m. I have 4 p.m. so I wake up, bitch. Shout out to Prezi, that's me. You just call me JP. I do not answer no questions. You could lead that to Shaki. Camera riding with me. She'll lock you up for some weed. Say bad things about that vaccine.
Oh, Gilead,
make sure you won't speak. Got a laptop you won't see.
Didn't we go both ways on this?
But that shit was weird with his feet. I love my congressman trade. Shout out to Nancy, she paid. Double your gas in a day. Them must say Putin's to blame. Real politics in your face. 500 bill on the way. 500 mil to Ukraine. Every day. Javelins keeping them safe. Fuck it, just send them some planes. Tell them keep growing them grains. All of my bros and they old. None of they borders is closed. All of us got climate goals. All of us straight together. Strategically releasing the ore. They said that Putin won't fold. They ain't my cabinet no more. Fuck the squad, fuck the foe. Had it now, fuck a roll. Now we going practical. Hunter my dog, that's for sure. We ain't gon' fight about shit. Especially not 10%. We ain't gon' fight about hoes. Me and Nash get the votes. I be that shit on the low. I got Congress in control. I got your student on froze. I got your mortgages froze. I got Keystone on froze. But man, you shit on my froze. I'm getting faded, I'm eating this ice cream. I don't like voters who ID. Questions from press, that's unlikely. Bring up Trump if they don't like me. They give me the Eddie, I wake up. Passing bills, that's a layup. I'm the big man, I got say so. They lock you down if I say so. Booster on booster on booster. Mandate on mandate on mandate. I just gave Evie a test rate. Fuck you, Elon, I won't even say your name. Came in the office already ballin'. Silent just change my name to Stalin. Right off the screen and I'm gone with the wind. Do nothing about something till they pass a bill. Pull up in a brand new Benz truck. How about fresher than a bread truck? How I got it, how to just, yeah. How I gotta make it one car. Station on your block, took off. Mixing up my words, I'm live. So I think they mad. My fault, talking about inflation. I caused, dumping our oil turned me to a savage. $1 saved on a gallon. Fuck OPEC and King Salmon. And fresh, I'm tired.
Yeah, I don't know why Guild. I was saying Guild, slight miss. Amgen, slight beat. They just ripped that close. But Guild is actually, I mean, again, if it goes a little lower, I think our Guild plays, we were at like 72. I feel like we were really close to the money on Guild, surprisingly. So Guild, but then they slightly missed. Their guidance range was a little higher. And then Amgen slightly beat. They're not moving at all. We haven't got Snapchat yet. Gilead sees full year total PDT excluding Velclery between 25 billion, 25.8 and 26.2. Inspire Medical sees full year gross margin of 83 to 85. Oh yeah, I forgot about Elf. Did Elf come out yet? Or are we still waiting? Elf moves up a lot and then it just sells off by open. That's the only thing that sucks about it. And then we're waiting on Snapchat. We're waiting on Snapchat, baby. Snapchat. Oh, Fortinet's out too. Elf is down. Hold on, I think Fortinet came out. I'm seeing an early pop on Fortinet. Did we get lucky on that? Yeah, Fortinet up 9.72. Our calls are at 80, I think. So they already had a gain there, but I don't know. Fortinet, we might get lucky. That one has upside. Yeah, we have the $80 call. I think Fortinet beat, and then Elf is already on the low. And then Ford's coming out. Looks like Ford got a beat as well. Let's see. Fortinet. Elf is already down 10. Elf is down 5. Fortinet's up 10. They released report. I don't have easy numbers. Oh, total revenue was 1.42 on Fortinet. Billings up 8.5. Let me see. Elf is getting clapped. The puts would have been great on that. Did I grab a put? I don't think so. I think I only grabbed the call. Yeah, damn it. That's down 6. End phase 54 cents. Estimate was 53. Shipped 80.7 million watts versus 87.2. I feel like they're just down. I feel like end phase is just down. Fortinet now, that's killing it. That one might have hit. End phase is down again. They're going to fucking die. They're going to die. I have the numbers on Fortinet, but not the easy ones. Where was it? So Fortinet, 1.42 billion. So they were at the higher end of guidance. Billings up 1.86. Where is it? Billings did very good on Fortinet. So Fortinet's up 16. We need that one to hold. Ford, adjusted EPS 29 cents. Estimate was 13. Sees adjusted EBITDA 10 to 12 billion. Estimate was, dude, didn't they just lower it? I swear Ford lowered their guidance 2 weeks ago, and now they just raised it. What the hell? That makes no sense. They just raised their EBITDA. I swear, didn't they lower it? Elf is just dying. Elf on a shelf. Ford would have hit. Yeah, $13 was the call. So you would have been in the money on those. Those definitely hit. I mean, end phase going up now. Holy shit. End phase is on the high. VFC, I don't know. VFC's down. I think we have the downside plays too on that. Ford, dude, no. Ford is a trip. They literally lowered their guidance and then just raised it. And then Fortinet was getting close to the 80. It might chill out. Hopefully they don't aim at us. And then Snap still isn't out yet. We still got a couple of minutes. End phase is up. I thought end phase missed. Fortinet beat. Elf missed. And then we are right here. Just chilling. Yeah, Fortinet, they guide for 37 to 39 on revenue of 1.3 versus estimate of 37 to 137. So Fortinet was like a slight beat, but wasn't the craziest. They guide full year EPS 167 to 170 versus consensus of 1.6, and then they have revenue 5.7 versus guidance of 5.9. So Fortinet wasn't the best, but they're still holding up there. Snap doesn't come out yet. Snap's either in 2 minutes or in 7 minutes. End phase misses everything, and maybe it's time though, man. Maybe they've missed every single quarter. So let them have one, bro. You know, the Elf is down. The Ford right now, you would still be out of the money. So, but they were going for 10 cents, and then anything above 13, you'll make dollar for dollar. VFC, let me check. They're down. What contract do we have on VFC? Oh, I only grabbed calls on VFC? Fuck me. Uber and EW. Edwards is after the bell today. Uber's tomorrow, and then Baba. So VFC was 57 cents versus 77 cents. They missed. And then they initiate strategic review of brand assets. Revenue was 2.9 versus estimate of 3.2. So they really, really missed. Yeah, VFC move. Snap is up. I don't know what in the world is happening. What sort of, what world are we living? I don't have Snap out yet. Bro, Snap just shot up $1.50 off nothing. Even Pinterest going on. Hold on, check on that. Anybody see Snap? I don't have Snapchat out yet. I don't see Snap anywhere on multiple wires. Here we go. End phase pulling back. There's Snapchat. Loss per share of 15 cents. Revenue was $1.36 billion. They see revenue 1.1 to 1.14. Estimate was 1.1. Again, bro, it's the same story every single time. We were looking so good at 18. So let's see. Revenue was 1.36. Fourth quarter revenue. So they missed slightly. Loss of 248. How much were they expecting? EBITDA was what? Let me see where EBITDA's at. Adjusted EBITDA beat. Interesting. So EBITDA was 159. The estimate was 110. Operating cash flow 165. Let's see. Active users 414 million. First quarter daily active users up 20. Sees full year or sees next quarter 109 to 115. Sees adjusted EBITDA 55 million negative to negative 95. I don't think anybody wanted that one. Yeah, adjusted EBITDA guidance was way, way lower. Why the drop in pop? So they're only down one standard deviation is because it was running up before earnings, and then that's it. They Snap just didn't do good once again. Just nothing exciting. Again, they may just come right back up, but yeah, it's the same. I don't know what they warned about this time. But literally, even their adjusted EBITDA and earnings numbers were very, very low. Snap hasn't had a good report in like 2 years. No, I don't think they clapped the market. Everything else is pretty good for the most part. Come on, Snapchat. Again, we should have sold the covered calls earlier. Chipotle revenue 2.5, estimate was 2.49. EPS 1030, estimate was 970. So Chipotle running. Chipotle. Yeah, Chipotle running all over the place. Yeah, Amgen was a slight beat. Snapchat may just end up going higher, but at the end of the day, just so far, there's nothing on that earnings that's getting everybody excited. They see 55 to 75 in costs related to restructuring. Again, daily active users 414. Adjusted EPS 8 cents. Maybe their only good thing. And then free cash flow 111 million. 20% on the candle. Yeah, bro, it's Snapchat. Remember, they were pricing in, what, 20 to a little bit more? So they're right now at one standard deviation. That put may hit. Didn't we only grab a put on it? I forgot which one we grabbed. 1150, so we're still out of them. They still might cuck us on that unless it like really, really drops. Snapped the valuation in half, down 16%. How you know it's priced in? Based on what the option chain was pricing at the straddle. Ford declares first quarter regular and supplemental dividends. Outlook for full year includes adjusted EBITDA of 10 to 12 billion, adjusted free cash flow 6 to 7, and capital spending of 8 to 9.5. Wait, they had a special dividend? Huh? And then Amgen, they didn't move at all. Elf came back up, surprisingly. Guild is still down. Edwards hasn't came out. And then what's the other one? Supplemental dividend. Yeah, so Ford's paying the extra dividend. Snap going lower, down 20 now. You're mad that that's one of my true long terms. It's okay. Well, you know we're up on it. I mean, now I still think we're up on Snapchat. And then after covered calls, you know, I guess $15 would be our other price there, or $14. So we're barely going negative on it, but I haven't bought it in 3 years. Don't worry about it. Don't worry about it. Snap puts would have hit. I got only one snap put, so we did grab them. We didn't go to the upside on that. Snapchat missed just once again. Just literally, like, very underwhelming. This time they didn't even, like, cry about anything. But it just seems like they just don't know how to come up with the good earnings. Or again, analysts are excited about them because remember, every time it sells off and then it bounces back up. You're in the money on the snap puts. There you go. Co 3M raises quarterly dividend by 0.7. Hey, man, we'll take it. We'll take it. Let's see. Where is Snap? Cost basis. Why doesn't it says what? It doesn't show me unless I log in the TD, but we're still up 6% on the small account, and then around like $13 or $14 on the big account after the covered calls. Ford, yeah, Ford is dropping mad dividends. Snap is again, we might get in the money on those now. If you went earlier, you got it. 3M's going up on that dividend raise news a little bit. I think 3M already it's a slight increase. Tesla. No, why am I thinking Tesla? Ford. Snap 1277. All right, we might have one there on the Snappy. He might come out there, but that's once again. We'll see what homeboys say during the conference call. I mean, I like Snap around like 9. Remember, they're up 70% on the year. So this earnings, now they're down 25% on that. Elf going green. Yeah, they are actually. Elf is back. That's recovered for. Guild is still down. I'm surprised, though. The guilds were close to that. Snap just keeps dumping. Where's Chipotle? Ford killed it. Chipotle's going up there. Remember, they're pricing in 7. And then I don't know where the last ones are. EW, and then who else were we thinking? Guild? Oh, where's Fortinet? That one's doing good there, too. That one's still up. Wasn't there one more? Snap better not bounce. It has on any of these last earnings, but last time when it dumped, it started to like get traction a little quicker. But again, I mean, dude, Snapchat hasn't had an earnings that got anybody excited in like 2 years. So again, even Pinterest is going up, all these other names. I mean, again, this was kind of their moment to do very, very good. EW, did they come out? I think we're waiting on Snap 12. We might hit on that put now. So that one cheap put, maybe we'll get a nice one. Edwards, Life Science. I don't think Edwards came out. Oh, no. Edwards came out 315. So Edwards Life Sciences is out. It's not moving. They see full year sales 6.3 to 6.8. Sees adjusted 62 to 66. I don't know how that compares. That snap put is about to hit. We're about to get in the money on it now. So again, I mean, that one was cheap too. We spent what, like $10? And we didn't grab the call, so we saved money. But yeah, you spent $10 on it. That's not, it should go up. It might go up to 50 cents. Or again, whatever you get dollar for dollar on any of that. Prudential, I think that's it. Again, a lot of headlines from Ford. What's it worth now? No, it's in the, if it goes in the money, you might make $1. So pretty much, I mean, what? If it goes to $11, you'll make $50 guaranteed. You'll probably make 1,000%, $10 into 100, and then if it goes down to $10.50, you'll make 1,000%. But it's not that much money. It just depends how many you bought. But if you bought 10 of them, if you bought for 10 cents, right? If it goes in the money, you make dollar for dollar. If you went with the 13 strike, you're going to be up $250 by now. The expected was 1150. So I have an 1150 strike, which we're getting again, and this is a 2 standard deviation move. Snap will improve, maybe, but I don't know, man. I'm very much. I think they make a lot of money, which I like, but how they spend money, and then again, Evan Spiegel, and just kind of how they've managed it lately, it's still like it's very, very choppy. Well, Fortinet is looking good, and Snapchat are looking good after this. And then Guild is right on the cusp of going in the money. So we have to see where everything opens up, but maybe we'll get lucky or unlucky by the open. But you're in the game for sure. You're in the game for sure. Snap no more. No, I like our average in Snapchat is great. I'm not really against Snap, and we can make money holding it. I like when it goes up and adds the growth, but they just haven't, they have not done their job as like a killer growth company in the last like 2.5, 3 years. I was waiting. I thought they were going to have a little bit better of an earnings. I thought, again, with everything going on, this was their chance, but nope. So now I don't get covered calls on them. Sad day. I could have, though. I could have got a lot. Literally, they were just trading at 18 right before that. Long-term pickup was Pfizer. We grabbed some for Colt Sister yesterday, and then I bought a little higher, shooting ahead of the gun just to get the dividend. I know Lumen did. I think I saw some of their earnings come in. Smaller biotech company, I think. But their earnings sounded good. But I don't really play these dollar ones off of earnings. Who's the other one? Guild. Is Guild coming? EW starting to react. We have a play on that one, but the range is really, really wide on that. Who was the other one? Elf. Elf found a way to came back up. Chipotle, they broke out. Still below what was priced in. Ford killed it. But Ford, you're still below the 13s. Those were the strike prices. Like I said, even no matter what strategy you play, those strike prices, baby, would it be worth it to give the calls lower or buy shares? I would, if you want. I'm going to sell covered calls now. The premiums are going to die. But I don't know about buying. If you wanted to buy, I'd wait till like $9? Because remember, this shit is still up a shit ton on the year. So this is still from the beginning of last year. You're still up, I think, 50%? I would just wait till it gets back to the low $8 if that happens. If you really wanted to buy more Snapchat, but I just let it do it. I don't like the double digits there. So again, they beat on EPS. They came in adjusted 8 cents. Estimate was 6. Revenue was 136. Estimate was 138. Slight miss, but analysts were higher. Adjusted EBITDA 159. Estimate was 11. So they beat on that. Daily active users beat by 3 million. 414 versus 411. And then next quarter revenue 1.1 to 1.14. Estimate was 1.1, and they see quarter one adjusted EBITDA loss of 55 million to 95. Estimate was 32 million loss. That was the weird one. Disney, man, yeah, Disney's popping right now. Trying to make a $100 move after hours. What are you doing, Disney? Come on. Toyota already reported. That one was almost 1,000%er today. So how did you not notice that all day today? What's the other one? Not Snap. Who's the other one today? Fortinet. ESPN, Fox, Warner Bros. Join forces for sports streaming site. Is that why Disney's going up? There's your news. Warner, Discovery, Disney create new. So another one, though. That's huge, but then there's just going to be another, buy this for streaming. So that's why it's trying to make the 100 push. Who was? I feel like I'm missing one other company. We got Baba and Uber in the morning. And then Snap at 12:40. Roblo's in the morning. Disney coming down now off of that? No, I think that's just a glitch. No, it says 98.89. Oh, VFC, yeah. That one we missed on that one. But I feel like there's one more big mover here. Not Amgen. I think Chipotle. And then Fortinet's at least holding up good. Those contracts should go up. Spot already happened. You missed out at Spotify this morning. Oh, found a way to go up. That one's wild. Sonos beat. Snap gonna. I don't think Snap will tank. That's just single-handedly related to Snapchat. Again, our market's holding up pretty well. Bro, Elf is ripping now. My goodness. Yeah, Fox, Warner Bros., Discovery create new sports streaming venture. Amgen didn't really move. Disney's going down off of that now. So you had to move towards 100 and then sell off a bunch more forward headline. Amgen didn't move at all. Yeah, Disney got a big cheek lay off of that. Elf is going up. End phase, that was the other one. Is that still holding up? Yeah, 7%. They're doing decent. Yeah, Disney dropping off of that. Guild needs to move a little bit more. We might get lucky on Guild. Streaming service will be available to ESPN Plus, Hulu, and Max subscribers, and each company will own 1/3 of the product. Honestly, it kind of sounds like a shit deal. Why would they partner up ESPN Plus, Hulu? I guess who's the only person? Fox? Do they own Fox? Amgen is not moving. They just chilling. I think Disney owns 2/3, or Hulu owns a little bit. Disney owns Fox, so it's all owned by Disney. So Disney owns Fox. That's kind of ironic. Disney owns a majority of Hulu. Disney owns the what? Disney's down $1 off that. They were just at $99.99 and then just sold off heavy, and then Elf just went back to the high. Snap pulled it Elf. It has before, but that earnings sucked. Again, what they said they're missed revenue. They're going to focus more on user growth, but it just doesn't seem like, dude, Snapchat is just fumbling and then everybody even buys it up there too, which is crazy. Disney's down on this new streaming app. Dog, Disney. 97 now, bro. We were just in the 99s. We were filling the gap. Oh, man. Oh, man. EW finally moving. Yeah, they're coming. Not as much, though. Enphase taking off right now. Elf, best stock for AI makeup. Yeah, Enphase and all those are going up, and then not too bad. Not too bad. That's it. We'll see. We'll either hit on Snap. The Fortinets look good. We might get lucky on the other ones. And then now you got the Disney. Disney was doing so good. Why did they have to announce this? I don't know why they're going down on that. I thought that would have brought them above 100. We'll see what everybody says with that. But Chattadonia. That's it. That's your earnings. We'll see. We got a couple more in the morning. I'm sure we're going to wake up to stuff. We're already waking up to a lot, but that is the day. I love you all. Thank you for being here. Make sure you guys are subscribed. All the good stuff, but that's it, man. Shout out to the members, the non-members, the stream alerts. I love all of you. Thank you for your time today and showing love to all the Chads. I hope you learned something. Hope you got exposed to a lot. Shout out to the long-term, baby. And I got one more. I'll give you one more. Hit him with us. Hit him with us. Before we go. So letter to the people in phases running up. Disney is on the fall. I'm falling out like it's Paul. I'm falling up. Baby, I love y'all. Thank you, baby. Thank you, baby. Hope you have a good day. Wake up and drive, baby. Let's go. More room for positivity at the end of the day. Finish your day off strong, Chattadonia.
All that matters is the weather when weather to bet the farm. I ain't gotta see it to believe it. If it's signing, then it's deeded. And my eyes don't need a reason. I won't even try to explain it unless it say I got a feeling. I'm gonna sing my praise like David, but the king is still a killer. Listen up and go and get the tropes. Hope you know you ain't scared of them, they scared of you. And I know you might be scared to take that point of view. You see them arrows in my back? Yup, son, that's gonna happen too. But the harvest on the way, you gon' barter every day. That means you have to make a trade, either life or it's the grave. The result will not remain, every day will bring a change. Kinda funny and it's strange how the hope will pave the way. You hearing what I say? The only difference between you and them comes down to faith. There's a difference in the man who believes in a better day. Cause once you believe it's past, you willing to wilt away. We was never willing to be the same. We want it all in the long run, they want it all today. My father is really awesome, don't bother with giving snakes. Regardless, I can't control it, so either way, giving thanks. Yep, you could take that one to the bank. A leader without a rank, a speaker without a face, a people without a race. They eating without a taste, they scheming without a safe. The meanings have been replaced. Another time, another place, we could talk about it. Keep some oil in them lamps, don't get caught with that. Want them once, want them twice, they never talk about it. If you never get a second chance, then that ain't meant to happen. What I understand is you ain't trying to understand. Take 100 grand, then 100 undergrads. Pay them all to make a plan, but they couldn't comprehend what it means to never die, but somehow still be born again. It's a letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. It's a cow.
Oh, baby. Hey, man. So, Chattadonia, that is the day, man. Go read the books. Richest Man of Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. And don't forget why we're here, why we keep going, why that faith, hope, and love ain't ever going out of style, and why you got to watch out for making anger a habit so it don't keep happening easier, easily. Why, baby? Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. Oh. So, Chattadonia, I love you. I hope you enjoyed today. I hope you're ready for we still got so much more in the morning. Even Baba's still going. There's a lot we got to deal with. We'll see where this snap puts are, where the Fortinets are, and anything else in between. More Fed speakers, I think a little bit more data, but then we'll see where it takes us. And then we ride from there, baby. But enjoy your evening. Wake up and drive tomorrow and give it a little bit more for ending the day. All right, man, I love you all. Pray for me. I'm praying for all y'all too, man. Don't forget about any of that. But I love you, Chad. Have a wonderful evening, and peace out. Yeah, wait about me. Hey, come on. Hey, come on. What you got, bro? Look at Disney. I'll give you a Joe Biden plush. It's included with T-Mobile and Netflix. And if you buy your ESPN, I can play sports. I can ride a bicycle. I'll show you how to ride a bike. It's not hyperbole. I mean it. Seriously. I know how to ride. Come on, even Harley Davidson, blah, blah, blah. You know, I do good at that. Anyways, have a good day. Exactly. Now, Joshua, how does one company partner up if it's owned by the same people? Is it ironic that Disney owns ESPN, Hulu, and the Fox News? So you mean to tell me the Fox News, which is for Republicans, is owned by Disney? This makes no damn sense. Can you clarify that for me? Exactly. So you mean to tell me all of the division is owned by it's the same people? So they talk smack about, doesn't Disney and child trafficking and some shit like that? And now you want to tell me Fox owns them? It's owned by Fox? I reclaim my time. Have a wonderful evening. Goodbye. Goodbye. Makes no damn sense. Peter Pan works for Peter Pan. Peter Pan is owned by Peter Pan. How does that make any... Have a good evening. Goodbye.